Check 1, 2. You fucking right. Print my puts, baby. We're gonna be rich. Poke the jukebox. We're so fucking rich, bro. We are so fucking rich this morning. We asked yesterday, do you have your fucking puts on for this morning? I got the chart up. Oh my God, remember yesterday, dudes? Oh, dudes, I'm so fucking stoked right now. Dude, I bought puts at like the top on Monday. I added more yesterday for this morning. I got fucking 96s right now that are fucking I got 96s right now. We're trading 598.89 right now. Let's see if we can get a rejection and bloodbath down some more. I'm so stoked right now. I fucking thought these were gonna burn. And they fucking whipsawed me yesterday too, man. They fucking whipsawed me all fucking day long. Oh my God. Oh my fucking God. So, all right. So here's the deal. It's like yesterday early, we're talking in the Discord and we're like, does everybody have their fucking puts on? And people were like, fuck yeah, man, I got my puts on. And I was like, if you don't have them on, I drew a yellow box and I was like, put some more on. And the people had them on for like 3 days. I had mine on for today. Mine fucking died today. But I'm like, just keep adding at the top up there. We'll fucking hold them through, like just cheap hedge. And then we get fucking whipsawed into the close yesterday. And at like 2 PM, I start like giving you like a preliminary expectation for today. And I'm all fucking bulled up. I'm gonna lose my sponsors. Sorry, not sponsors, but ads for today from Google. They were like, you can't swear in the first 15 minutes. I don't care. So I'm like charting out the chart yesterday with everyone watching, and I'm like, this is too. I'm like, I gotta scale out a little bit and take a look at this fucking thing, and I'm like, hold on, let me show you. I haven't changed it. I haven't fucking moved it. It's the same as yesterday. So I fucking so yesterday. Oh, wait a minute, I'm in the wrong one. So then yesterday, I'm like, so I'm charting this whole thing out. I'm like, yeah, we should do all this right here, up here and whatever. And then I'm like, and then I drew this fucking thing in, and I'm like, who the fuck am I kidding? I'm like, we're leaving behind this whole fucking thing over here. We're leaving behind like this fucking, we're leaving like, hold on a second here. We go back to a 1 hour basis because we did this on a 1 hour. And I'm like, you can't leave this shit here and this shit here and not get that. There's no fucking way we're not going to do that. So there's no fucking way. So we drew in this trade over here, and I was like, I'm pretty bulled up to go up here, to continue up here, but they got to nail this downside first, get that higher low to just let us fucking run. So that's where we are this morning. I don't think it mattered. I was thinking about this morning. I'm like, I don't think it fucking matters if the CPI is hot, cold. I don't care if it's the Senate. They're going to find a reason to send this shit down here. It's bizarre because here we are. We're down here right now. And I actually kept that up here for hold on a second. We got 11 minutes left. I'm like, yeah, we could take this bad boy out right here. It's like 96. You could get a little more crazy with it. You could be, if you're a bear, you could be like, ooh, yeah, baby. Woo! Get a little bit deeper in there if you want to. if you want to get cray cray. So let's look at a couple things. Let's look at before we open this market. Let's see where we are in pre-market here. Let's calm down a little bit. I'm freaking the fuck out right now. This is a giant fucking downside move. It's gonna print heavy. So let's like we gotta be quick about this, I guess, because I'm paranoid right now. I got 10 minutes. I was like on Twitter writing a fucking apology because I had a delete tweet running and I didn't know. And I had a bunch of people going like, you delete your tweets because you don't want people seeing the outcomes. And I'm like, go fuck yourself. I don't do that shit. And sure enough, I was doing it. Still out here. We're sitting on S4 and S5. Now, this is where I've got us going right here. I've got us going to right here, which is a little bit lower than this. And there's a reason for that. Hold on a second. Let's go back to where we'll drop 2. So I got us going like right here. But we'll draw a second one in for the real fucking bears out there that are going bananas right now. Because you know what they want, right? You guys know what they want? Let me tell you what they want. These fucking guys, they want like December 18th. They want the capitulation by the bulls. They want to blast this shit down right through here, and they want to rain fucking hell in one day. Let me show you how bad December 18th was. Now, I'm not that bearish here. I think we buy the dip and go higher to escape. But I got to show you one day here, okay? I got to show you this one day. This was a Friday, and they fucking teed off. Was this? No, wrong one. Hold on here. Let me show this. Let me show you how ugly this was. Right here. This is the one that they want today. And it's the same setup. It's the exact same setup. We're going to break out and away, right? Little dip, and we're out of here, right? Ooh, bye-bye. And instead what they did on a Wednesday, this is on a Wednesday on the 18th, they fucking just teed off on us. Woo, straight down to the depths of hell to the end of the day. Let me tell you how bad that was that day. Just give me a second here. Let me just show you how bad this fucking day was. I don't know that we're going to do this, but this was 3.72% move. So let's just, for shits, we got a few more minutes here. So for shits and giggles, okay? Let's just see here. Let's go over here a little bit. It was 3.72%, right? If we got that same kind of a move. Just gonna make the bears all fucking lubed up for the day. That'll fucking tee that shit off right there. 3.72 is right down here. Right down there. Right there. Right fucking there. So, oh man, dude, if we did that in one fucking day, if we did this shit right here and just rained hell into fucking, I'll be I think, I don't know if we'll be a millionaire, but I'll be very rich if we did that again. I think I'm gonna sell. Let me know in the chat what you guys are gonna do. But we, like in the Discord, we've been adding puts like here for this week. Coming into this week for this fucking Senate thing. And yesterday we were like, yeah, we're not getting out of this without at least one more bump to get out of here. It's 9:42 right now. I can't fucking believe it. Let's take a look at this real quick. Let's go over here. I can't fucking believe it. I literally can't fucking believe it. Let me know in the chat if you think we keep blooding. Do we go any lower? Do we come up here and like reject, like pop on the open and then just start fucking raining hell down here? I'm going to see what they're worth. I'm going to see what they're worth here in the open. And here's the daily trigger right here. It's like fucking, it's beautiful, isn't it? Can't fucking believe we're down here. Oh, fuck. And we still have the Senate today, too, so... Oh, did I put the thumbnail up for Jerome Powell on that? I hope I did. I don't know if I did or didn't. Let me check and see. Did I put the fucking hold on here? Let me just check and see if I put the thumbnail. Oh yeah, I got the fucking red graphics up this morning. We're gonna do it live. Sam, get out the fucking Markets and turmoil graphics this morning. Oh man, so good. Dude, like when you're like trading, making money, and you slam a hedge on, and that fucker prints, it is fucking banging. Like if you're like day trading up, down, and you got a hedge on, and all of a sudden you just get that fucking drop, it's like, woo! Fucking, sorry. The Kramer rant incoming. So fucking awesome. I'm so fucking happy right now. Hold on. All right, hold on. What do we got? We got 5 minutes here. If you want to know what I think, let's take a quick peek. We got 4 minutes left. Oh, we're not done going down. Do not buy, or I guess I shouldn't say do not. This isn't an enticement here. I would think that we're going to maybe trade this and then continue down, okay? And I think we at least take out like 95 right here, 95.56 and maybe even 94.11. I think that's what it is. Now I will tell you this. The Bloomberg terminal DMs this morning. They didn't say when, but they said this is a good time to buy Mag 7 calls. And if you were watching Tesla this morning, I was at 4 a.m. I was awake. If you were watching Tesla closely this morning, it fucking slammed down and did a V-shaped recovery at like 4:01 a.m. It like just slammed straight down and boom, auto buy. So if you wanted to get long in Tesla either yesterday or this morning, there's possibly more lows coming, but I'll say this. Regardless of all the doom and gloom on Tesla, if you do like a DCA down there from now into like maybe a worst case late April for like a print in summer or winter or December, I think that's a fine pick. I wouldn't be buying it all, but like 10% of your full buy, 15%, 25% of your full buy. I'd say like 25% of your full buy. Then I'd look for another buy lower. And a final buy at like 181, 182, maybe 190. And if you can get into that shit for like, I'm saying you put the trade on now at 320 in case it leaves you behind. But if we get like some doom and gloom and you can go in there and scoop up a little bit more, if we start to leave behind, you can just start buying for a slightly higher DCA. If it's like a bumpy fucking road, which Tesla and bottoms like this can be bumpy. It begins to trade sideways and messy. You just like scoop it up, sell a bunch of fucking puts down below 190, and I think it's a great like, especially once it starts to ramp, you can just start fucking selling puts until it hits big money. Like it should trade like I got it going to like I think 800 or something insane like that. So you can make some serious fucking money in that trade. Now, do I think it goes to 180? Possible. He's got a lot of shit around him right now. I'll be honest with you. I can't account for that. There are things that are bad for stocks. One is fraud, legal or illegal or legal. Even legal fraud is bad. And Wall Street fucking hates CEOs that are doing the shit that he's doing. We're not going to cut the mustard. We're not going to split hairs here, Tesla gang. This shit's a no-go. He needs to fucking stop. And the shit yesterday, like him or hate him, that him as a CEO of a company sitting in the White House behind the Resolute desk is fucked up. I'm sorry. It really is. Or especially what he was saying. I guess if he was standing behind the Resolute desk and he's like pumping on America, that's fine. But when you're doing like, when you're fucking with people's money, right, you're going to piss people off. I don't give a fuck who it is. So that is looming in the background. That does loom for him in the background. That's a legitimate concern. The only thing that I can't see is that. No, that's the only thing that I don't know if that's going to take it down to the 181 or whatever. All right, hold on a second. Oh yeah, print it, baby. Print it. What's going on here? The fuck is going on? Oh, I don't know what's going on here. Oh, yeah, baby, I made money. Woo! Woo! 250 fucking percent. Yes! Yes! Fuck yeah! All right, that's it, baby. Show's over. I just made 250 fucking percent. Oh man. Woo! God damn. Yes. Oh God, that felt so good. Oh yeah, I don't know if I should have left it on. I'm out. I'm flat. I'm fucking flat. Yep, I'm flat. I don't care if it goes down anymore. Don't fucking care if it goes down. Fuck yeah, dudes. Fucking A, man. Dude, I'm so fucking stoked. Oh, God. Yes. Yeah, dude, so like, if you're just joining us, okay? If you're just, I gotta tell the fucking story one more time. This is so mind-blowing. So, this is how it started. We're like, put a hedge on the market, trade the market, put a hedge on it on a high. Every high, put a hedge on, right? And so, like, yesterday morning, I'm talking to the Discord in the market chat, and I'm like, does anybody have a fucking hedge on? Anybody got puts? And there's like 10 people are like, fuck yeah, I do. And then I was like, well, I'm going to put a yellow bar on top of the screen. And I'm like, whenever we go up there, you just add some puts. The yellow bar right there. And so people were just adding puts. And then we did the range trade all day long. And I was talking to like Addy, and I'm like, my fucking puts are like making money. Then they're like losing a little bit of money, making money, then losing a little bit more money. And we traded the inside of this range, right, with like 0 dates. And these were like mine were 2 day, and a bunch of people had 3 day. And I'm like, I'm gonna chart out tomorrow. It was like 1 or 2 in the afternoon yesterday, and I'm looking at everything with you guys, and I'm like, yeah, this is all going up. It's all gonna be great. And then I like scaled out, and I'm looking at the market like a little bit more, like standing back, and I'm like, I still don't like that fucking down move didn't come today. And so on the show, I'm like, I'm going to draw that fucking down move in with you guys. I'm like, I'm just not comfortable not hitting that fucking thing before we get out of here. And so I left my fucking puts on. We drew it out and we hit it. We fucking hit it. I'm so stoked. Oh, I'm so happy. You're like winning you're winning like intraday trades and shit, but then you got the hedge on. You know, and then you're doing the inside trading is easy. It's like buy calls, sell them, buy puts, sell them. And meanwhile, you got this whole other fucking trade going on. It's like I'm like, it ain't gonna fucking print. It just print 250 fucking % like that. I'm so stoked. I'm so stoked right now. So fucking stoked. I closed it too. I'm like, I'm done. I'm out. Took my money and ran. Actually, I fucked it up. I tried to close it and it wouldn't close. So I was like, trying to like close the close the ask out and it hit anyways. So whatever, it's good. I'll take that ticket. Okay, so where do we go from here? What the fuck are we gonna do from here? Let's think about this. We got FOMC chair today. Let's talk about a few things. We got the steel tariffs, and we've got the we got steel tariffs and aluminum tariffs. Those went into effect, I think, yesterday. Tariffs, mark my words, like burn it in stone somewhere. That is all tariffs are a one-time pricing. Please don't listen to people. You can simplify this under 140 characters. Tariffs can initially be inflative to the market. Initially, there can be greedflation, people that don't actually get affected by tariffs, and corporations will initially try to pass those costs on to you, but they are so efficient that they can't. So it's actually disinflationary. I know you're like, there's no way, Cap. Not disinflationary. It'll bounce and then come straight back down. Okay? The truth of the matter is, let's gather around here if you're young. I'm serious. I am so freaked out. I am the old man. I never thought I would be the old man. And I am. And I have to tell you something. If you're old, you know this. Back in the day, tariffs or pro-tariff was pro-Democrat. I am blown away that Democrats today are anti-tariff. And somehow along the way, there's been a fire hose of bullshit to everybody. Republican, MAGA, Democrat, Antifa, whatever the fuck you are, I don't care. And you got the noise. And I'm like, these people, I'm seeing people like I'm seeing like a conservative screaming for something that he shouldn't be. That's not a conservative talking point. And it's like populism and it's this and it's that. So I got to let you know something. Tariffs are anti-corporation. So if you're parroting anti-tariff noise, that means that a corporation has been fucking astroturfing your ass. And the truth is that it ultimately fucking removes profit from corporations. So when you're out there fucking blabbing your mouth, going, I can't stand corporations, I hate Apple, and I hate this and that, and then out of your other mouth, you're anti-tariff, I'm like, these fucking people are being brainwashed. And that is the truth. It does not get passed on to the consumer. That is a bullshit lie. That is a fucking talking point from a business owner. You're out of your mind. They tell you this because they fucking eat those things. They're too efficient these days. There's no room to pass it along to you. There's an initial attempt to make you pay it, but you're going to refuse. I already know this. It's historic. It happens all the time. So, it's fascinating, though, to know that you don't know this. So, the stock market knows it and Wall Street knows it. And what they'll do is they will one-time price in those tariffs. So we have that looming in the background. We have Jerome coming up here in the next 20 minutes. We have one more day of volatility with Jerome. I want you to be like aware of these things, right? That at some point they're going to price in these tariffs. I don't know if it's today. I don't know if they save it for next week when Rubner gets all bared up. I don't know if they save it for April. But I'm going to tell you right now, when you're least expecting it, they're going to fucking price that shit in. They're going to tell you. It'll be all over the news after the fact and say to you, we had to price in tariffs. Sorry, we sold. And that's what happens. So You can be mad at Trump. You can be mad at Biden. You can be mad at the Democrats. You can be mad at who the fuck you want. I don't care. But when it comes to the impacts on the stock market, you have to know exactly what the real truth is and the real true impact of these things in truth, because you'll get blindsided if you don't. You understand what I'm saying? You can have your Main Street hat on, talk to all the shit you want elsewhere, but my mind is always blown with the truth and how it relates to the markets and what the parrot noise is out there. And this is newspapers. Newspapers are owned by billionaires. They're going to run that same shit against you. So anyways, tariffs matter, and it's not to you, the consumer, it's to corporations. And it'll fuck with our GDP, and it will fuck with corporate profits. Not a ton. They can actually do, there's actually math to figure out how much. I think I saw the math the other day. It was like GDP like 0.1 or 0.3 or something like that for, I think, all the proposed tariffs. There's even crazy information out there about tariffs. I see people fucking regurgitating shit like, if you put a 25% tariff on steel, that means, or like my bicycle from Walmart's going to cost me 25% more. And I'm like, no, it isn't. That's not true either. Like 25-50% tariffs has a much smaller impact on the end price that you pay. And especially stuff with lots of components. Now, there are some blanket tariffs like, hey, you're going to bring in TMU, we're going to hit you for that finished product. That's a different kind of tariff. But the commodities that build things, you don't see that unless it's greedflation. Someone's like, yeah, bro, like that tariff costs that product right there that costs $10. It now costs $10.25. But the dumb fucks out there, the rubes, don't know that. Let's see if we can hit them with $12.50. You get what I'm saying? And then then Wall Street goes, wham, core profits are going to go down. We're going to price that in. So they hit the stock market, right? Guess what happens? GDP drops slightly, right? And then it goes back up again because of the greedflation. I shit you not. And then at some point, you're going to be like, I ain't paying this shit. And then they drop the prices again on you. It's all greed. It's all it is. Money, 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 money. What makes the world turn. And as soon as you learn that, as soon as you learn about greed, money, and power, and I don't mean the shit you learn on TV or books, I mean Wall Street, and I mean inside of C-suite, it is a whole different world. They're fucking monsters. They're fat, greedy, old fucking white men with sweaty hands, and they want everything and all of it. And they will spin yarns to you no matter what your politics are. They'll fucking tell you one thing and the other guy another thing, and they'll have you want to fucking kill each other in the streets as long as they get to keep the money. They don't fucking care about you. And you can ask anyone that works on Wall Street, and they will tell you that's a fucking fact. They won't tell you that publicly, but they'll tell you that in private. Anyways, it's all greed, and it's who's getting your money. And there's a fight for it, too. That's a whole other side of tariffs. Like, if the consumer is rich, who's getting the money? Is it corporations? Is it your government? Is it your local government? My own local government just taxed me again. They were just like, God, these people have money. Let's hit them again with another, or not income, it was a property tax. Because they know, they have smart people that say they're rich right now. They can handle this. You know what I'm saying? Here's the data. Well, my constituency is saying they don't want to pay for eggs. That can be true, too. They don't want to pay for eggs. They hate inflation. They hate it, and they're going to scream about it. If it gets assigned to you, you're fucked. But they can pay it. You understand what I'm saying? That both can be true. That's important. So you have to assign the hot potato, right? Who the fuck are we going to assign that inflation to? Well, not me. I got to blame somebody. I can't blame myself. But we need that money, too. You understand? Anyways. So we got Jerome. We got Jerome coming up here in the next 15 minutes. We've got tariffs on board. And then we've got a window. We've got the Rubner, we got the Rubner seasonality. Remember last year we had seasonal weakness February 14th, 15th? Yeah, that didn't work out. We melted straight up into fucking March, didn't we? So that's not guaranteed either. All I know is this. We're going to look for a fucking bottom to buy, right? We're going to look for a bottom to buy. We're going to ride this fucker straight back up. We're going to let this volatility pass us, and we'll take it from there. Does that make sense? Get this vol behind us. We're going to get PPI. Now we know it's going to be bad. And CPI was hot last time, too. CPI was already hot, and it's going to be hot. It's going to be hot for a little bit. But it's not hot enough to warrant rate hikes. We'll talk about that today. I'm going to explain to you why we're in this window that's still outstanding. I'll explain it to you. It's like long end and short end and all that kind of stuff of the curve. And Jerome's right where he needs to be. He's still doing his job. Everything is fine, believe it or not. He's got room. He's got room before he has to hike, and he has room before he has to cut. He doesn't have to do a fucking thing right now. And I'll give you the actual fucking data today on that to shut up everybody on FinTwit telling you otherwise. All right? So I'm going to show it to you. I'm going to show it to you this morning. I'm going to give you the actual fucking data and the facts as to why Jerome Powell doesn't have to do a fucking thing right now. He doesn't have to cut, and he doesn't have to raise rates. And you're going to be blown away when I show it to you. He's in like the super sweet spot right now. It's amazing. Even with this knee-jerk reaction down. So, okay, give me a few minutes here. We're going to chart this shit out and tell you where we're going, where we think we're going. You guys can see I already drew this in for you this morning. Do you see it? Do you see it? So we got a little bit of an up move right here. We're squeezing right up here. If you're buying calls right now, congratulations. If you closed your puts this morning with me, congratulations, you made bank. And now let's see where we go from here. %. So we're going to watch this here. And we also have a few things. Let's look at this together before we get the show. We got 13 minutes. Let's take a peek here, okay? I'm going to make this really fast, okay? I'm going to do as fast as I possibly can with you guys before Jerome comes on. In one quick second here. And dude, I fucking love it. Fucking God. I'm so happy right now. Like, so happy right now. I'm like, really like, yes. What do we got here? Where's the, fuck's the Jerome shit from yesterday? Here we go. Senate Banking Committee. So it's just, we got live coming up here. Are we getting a live thing from him today or no? Anybody got a link to the today's hearings or no? I need a link to today's hearings if anybody's got them. For some reason, my link is not working. Senate Live, maybe? Hold on, let me just check this. Just want to make sure I don't miss this. Powell Live. Says this is live right now.
The most affordable 12-month GLP.
Hold on here. This can't be live right now. Is he already live right now? Am I missing something here? Yeah, I got him at 10 a.m. I don't know how in the fuck they got. This has to be yesterday.
Else for the giant banks who actually does what's called the bank examination, the supervision. And that is so important. Remember the Wells Fargo.
That's from yesterday. All right, we'll check this again in a few minutes. Some reason my link is gone. All right, and then one more thing here. Give me a few more minutes here, guys. We got a couple things I got to do here. Gotta close that. That's my Robinhood shit right there. Had that on a Robinhood trade. Let's take a peek here at before this 10 a.m. Let's take a peek at the trigger full screen. We're going to delete all this again today, just as a whole nother lesson, right? We're going to go to a monthly basis. We'll make this as fast as possible. Okay, 1 month. Whoop. Make this as quick as possible. That's 561, 562-ish. We're only going to focus on this one right here. Month. We're going to go to the week. There. Every day you should be doing this on all of your. Come on, come on, come on. SPX currently breaking back up into positive gamma. Just a heads up. Whipsawing back into positive gamma. Eight minutes left. There. We got a gap down here to close. Yeehaw, gappy gap. Little tiny gap right down there. Right there. Every morning you should be doing this stuff again and again every day, just so you know this market inside and out. You know, if this, then that, right? We got a little gap above too. Make that green. Gaps everywhere, baby. Another gap down there. We're going to switch over to, that's the daily basis. Go to a 4 hour. I'm going to hide that for a minute. And here's where all the action is, right here. Right there. Here's where all the action is. Here's the you shall not pass line right there. One hour. Let's see what's going on now inside here. Gap right there. There's 1 hour. Fighting our way back up to 601.99. There's a gap above at 602.58. We'll leave that right there. Close the gap. Not really big gap up there. Let's go to, let's just check this out here. Just like that. There's your daily trigger. Back up, up, up. There's your 4. Oh. There's your 4 hour. You're going to close the gap up here. Right there. Check this. You're going to fail the gap. Then you're going to close the gap. Close the gap, then fail this. Down. That down. Right there. Right there. Get there at 608. Right there. Something like that. Bull thesis still alive. We're going to go to a 15-minute basis. Right here. Peek at this. There's your 15-minute right there. Whoop. And then we're going to put some time in here. There's 1 o'clock or 10 o'clock. There is 30 there. Nail it. Gap. 1 o'clock right there. $30 right there. All right, we're good. Whew. Main screen. Nope, we're just gonna leave that right there. Something like that. Bam, bam, bam. Something just like that. Doesn't always scale well, and we don't have to go all the way back down here. Matter of fact, it would go like right about there. Take this gap out up here, fail the gap, fail the 4 hour, get sent back down, smash this. It's going to take some work. Smash, 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 smash. Now, there is a key point here. Let me go over here and show you this. There is a key point here. You see this, something I want you to pay very close attention to is I want you to look at this right here. This is your hourly half-hour trigger. This stuff's going to try to swoop down here and, wham to the downside and wham to the downside. So you're going to be risk off as we come up into, so we're already being sold. There's some places to be careful of here. You've got the 4 hour that's risk off. You've got the gap closure that's risk off. And this, and more importantly here, can get spicy. Like slam, slam, and then big bloodbath. So I think that they're going to try to sell you down one more time. I don't know if they're successful or not, but just note that they're here. They're up here. See that? See this little flag right there? They're right fucking there. They're right fucking here, and they're right fucking here. So they're like coming down right now, racing down to say, "Fuck you! You're not doing this. you're going to be party time. So if I was a bull, you got this trade so far, right? You got the nice squeeze up. What I would say to you would be, this is the danger zone. You don't want anything to do with it. Maybe if you get above this one, but I'll be honest with you, you don't want anything to do with it. You could if the half an hour and hourly trigger can get down here and you can get above it. There is a trade here. There is a fucking trade here. But you want to see that new high to be getting bulled up again. You want to see that new high, and then come over here and you're rock and roll, because there's real danger here of a rejection in here, and then going higher or even lower. So within this move here, within this move that I drew in, this one, there are other moves. So there are smaller moves within there. Like you come up here, right? They try to send you down. You come in here, and this is where they get you, right? And then you're wham back down here again before you're back up again. Does that make sense? So there's more moves, even though we're making a higher time frame. Hey, we're going here and going here. There are other moves in here. Just be aware of that. So we'll draw that in. Something like that. I think it's like that. There are smaller moves on a smaller time frame, so don't be fucking long up there. You just wait for dips to buy. All right. Oh, look, it's already trying to send it down. Doom. There's your 4-hour rejection right there. Gap is still open. Nothing's changed. This is all the same trade as yesterday. I like to look for, I come in every morning and rechart everything because there are gaps left behind. There's overnight price action. There are trends that are broken or validated or invalidated. There are times when you know exactly where you're heading, and there are times where you complete a trade and you could stretch or you get a new trade and stuff like that. So, and I always want to see where everything is. I always want to see where all the indexes are. I always want to see where Mag 7 is. I always want to see the commodities are, the metals, all that kind of stuff. And then you get like news and stuff like that. So you like, it was like yesterday. We're charted out yesterday. We're like, hey, we might get this down move this morning, right? We're positioned for that down move. We got it, right? So what needed to happen happened. We can move higher now. Does that make sense? So we couldn't move higher yesterday without this down move. Now we can move higher. They can't, can they? They try. They have a little bit more room down here. They can still get 96 and 95. We could trade we could bloodbath this down like here and then swoop up higher. Then do this one down. Like there's more room down here. We can get a new low this morning. I'm not anti that. Get that new low down there going. It's still in trend. That's the problem. Like if you know the trend, so if you know where the market is on like a monthly basis, a weekly basis, a daily basis, an hour basis, 15-minute basis, 1-minute basis, and then if let's say you're trading a 30-second chart. If you know all of those, where we're going on these multi-time frames, then this doesn't matter to you. It doesn't matter if we do this. It doesn't matter if we do this. It doesn't matter if we do this. It doesn't matter if we even squeeze up. We know it's coming back down to go over here, right? Depending on the time frame you're trading on. So you always want to have that awareness of, or at least scale out from whatever you're trading. If you're trading like a 30-second chart, you've got to scale out at some point and go, am I going down the fucking rabbit hole? Do I have like a, what do they call that? They used to have it, they used to talk about when I was in the Army. if you ever go into combat, right, you'll see everybody's eyes get really fucked up. Your eyes like explode and your pupils go. So everybody's staring at each other and you look like you're geeked out on drugs. And I forget what they call it. Tunnel vision. So you get like tunnel vision in the Army and it's really fucking weird. And we get tunnel vision trading, right? Can't say you don't get tunnel vision trading. You're just like on this, you're like sitting there trading and you're like, there's like a cliff. And it's like you. And I don't know, this is you and this is Price. And you're just like sorting it up. You're just like, die, we're going up there. And you don't know the fucking cliff is right there. You know what I mean? You're not even paying attention. And here goes you. Ah! Right? I don't know if that's a good analogy, but always be aware of higher frames or lower frames, depending upon what time frame you're trading. Yeah, it's tunnel vision, man. Getting tunnel vision. Tunnel vision's fucked up. I mean, there could be you could have somebody with like a fucking horn next to you and you're not even going to hear it. Just like, I'm fucking focused on that right there. That fucking thing only. Well, don't touch me, man. I'm looking at that fucking thing right there. Oh, yeah, okay. I'm sorry. Powell's coming on right now. Here we go. Powell. Thank you.
Federal Reserve fighting the last war, staying too low for too long. Chairman Powell, you and I have discussed that previous hearings of the Fed, like many others, assumed that the pre-pandemic era of low inflation and low
I'll have the video up here in just a moment.
continued. This belief was one of the reasons the Fed changed its monetary policy framework in August 2020.
Damn it.
Only 7 months before inflation began its 4-decade steep march upward in March of 2021. In hindsight, the adoption of the so-called flexible average inflation targeting appears ill-timed.
Go, what are we doing here?
For a post-pandemic world. As the Fed undertakes a review of its monetary policy framework, you must account for the lessons of the last 4 years and think about what's ahead over the horizon, not what has been. The Fed has made progress on inflation, but as the last mile seems the hardest. As Bank of America economist Stephen Juneau said yesterday, inflation is stuck above target with risks to the upside.
That's fake.
August 2022 with
That's fake, and you don't want target either. You want soft landing. This is bullshit.
Predecessors as chair, you vowed to keep at it till we're confident the job is done.
Yes.
The vow you should fulfill.
No.
With this morning's confirmation that inflation is well above
Nope.
the 2% target at 3% and making move upwards, other economic indicators are positive. As you reported yesterday, a low inflation rate, solid GDP growth, and financial conditions continue to support expansion and investment. This is not a time to say that there are no risks,
Oatmeal. Ugh.
but some perhaps unseen. However, these
This is all bullshit, by the way.
of a resurgence of inflation present are modest. Given the already high prices due to President Biden's inflation, Americans cannot
Blame inflation on somebody else.
at the grocery store and gas pump. Such a resurgence
Say there's inflation to acknowledge your base,
tightening
and
cycle
then blame somebody for it. This is all good politicking.
unattainable for many. That's why I urge the Fed to forge ahead with its monetary policy duties until you're confident the mission is complete and price stability has been restored. The fact is, over the past decade, we've witnessed too many distracting additional mandates, diluting the Fed's core mission of price stability. This is the reason we formed the Task Force on Monetary Policy, Treasury Market Resilience, and Economic Prosperity that will be led by Chair Frank Lucas. The task force purpose is to ensure that the monetary policy actions of the Fed are put under a magnifying glass and prioritized for this committee.
This is all bullshit, by the way.
First hearing of the task force. I now want to turn to some of the other Fed responsibilities: bank regulation and supervision. The Fed was created by Congress to be an independent agency. The intent is to insulate the Federal Reserve's monetary policy from political influence. Unfortunately, in the last 2.5 years of the Biden administration, the Fed took on serious liberties with its independence in the areas of supervision. In law, Federal Vice Chair for Supervision is to develop policy recommendations
This guy's good.
brought to the Board of Governors for consideration. In my estimation, over the years, you and the board have been too deferential to the statutory vice chairman for supervision. Vice Chair Barr turned the Basel III endgame rulemaking into a partisan attempt to propose a massive hike on capital on American banks, making them less competitive. The Fed has a chance right now to get back on the right track and preserve its independence for the long-term benefit of the American people.
Or we're going to assert our power.
Chair recognizes Mr. Lucas, the Chair of the Monetary Policy, Treasury Market Resilience, and Economic Prosperity Task Force for 1 minute.
Thank you, Mr. Chairman. While there are differences of approach in this room, a bipartisan guiding principle is that maximizing economic growth is the path to economic prosperity. It is the single greatest factor in delivering opportunity and improving the quality of life for the folks back home. The actions of the Federal Reserve and the machinery of monetary policy play an important role in economic stability. With the 5-year review of the monetary policy framework underway, I hope this will be an opportunity to evaluate the effectiveness of the Fed's toolkit and its vast influence on the lives of every American. The creation of the new monetary policy, Treasury Market Resilience, and Economic Prosperity Task Force will afford us the opportunity to dive deeper into this topic. Chairman Powell, thank you for being here. There are real issues that deserve our attention, and I hope today will be productive. I look forward to hearing your testimony on the state of the economy, where we're at, and where we're headed. Yield back, Mr. Chairman.
Gentleman yields back. The chair recognizes Mr. Vargas, the ranking member of the Monetary Policy, Treasury Market Resilience, and Economic Prosperity Task Force for 1 minute.
Thank you very much, Mr. Chairman, and thank you, Ranking Member. And thank you, Chairman Powell, both for your years of public service and for appearing before our committee today. As a ranking member of the newly formed Monetary Policy, Treasury Market Resilience, and Economic Prosperity Task Force, I look forward to working with Chairman Lucas and the rest of my colleagues to address these important issues. The research is clear. Independent central banks perform better in carrying out their mandates than politically motivated central banks. The independence of the Federal Reserve is crucial to achievement of this dual mandate goals to maintain both maximum employment and stable prices. And although this dual mandate has been criticized by some, it continues to serve Americans well. It has not prevented the Fed from making substantial progress on driving down inflation, all the while avoiding a recession, which many saw as inevitable. I look forward to your testimony, Chairman Powell, and I yield back.
Gentleman yields back. I'd like to turn to the gentleman from Michigan and yield to him for a point of personal privilege. Mr. Heisinger.
Thank you, Chairman Hill. And as we all know, all good things must come to an end. And I want to take a minute to recognize someone who is leaving the committee, but has been an integral part of the oversight work Republicans have done over the last 5 years. Although Nicole Vo is all of 29 years old, something that we tease her about on a fairly regular basis, I quickly realized that despite her physical stature, she was a force to be reckoned with. Her dedication to my team, this committee, her colleagues, and this institution are something that we all should aspire to achieve. And Nicole has effectively served in various roles, from a professional staff member right out of law school to now Deputy General Counsel in this particular Congress. And her time with the committee, Nicole has worked on or led investigations into Sam Bankman-Fried, the bank collapses of 2023, terrorist financing, culture and corruption at the FDIC, and the SEC's climate disclosure rule, just to name a few. And I've sat through her questioning, and it's fierce and tenacious and directed. Myself, my team, and frankly, the whole Financial Services Committee team can't thank Nicole enough for her work and what she has done on behalf of this organization. And like all good staffers, she has become a confidant, a sounding board, has the ability to say no in a very nice way, but in a very tough way as well. And although Nicole will be leaving the committee, her contributions will not be forgotten and are deeply cherished. So thank you, Nicole. We deeply appreciate all of your work, and I yield back.
Mr. Chairman, we welcome your testimony. Chairman Powell, you'll be recognized for 5 minutes to give an oral presentation of your testimony. Without objection, your written statement will be made part of the record. You're now recognized for 5 minutes.
Chairman Hill, Ranking Member Waters, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on achieving our dual mandate goals of maximum employment and price stability for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. We are attentive to the risks on both sides of our mandate. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose 2.5% in 2000.
Mr. Chairman, can we ask you to pull your mic a little closer, please? Thank you so much.
Sure. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose 2.5% in 2024, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have declined in the fourth quarter, but was solid for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid and appear to have stabilized. Payroll job gains averaged 189,000 per month over the past 4 months. Following earlier increases, the unemployment rate has been steady since the middle of last year and, at 4% in January, remains low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a wide set of indicators
This one's already been taken out, this number 4 right here.
broadly in balance.
This one's already, the 4-hour right here has been taken out, so we can get rid of that. That's gone.
Strong labor market conditions in recent years have helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased
They
significantly,
still haven't taken out this 4-hour one, though.
somewhat elevated relative to our
And they still haven't taken out this gap.
total PCE prices rose 2.6% over the 12 months ending in December, and excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. Since last September, the FOMC lowered the policy rate by a full percentage point from its peak, after having maintained the target range for the federal funds rate at 5.25% to 5.5% for 14 months.
Let's see if they sell it down right here.
Stance was appropriate in light of progress on inflation and the cooling in the labor market. Meanwhile, we've continued to reduce our securities holdings.
This is a gap right here.
With our
Let's
policy
make that gray.
significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity.
Just a note here, this is the danger zone in the markets, just so you can see it. There's a lot of volatility right in here.
For the federal funds rate, the FOMC will assess incoming data, the evolving outlook.
Vol danger. Where all the bears are.
As the economy evolves, we will adjust our policy stance in a manner that best promotes
It's also the gamma flip that we're coming into right now.
stability goals.
It might have moved. Hold on, let me check.
Strong and inflation does not continue to move sustainably toward 2%.
There's the gamma. Here's gamma right here. Give me a second, guys. I'll get the gamma going for you.
If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we can ease policy accordingly. We are attentive to the risks to both sides of our dual mandate, and policy is well positioned to deal with the risks and uncertainties that we face.
We're going to talk about the true
Conducting our
information on inflation this morning.
monetary policy
point.
strategy, tools, and communications, the framework used to pursue our congressionally assigned goals. The focus of this review is on the FOMC's Statement on Longer Run Goals and Monetary Policy Strategy, which articulates the committee's approach to monetary policy and on the committee's policy communications tools.
Nope, not
Committee's
that one.
2% longer-run inflation goal will be retained and will not be a focus of the review. Our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research
Gamma Flip's still higher. It's actually higher this morning.
lessons of the last 5 years and adapt our approach where appropriate to best serve the American people to whom we are accountable.
It is.
To wrap up the review by late summer. Let me conclude by emphasizing that at the Fed, we'll do everything we can to achieve the dual mandate goals Congress set for monetary policy. We remain committed to supporting maximum
4 p.m. on Monday.
inflation sustainably to our 2% goal and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you, and I look forward to our questions.
Thank you, Mr. Chairman. The Chairman yields back. I want to recognize the ranking member of the full committee, Mrs. Waters from California, for a 4-minute opening statement.
Good morning, everyone.
Uh-oh.
Welcome, Chair Powell, to our
Oh, shit, we're in trouble.
on the precipice of a
Maxine Waters is here.
unlike anything we've seen in
She actually knows what the fuck she's talking about.
lower prices for working class families. We're seeing the exact opposite. In fact, grocery prices are rising. According to the Labor Department, eggs are up 40%, more expensive than they have.
That's not inflation.
In my home state of California, we've
It's
seen
fucking bird flu.
$9 and more.
What are you going to do about that?
Inflation is rising, and it is up to 3% for the first time since June. And other,
Fucking bird flu. They're killing the flocks. What are you going to do? What
as
the fuck
Trump
you supposed to do? Like, there's nothing you can do with that.
on steel and aluminum.
Gamma Flip is up here, just so you know.
Consumers and businesses are facing uncertainty and chaos. This is all because Trump and his unelected billionaire
What?
President Elon Musk are taking a sledgehammer to our economy and democracy.
I'm not even a Republican. Like, I can't stand politics. I can't fucking stand them.
The consumer
Can
financial
we all agree that we fucking hate politicians?
agency created after the
Whether we don't have the same fucking politics, I gotta listen to this diarrhea.
CFPB has successfully fought on behalf of working class families against abusive big banks and predatory lenders,
Yes.
and not to mention returned $21 billion to families who were swindled. Chair Powell, you explained yesterday that with the CFPB shutdown, there is no agency.
Right? It's like, she's pretty smart too. You gotta watch out for her. Like, she is fucking quick. And she's old. Like, I think she's older than Trump.
Attacks. Chair Hill, it is both urgent and critical that you immediately convene
Woo!
along
Spoo's squeezing up right now into the Gamma Flip.
Director Vaught.
Wait a minute, I guess that was up here, but it's lower.
Importantly, the American
Right here.
deserves answers as to why Musk and his Doge minions are in possession of sensitive consumer information and what they are doing with
God, this is fucking typical DNC bullshit.
simultaneously
I fucking hate the DNC. Ugh.
on U.S. companies that will increase the cost of groceries,
Says stupid shit.
basic supplies.
This is why you lose.
Trump is freezing funds for housing assistance and community development and whittling down the federal workforce so that his billionaire boys club can suck any of these workers' salaries into their own pockets. This is all part of Trump's Project 25 playbook. You know,
What does this have to do with Jerome fucking Powell?
Project 2025, Chair Powell, their plan to eliminate the Fed. We're watching this play out as Trump doubles down on his efforts to gut the independent,
She's good. I mean,
as we've seen with demands
her age, yes.
rates immediately. In fact, his co-president Musk attacked Fed independence in a tweet earlier this year. Chair Powell, I know you have been adamant about the independence of the Fed and have, thus far, resisted pressure from Trump. But after your decision to eliminate DEI initiatives,
What?
following Trump's illegal order, I'm concerned.
That's not an illegal order. It's the executive order that the fucking DEI was instituted by the executive branch too. Gah!
that But you must stand firm in defending the Fed's independence. Reject any attempt by Elon Musk and his Doge minions to gain access
That's the job of a fucking court.
and data, and speak forcefully about what's at stake for our economy. The American public must hear from you, our central bank, today.
Gentlewoman, gentlewoman yields back. I yield myself 5 minutes for questions. Thank you again, Chairman Powell, for being with us. Let me start with the Fed's bank regulation and supervisory function. As I mentioned in my opening statement, over the past 2.5 years, the outgoing Vice Chair for Supervision has pushed new regulations that would move the United States towards a one-size-fits-all approach to prudential regulation that disregards the congressional mandate that's been quite clearly established for regulators to tailor bank regulation based on an institution's size, complexity, and risk profile. Earlier this year, the Fed board announced that Michael Barr would be stepping down from his position as vice chair on February 28, 2025, or earlier, should a successor be confirmed. Significantly, the board also announced at that time that it does not intend to take up any major rulemakings until a vice chair for supervision successor is confirmed. I've discussed this with you. I've got concerns about that. You're not abdicating your supervisory response while we wait around for a vice chair for supervision. Do you agree that it's the Board of Governors that has the responsibility for bank supervision policy?
I do, and I would also agree that we need to carry on with our regulatory and supervisory duties. We can't take a holiday, and we will proceed with the things that we should be proceeding with.
You testified in the Senate yesterday, and I know you enjoyed time with the senators, and you talked a little bit about Basel III endgame. And again, in my opening statement, I talked about that the intent was to harmonize those rules, true, for the largest institutions in the world, but also do that in a way that's capital neutral. And many of us here in Congress on both sides of the aisle felt like Vice Chairman Barr's approach was gold plating already high standards for American banks. You testified yesterday that you think bank capital levels are about right for those large institutions. Would you tell the committee today that it's your intent to repropose a Basel III endgame approach, just speaking on behalf of the Fed only, not the other supervisors, and that it be take into account the comments, and that it be generally capital neutral?
We do intend to repropose Basel III endgame, and we intend to do that just as soon as we can get together with the new leadership at the two other banking agencies. And as I mentioned, I think we can do that pretty promptly once those people are in place. I look forward to doing that. My long-held view, as I've said in many of these hearings, is that capital in the banking system for the largest banks is at about right. And that would be my starting point on going into these discussions. But I do want to defer. I do want to, leave it for my upcoming, new leadership at those agencies to have their own views on that.
I think that's important. I think it needs to be coordinated and harmonized among our supervisory agencies. And I do want you to take into account how Basel III endgame proposal interacts with other pending rules, whether they're on liquidity or the other things like operating risk in the companies. I think that was a lot of centrality of the comments that we saw on your Barr proposal. Turning to monetary policy, looking back at 2020 and 2021, I was looking at all the principal monetary policy rules that you report in your semi-annual report. And had you followed any of the monetary policy rules that you track, they would have had you tighten sooner in the cycle rather than waiting. And I think that could have reflected, maybe not seen us have a 40-year high in inflation. Using the benefit of hindsight, do you think you should have looked at those rules more closely in the open market operations and tightened sooner?
I will say, and I've said before, that hindsight suggests that it would have been good if we had tightened earlier. I don't know how much difference that would have made, but I'd be very careful with those rules. Those rules in the middle of last year suggested that our policy rate was a couple hundred basis points too high. So we need to. They're a starting point, not an ending point. Is
right. But we've had this conversation before. The point is that they do offer a roadmap, and you do mention them in writing in your monetary policy reports, except for one time during the pandemic. And I think, though, that you're adding that to your reference point and your forward guidance and in your communications, I think would be important. Can you tell us about the review of the inflation targeting and when you expect to complete that?
Expect to complete it by late in the summer this year. We're just beginning it now, and we're going to look at all the decisions that we made, why we made them back in 2020. We're going to ask ourselves what's changed. We're going to be open to criticism and good ways of thinking about it, and I think we'll make appropriate, discrete adjustments.
I thank you for being with us today, and I turn to the ranking member of the full committee, Mrs. Waters, for 5 minutes for your questions.
Thank you very much, Mr. Chairman. It is no secret that President Trump, that he wants to do away with the Federal Reserve altogether. He said he knows interest rates much better than you do. I want you to know that some of us here have been fighting.
He says a lot of shit.
To make sure that everybody understands the importance of the central bank. Every country dealing with crypto, their central bank is involved. But, of course, Trump and the opposite side of the aisle fought us. And that's one of the reasons we were not able to come together with a bipartisan agreement on stablecoins. You previously said that you would not resign if Trump asked you to do that. Do you stand by that commitment?
I have no changes to that.
I can't hear you.
Yes.
He has no reason to.
Record that adequately. I appreciate that because you have a right to your position not to be interfered with by law, I believe, or even Constitution. When Muslims knocking at the Fed's door, are you going to let him in?
Just to know, we have a bull plane right now for a squeeze higher to trend and the hourly and half-hour trigger
Doge into the Federal Reserve.
right up here.
Access to the systems and the data.
So I don't have any. We've had no contact, and I don't really I have nothing for you to report today on that.
Well, you know what happened at Treasury, and you know what happened over at the CFPB, and the people of this country are being violated because all of our privacy is being taken up by Elon Musk and Trump, and we don't know what all they have on us, our bank accounts, everything that in our lives. So I want to protect it in the.
She does have some point here.
Time you testified before.
I'll explain it if you want here, but
Really successful institutions in the United States.
now I understand what you're saying. Basically, Trump does want to assert authority over the Fed.
Attract a broad, diverse range of talents to the table. That is why that is the way we feel about it.
To test if he can get authority over the Fed. That will probably happen.
That's what we've been doing.
That's a fair point from her. So I guess she is setting up this.
Ensure that the Fed continues to attract
But now I get why she's doing what she's doing.
diverse employees.
We're institutions like ours, private and public, are a constant contest to hire the best talent in the country. And we've all learned, I think, and certainly we have, that we will go anywhere to find that talent, and including places that we didn't go 25 years ago. And we'll just continue to do that. We're recruiting, as you know, at many, many, many universities and colleges, including historically black universities and colleges.
Woo, good job, Jerome.
And others.
Fuck yeah, J. Powell.
And that's our practice. We think that's the best way to go about it.
Thank you very much. And that's what I've always felt about the Fed. No matter what they call it, you only attracted and hired the best qualified people.
All day long, baby. It's money and power.
No matter what they refer to it as, what they call it, whatever.
This ain't politics.
Yes.
Thank you very much. Chair Powell, are you willing to provide my staff with an immediate briefing from your agency on the status of your OMWEs and equal employment offices?
Yes.
Thank you. I believe that you know that the OMWEs were created with the Dodd-Frank reforms. It's in law.
1976.
Understand it. Any attempt to dismantle OMWEs would have to come before the Congress of the United States of America. Is that your understanding?
Well, yes. Section 342 of Dodd-Frank, which is the OMWE section, is the law.
Thank you.
Like the 1974, 76, we started making those laws.
other board members in determining how your agency is complying with Section 342 of Dodd-Frank and
Then it became Dodd-Frank.
as any other federal
Let me look this up.
anti-discrimination law.
I just read this last night.
I think we've consulted with senior staff and board members quite a bit.
It started out as something different in the 70s.
Chair Powell, days after his inauguration, President Trump issued
Even earlier.
an order on digital
Volcker rule. Hold on here.
prohibition on central bank digital currencies, or CBDCs. The executive order banned any, quote, form of digital money or monetary value denominated in the national unit of account. That
Yeah, updated in 2008, then 2010.
end quote. I'm
I
concerned.
thought it started as a different bill in the 70s.
Far beyond CBDCs. Well, thank you very much. My time is up, but I appreciate your presence here today. And I
Yeah, it started in 1970. Or it started in the Securities Exchange Act in 34. Then in 78, it was the International Banking Act.
now yield back.
89, the Recovery Enforcement. And then 91, it was the Corporation Improvement Act.
On CBDCs in writing. And now we turn to the Vice Chair of the full committee, Bill Heisinger, the gentleman.
And then the most recent one was the Dodd-Frank Act of 2010, 14 years ago.
Powell, good to see you again. You had talked a little bit about your review. I'm going to start there. Obviously, a lot has changed in the last 5 years. Pandemic, inflation, higher interest rates, name a few. However, I believe your dual mandate of maximum employment and stable prices should remain the ultimate objective. I assume you agree with that. I'd let the record reflect slight head nod on that, I guess. This committee is going to be very focused on monetary policy, and with my good friend from Oklahoma, Mr. Lucas,
And that's where I think things changed, was like 1978.
we're going to be addressing
Like 78 is like when things went crazy, just before Reagan.
that have been discussed. I, for one, have always been particular to Taylor rule, but there's a number of rules. I know you go through those. At one point, I suggested that we could call it the Yellen rule with Chair Yellen. But there needed to be some sort of public declaration of what to benchmark against, and I still feel that that is of some importance. You outlined your timeline on this particular review, but I'm curious, do you believe that the last policy framework limited the Fed's response to raising inflation, something that you and I have talked about over the years?
No, I'll tell you why we didn't raise rates. We thought the inflation was transitory. I can show you forecasts from the end of 2021 by us, by staff, by the blue chip. Everybody thought it was going to be transitory. That's why we didn't raise rates.
And I also distinctly remember a hearing where you and Secretary Yellen at the time were sitting next to each other, and it looked like you visibly scooted away when I asked you both whether it was still transitory, and you had, for the first time ever, a separate answer. Her answer was yes, it still was transitory. You gave a very Fed speak answer of, we no longer believe the data shows that, so no. And to kind of go to Chair Hill's point, we think that might have been a little late on that. On back to the review, I'm curious, what sort of input are you looking for from the public and from Congress as you go into that review?
So from the public, we'll do a series of Fed Listens events, which were very successful the last time. And it involves us sitting down and meeting with people, some of whom know a lot about what the Fed does, some of whom just tell you what's going on in their communities. It was really, it was a very successful part of our outreach last time. In terms of Congress, you know, we'll keep you informed of our progress. We welcome anything you may offer. But you know, it's a public. We're open to the public on this. It's a public review, as distinct from what we were doing before, and so we're welcoming views from all over.
And not to get ahead of the chairman, but I look forward to us having more conversations about
SPY trading up to trend.
I want to switch topics and focus a bit back to the bank supervision. Michael Barr has stepped down from his position as vice chair for supervision, effective at the end of the month.
Closing the gap.
Whether, frankly, President Trump fills that position.
We are now in positive gamma once again.
But
for the
in
moment.
absence of a vice chair for
This is where the gamma flip is.
We're still working, I think, on it. I think your quote to the chairman was, "There's no time for a holiday." Now, this vice
Trend is this line right here.
is a Fed governor that has, frankly, extraordinary powers and responsibilities, and
So just so you can, like, the trend of the week is just above here.
does the Fed really need a separate vice chair to complete?
Also note that bears are momentum is coming down to try to stop price from getting back into trend.
Was passed. I know this vice chair position was created by Dodd-Frank. I've just been dealing with the echo effects now for the last.
Tag the new high at 10 or at.
Do we really need to have a separate vice chair of supervision?
So for many years, as you know, we did our business without a vice chair for supervision.
33.
Goes through the full board.
And it was effective?
I think it was, and also there was less volatility.
So more room to run to the upside here.
Well, because you've got a group of 7 people on the board, and there will be some as appointments change. There'll be some changes in the approach to regulation, but putting it all in a single person, admittedly just to recommend to the board, can lead to sort of some volatility in these things, which is really
larger swings in policy.
Larger swings in the kind of things, and that's not great for the institutions that we want to regulate. We want to have a good set of regulation that doesn't swing back and forth very much. The question of whether it's a good
4 hours beat right now
for you, but I will tell you, we will once Vice Chair Barr completes his term in a few weeks, we will continue on until there's a new Vice Chair for supervision, and we can very much get our work done.
Or if there is one. So with that, Mr. Chairman, my time has expired.
I thank the Vice Chairman. Mr. Heisger yields back. Recognize the gentleman from California, Mr. Sherman, for 5 minutes of questions.
Chairman Powell, you are the only bipartisan person or thing left in Washington. You were appointed by Obama. Trump gave you a promotion.
Yep.
Biden reappointed you. And you are the only Biden appointee not to hear the words, "You're fired," from our president. So I hope we listen to what you have to say, because you're the only person that I can identify in Washington that has support on both sides of the aisle. Mr. Huizenga mentions the importance of your dual mandate. Project 2025 calls for abolishing the dual mandate and eliminating a mandate that you focus on employment. If we were to give you just one mandate dealing with price stability and take away the mandate on employment, over the next 10 years, would our GDP be higher or lower?
It wouldn't be possible for me to say.
Does the fact that you focus on employment as one of your dual mandates lead to lower unemployment, higher employment in our country?
What the fuck?
It may do so. We do balance those things. To some extent, that may be right.
Chair Hill spoke about how important it is that you maintain your independence. I noticed that in light of the hiring freeze, the Fed has removed all its job postings. I'm hoping that your personnel policy will be as independent as everything else at the Fed. But I'm more concerned with the president's statement at 7:58 this morning, where he said interest rates should be lowered. He said it. Will that influence what the Fed actually does?
No.
As a practice, never comment on anything the president says, but I think people can be confident that we'll continue to keep our heads down, do our work, make our decisions.
No twice.
Happening in the economy, the outlook,
And
the balance
statements
of risks.
by elected
No
officials
change.
are not among the things that cause you to act one way or the other.
You know that, Mr. Sherman.
Thank you. And he went on to say, he said interest rates should be lowered, something which would go hand in hand with upcoming tariffs. Let's rock and roll America. I certainly agree with the rock and roll America, but the Peterson Institute says that the policies that the president ran on will raise the CPI by between 4 and 7.5 points.
Briefly.
And I think the biggest element of that is the proposed tariffs. If we have higher tariffs across the board, say 10 to 25%, would that increase the cost of living? And would an increase in the CPI or related indexes of the cost
Briefly, within range.
interest rates?
You know, there are many organizations, public and private, whose role is to speculate publicly about what this might be. What we're doing is we're reserving judgment until we actually know what the policies are.
But if we have a higher cost of
He still doesn't have to raise them, dude. He doesn't have to cut or raise.
CPI goes up, or CPE, excuse me.
Well, if inflation goes up in general,
Yeah.
forget about tariffs. In general, of course, we will use our tools, which is the interest rate, to bring it back
It
down.
would take months for that.
Okay. Yesterday,
3.
we told the Senate we're going to release the stress test scenarios before we implement them.
God, here we go. He's in like the most perfect spot for a stress test right now.
Look at large bank capital requirements, including the risk-based capital ratios like Basel III Endgame stress testing, to make sure that you don't have a contraction in the ability of credit to Main Street businesses.
Yes.
Great. There's a proposal in Project 2025 that we abolish Fannie and Freddie. If there was no explicit or implicit federal guarantee for those who invest in mortgages, would that lead to higher mortgage interest rates?
Since you'd no longer be borrowing on the credit of the United States, in other words, so Fannie and Freddie would be privately funded, it could lead to that. I think privatizing Freddie and Fannie might have other virtues too, though, as has been considered many times by this committee and others.
Might have some virtues, but it would lead to higher mortgage rates.
It could.
The CFPB has been put on ice, but all the regulations remain in force. So if you're a bank that wants to comply with those regulations, there's nobody that can give you any clarification. So you don't know. And if you're a bank that doesn't want to comply, the next presidential election may put into practice a CFPB that enforces all the regulations that the Trump administration has tried to eliminate. Does that cause confusion for banks?
You're speculating about what the situation might be. I would say that it could. Yeah.
I yield back.
Gentleman yields back. I now recognize myself for 5 minutes. Chair Powell, let's talk about the balance sheet. As we've discussed several times before, the consistent and massive growth of the federal debt creates long-run challenges for both the United States and saddles future generations with an onerous burden. But it also creates a challenging environment for the markets as the Treasury market expands in kind. As the Fed engages in quantitative tightening, allowing the Treasuries to roll off, the Fed is careful to ensure that there are ample reserves for the balance sheet. Could you briefly discuss the conditions that determine the ideal level of reserves?
Sure. So let me say that we intend to slow, and we have slowed, but then stop the process of shrinking our balance sheet at a time when we think that reserves are somewhat above the level that we judge to be consistent with our ample reserves framework. So what that
It's like 2.0.
we want reserves to be ample, meaning we don't want them to suddenly appear to be shortages of reserves. So we're going to think of where those shortages might appear, and we're going to put a buffer on top of that because
We're at like 2.25 right now.
there's not enough liquidity.
2.25 trillion.
Framework. And right now, we feel like all the evidence suggests that reserves are still abundant, which is more than ample.
Yeah, it's more than ample. We're above right. I think we're at 2.25 trillion, and we need to get down to like 1.75, 2 trillion, somewhere in there.
I've made the point that the growth of the U.S. Treasury market paired with a decreased willingness of banks to act as intermediaries is a major issue on the horizon. When former Treasury Secretary Yellen was before this committee last year, I asked her about the resiliency of the Treasury market, specifically about the wisdom of permanently modifying.
The CPI stuff was only
something that the banking regulator should consider.
so far has only been like stumping
Look at the SLR.
Yes, I believe we will. I have
or stumping and then blame game. They have to do that.
been somewhat concerned.
And then they left themselves out in their speak. Whoever's the speechwriter is leaving them out, so they didn't say this specifically kind of stuff.
Grown, and one obvious thing to do is to reduce the effective supplemental leverage ratio, the bindingness of it. So that's something I do expect we will return to and work on with our new colleagues at the other agencies and get done.
Because I think my colleagues are aware that over the course of recent times, literally we have 8 times as much debt to process, but only half as many major market makers. The Federal Reserve is not immune to politics. You, like every Fed governor, go through a lengthy confirmation process in the Senate. And of course, you're required to answer to Congress in hearings like this. I can trace a major political turning point at the Fed to the passage of Dodd-Frank, which greatly expanded the Fed's regulation and supervision authority. Chairman Powell, do you worry that the independence of the Federal Reserve's monetary policy function is in any way hindered by its role as a bank regulator? Can you do both?
Well, we can and we do, and we'll continue to do that. Clearly, the regulatory and supervisory side is more contentious in political circles, but we will continue to carry it out as best we can and to do so in a non-political way as best we can.
And clearly that'll be a major discussion topic in the task force. In my remaining time, could you discuss the Fed's 5-year review of monetary policy? What are the categories of issues you think that will be helpful to receive feedback on?
So a good part of it will be looking at the changes we made in 2020, which were made in an environment where we had been stuck at the effective lower bound at 0 for 7 years. And the highest we got our rate really was sustainably was 1.5%, and that was the highest of any advanced economy central bank. So the concern was that at the slightest downturn, we'd be back at the 0 lower bound and we'd be stuck. So we were looking for ways to make up for that. So then the question is, we got the
normalcy
out of the pandemic and the events related to it. Are we in a different place now? And I think the chances are pretty good that maybe that the effective lower bound is still a concern, but it's not the base case anymore. So we need to look at that and decide how what are the implications of that for our friends.
He's saying that we're kicking ass right now.
And I look forward
Right now.
several more discussions on these topics. And with that, I yield back the balance of my time, and I recognize the gentleman from New York, Mr. Meeks, for 5 minutes.
Thank you, Mr. Chairman. Chair Powell, thank you for being here today, and you've indicated in past hearings that geopolitical tensions pose important risks to global economic activity. In fact, around this time last year when you appeared before the committee, you and I discussed how conflicts around the world, specifically the war in Ukraine, had impacted the cost of things like groceries in the United States of America. At that time, you indicated that the war had caused commodity prices to move sharply back home. Does that sound correct to you, if unfamiliar to you?
Yes, it does.
So, just to reiterate, in this interconnected world that we live in, would it be safe to say that economic instability in other countries has the potential to impact economic factors here in the United States?
Sometimes, yes.
And so, given that fact, would it seem like a smart move for the United States government to remove one of our most effective strategic tools that, by mandate, assist U.S. commercial interests by supporting developing countries' economic growth and building countries' capacity?
Between the pen and everything on that guy's body, he's worth about he's got about $250,000 sitting on him.
It's not for me to be the judge or to say on that.
That guy trades the stock market.
We do know that a number of, like USAID, they buy a lot of their agricultural products, et cetera, from American farmers. And in fact, it helps the U.S. economy when you look at the volume of agricultural
Kansas
that are being bought so that we can continue to be a part of the rest of the world. Would that be correct?
As far as I know, yes.
So, today we find ourselves facing a situation where the president and his Dodge buddy Elon Musk seem hell-bent on dismantling USAID, no matter the consequences, even if they are dire. To me, the assault on this congressionally authorized body represents an attack on the rule of law and should outrage every member of this body. Every member, Democrats and Republicans alike. And I know that your interest is squarely within your dual mandate and not foreign policy. I sit on both committees. I'm here, but I'm also the ranking member on the Foreign Policy Committee. And so I can't sit here today and pretend that what we're doing won't impact employment and economic stability right here in the United States of America. Weakening USAID will fuel global crises, endanger American security, embolden other nations like China and Russia, and leave us here in the Trump administration solely responsible for the fallout. So I have to take this opportunity to urge my colleagues on the other side of the aisle to also stand up for USAID. Anytime we travel, we go visit what they do. We go visit the good that they do. We go visit what their and how their economies improve so that they can be part of the global economy. So
They're all just fucking stumping right now. This has nothing to do with the fucking
the rest of the world. Then because we care about our country and recognize that instability elsewhere threatens our stability right here. It is extremely important in an interconnected world because the economy is interconnected around the world. We cannot isolate ourselves from the rest of the world. I thank you, Mr. Chairman, and I yield back the balance of my time.
Gentleman yields back. The chair.
daily velocity is improved, or hourly velocity, intraday hourly velocity is improving. Watch out for the vol to roll off the market as we get into the end of this Senate hearing.
Every single member that we appreciate and respect you taking the time, even though you're expected here. We think you show up and we admire you. Mr. Chairman, you and I both know that way back when, and we assume 21, that there was a decision made by the Fed that gets close to quantitative easing and then the term tapering. And we know that it was sold as a monetary stimulus to help the country, and I get that. There was about, in my opinion, $2.33 trillion that were taken out in loans. And Chairman just spoke a minute ago about the term debt versus growth. Debt versus growth, about this amount of money that sits out there on the debt side. Could you please take a minute and discuss this issue and how we should be looking at it? Thank you.
Sorry, Mr. Sessions, are we talking about asset purchases that we made during the...
We are. We're talking about when the Fed went and sold
QE.
treasuries.
No, we bought treasuries.
Bought treasuries.
Yeah, we bought treasuries. So, you know, it was a situation, I'll tell you why we did it. You know, we were just out of the worst part of the pandemic, and we didn't know how, frankly, how good things were going to be, how strong the economy. We were very concerned. COVID is still raging, and it actually, you know, had a very strong wave right into 22. But we wanted to just, we didn't want to stop buying treasuries too soon, because I mean, that has a stimulative effect on the economy, because we didn't want to provoke an unwanted tightening in financial conditions at a time when we thought the economy was still vulnerable. You look back in hindsight, we probably could have done that earlier and halted purchase earlier. In any case, we turned right around and started shrinking the balance sheet, and we've gotten...
You moved it from about 120 a month to 110.
Well, we're down, we've been tapering for 2 years now, and we're down more than $2 trillion. So, and we're still going. So that's why we did what we did.
Tell me what that looks like in the longer term aggregate versus with what the chairman said, debt versus growth. Because we believe the debt remains and the growth is not equaling that ability to pay it back.
So what happens is, we borrow money to cover the spending that Congress has done. Our purchases don't affect that. We're basically issuing reserves, which is cash, and we're retiring Treasury securities. And the effect of that is to drive down long-term rates. That's the whole reason for QE.
And what are you paying for those long-term rates?
Market rates. We're paying exactly the market.
And what would that market be approximately a year ago or to now?
Well, you know, the 10-year, we're not, of course, we're going in the other direction now, we're shrinking now, but
we
were
are.
Buying, you know, the 10-year was yielding a very, very low, yield on it was quite low during the pandemic, extremely low because, you know, growth was slow, there was a lot of demand for treasuries. So we were pushing down rates to support economic activity. When you can't lower your policy rate anymore and you want to do more stimulus, that's really the main thing you can do. It's actually the forefather of that was Milton Friedman, who came up with that thought way back in the past. But that's what we did, and then, as I mentioned, we turned around as soon as we lifted off and started raising rates. We immediately started shrinking the balance sheet, and we've shrunk it a lot, $2 trillion and still counting.
You have shrunk it $2 trillion?
Yes, we have.
Okay. And what do you believe remains, and you believe you're now stable for moving forward?
So I think we have a ways to go. Actually, the level of reserves, which is the thing we're focused on, hasn't really changed. All of that has come out of what's called the overnight reverse repo facility. I'd be happy to spend some time with you on this. This stuff is very complicated. And
yes, I've tried to find new data on it, and the last I found really was a CRS report of 22. So what's
very,
called
very big changes since then.
127.22. And
Yeah.
so the changes that you speak of are important.
Yeah.
And so I would appreciate that time.
Be happy to do that.
Great. I want to thank you for being here. The confidence that the American people have that we will turn not just the economics of their lives, but of the country is very important. And I today spoke about the country. And I want to thank you for your service and time. Mr. Chairman, I yield back.
The gentleman yields back. The chair now recognizes the gentleman from Georgia, Mr. Scott, for 5 minutes.
Thank you very much, Chairman, and welcome, Chair Powell. Chair Powell, I'm worried about these tariffs, and I want you to kind of share with us your thoughts on these tariffs. I'm worried about it. I think the president is wrong here. Tariffs can cause a terrible situation to the economy. I'm concerned about the inflationary impact on tariffs. And where cost increases from the tariffs, there's a cost to these tariffs. And we need not move into this area blindly.
You want me to speed this up for you?
Will be absorbed by business companies.
Shouldn't say that, it's ageism.
Other costs that will be borne by the American consumers. We don't even understand this. And yet you have the president just using these tariffs as a means of fight or like a war. And this is going to do it. Everybody is not going to be Mexico or Canada. And while we got a little time, I want your thoughts on the dangers of these tariffs. The stock market is anticipating rate cuts. What will these tariffs do about that? Does the Fed see financial stability as a factor in this decision-making process?
Not yet. He's got room, dude. He's got up and down room.
And here is specifically what I want you to get to.
This is all more bullshit. Means nothing.
Politely,
It doesn't mean nothing today. We may clarify that.
Tariff strategy.
We'll go over this later when this shit is done. We'll look at this closer.
Rate cuts as a result of inflationary issues or due to a weaker labor market, and what do you consider to be promising inflation data? That's our big fight.
This conversation is like 3 months from now. It has nothing to fucking do with today.
To inflation, like a rocket ship.
Oh.
your thoughts
So,
and share with us. Give us your opinion of the danger of these. There's a cost here. Tell us what you think about this.
the president has certain authorities over tariffs.
Excuse me for 1 minute here. Gotta get some water.
The Commerce Department is involved in some ways, but the Fed has no role in setting tariffs. And we don't comment on decisions made by those who do have that authority. We try to stick to our own knitting. In this particular case, it's possible that the economy would evolve in ways that, because of tariffs, or partly because of tariffs, that we would need to do something with our policy rate, but we can't know what that is until we actually know what policies are enacted. And remember, it's not just tariffs. There are significant changes to immigration policy, fiscal policy, and also regulatory policy. You put all four of those, and all four of those were things that the president was elected to do. We will then try to make an intelligent judgment about the overall effect on the economy of those, and conduct our policy accordingly. It's not our role in any way to comment on the wisdom of the policies that are enacted by Congress or by the administration.
Will he have an effect on whether or not you will resume your plan to cut the interest rates this year or continue to hold?
So we'll make our decisions as we go about what to do with interest rates based on the data that we see, the outlook, the evolving outlook, and the balance of risks, and we'll be considering all of those things. We won't be focusing on any particular policy, and I can't tell you what we'll be doing, because it will really depend. It's fairly uncertain environment right now.
Yeah.
The underlying economy is very strong, but there's some uncertainty out there about new policies. We're just going to have to wait and see what the effects of those policies are before we think about what we can do.
Well, all I want to say, God
Might be coming in. Oh, sorry about that.
strength. We've worked together over the years on many things.
If you're looking for a dip to buy here, we're gonna keep the hold on a second here. We're almost ready for a dip to buy, but
I agree, but the gentleman's time has expired. Gentleman,
damn, Mr. Scott.
the gentlelady from Missouri, Ms. Wagner.
I thank the chair, and it's good to see you again, Chairman Powell. Chair Powell, under the Biden administration, American families were hit with a huge stealth tax
Okay, so we're looking at
inflation that drove up grocery prices and led to high rates on things like mortgages and car loans.
so we failed this one so far, right? We failed to get up there.
Every household,
We want to get higher.
$100 more per month due to inflation.
That hasn't happened, has it? So let's bring this one down. Whoop.
Is $69.
We get
These families
that
have
one is where? Right here? Yeah, I think right here.
more of their annual income on the exact same goods.
Now, my question here is this.
Is the Federal Reserve's plan for making life easier for everyday Americans?
Let's look closer here.
What we can do for Americans is to
If you can catch a dip down here to have the Senate hearing end,
some employment. That's
try to get
trying to get back to
us back up, right?
where price.
Just keep your eyes down here. See, even if we like tag this and then come back down, just be looking for like an exit volatility
So what else?
trade.
I'd say we're close but not there on inflation. And you did see today's inflation print, which says the same thing. I mean, we've made great progress toward 2%. Last year, inflation was 2.6%. So great progress, but we're not quite there yet. So we want to keep policy restrictive for now so that we can see.
We're definitely not there for 30-year mortgages,
We don't want to be there, woman.
Chair Powell.
Oh,
Let me switch topics. I continue to believe that as we've spoken about, and as was brought up prior colleagues here, that
and man, I don't care who's saying it.
including the Federal Reserve, should scrap the flawed Basel III endgame proposal and start over. You talked a little bit about how you plan to
Anytime somebody says you want 2%, just think that they're a bear. They either don't know what they're talking about or they're a bear. They're one or the other.
Be able to provide comments on any revised proposal as required by the Administrative Procedures Act.
So I fully expect, and I think it's a good idea for the United States to finish Basel III in a way that's, in keeping with Basel and also with what other jurisdictions are doing, comparable jurisdictions.
The key there is end game. This has been going on for 2 decades.
Where's the end already, right? So, we'll put all of that out for comment again and welcome the comments of all commenters.
I should make sure we're following the Administrative Procedure Act.
Oh, yes.
As you move forward.
We will.
Chair Powell, I understand you are interested in making the stress test scenarios that assess how a bank will perform through a crisis more transparent.
Or it's politics, stumping. I'll give you that too, Doug. That's your third option. Politicians stumping for Main Street people that have no idea.
And analytical rigor of the stress tests. Recently, the Federal Reserve announced that due to the, quote, evolving legal landscape, it would begin to take public comment on its stress test models and annual scenarios. Can you describe the changes in the legal landscape that have caused the Federal Reserve to suddenly seek public comment on its stress test regime and why it did not seek public comment from the beginning?
So we're an agency that's strongly committed to following the law as written by Congress and as interpreted by the Supreme Court. In the past few years, we've seen a string of administrative law cases from the Supreme Court.
But can you imagine? Like Jerome?
There's a common theme, and that is significantly less deference to the views of agencies as compared to those of courts. Also, just a raised expectations for compliance with the Administrative Procedures Act. We take that very much to heart, and this is one of the things that we're doing because of that. And we feel the appropriate.
You can look at things like Chevron deference. You can look at the EPA ruling by the courts, and they are returning the power back to the people and to Congress, not the administrative state, not those agencies and rulemakers.
So because of those things, we are putting. You went through it. We're putting the models and everything else out for comment and taking similar steps.
Well, I'm glad to see that. I understand the Fed intends to complete a comprehensive review of its monetary policy strategy, tools, and communications practices. You mentioned that. What is the timeline?
We expect to complete our work and announce the results by the end of the summer.
End of the summer. Thank you. I yield back.
Gentlelady yields back. The chair recognizes the gentleman from Massachusetts, Mr. Lynch, for 5 minutes.
Thank you, Mr. Chairman.
Yeah, 100% angered.
Thank you for your good work. Chairman Powell, the Senate just filed a bill called the Genius Act. I'm always worried about anything that comes over from the Senate with the title Genius in it. But it is an attempt to provide a regulatory framework for cryptocurrency. And
oh, shit.
Proposal, which is similar in some respects to the House proposal, it would allow individual states to oversee issuers, and there would be no central federal authority. The idea is to disperse the responsibility from state to state. My concern, my overriding concern is that with that spread of an expansion of crypto, and the president is 100% behind it. He just started his own meme coin. He's making a lot of money off of that, which is another issue. My concern is that the spread of an expansion of crypto will infect the traditional banking system because it's a volatile, speculative asset, and we've seen some very sudden disasters with crypto. I'm just wondering, are there any backstops that we can use, any firewalls that we can put in place that might insulate the traditional banking system, because they have access to the discount window and they're FDIC insured, so there may be, second order impacts if we have a collapse of a major crypto issuer. Are there any extra things that we can do to protect the traditional banking system?
Yes, so first I would say there are really two things that are happening. One is banks are serving crypto customers, and we don't want to get in the way of banks serving perfectly legal customers as long as they understand the risks and that sort of thing. We don't want to single out any particular.
Are you speaking to custody?
Well, custody is more, the second thing is
Right.
undertaking activities
Okay.
on their own, right? And in that case, I do think it's appropriate to you know, as usual, as bank supervisors, make sure that we understand and banks understand the risks that are involved in the activity that they're taking inside an insured depository. On the other hand, you don't want to go too far. You know, I think there were a bunch of disasters, as we all remember, and, you know, we don't want to, and we were reacting to some extent to those. You don't want to go so far as to, you know, overplay your hand on that. So I think we need to be mindful that many of these activities can very well be done inside of banks, and custody may well be one of them. In fact, in Fed-regulated banks, there are lots of crypto activities happening now. They've just happened under a framework where we made sure that the bank understood and we understood exactly what they're doing.
Right. We also have the example of, you know, Silicon Valley Bank and Signature Bank, First Republic Bank. One of the triggering events there. I mean, obviously the risk management was very poor in that respect, and they got on the wrong side of interest rates. But there were also some failures of issuers who had huge deposits at Silicon Valley, I believe, or Signature, or maybe both of them. And the suddenness of their collapse caused a run for the exits. And luckily, with the scramble, we were able to sort of save that situation so it didn't create a greater contagion. But are there steps that we can take that might strengthen our ability to respond to that type of collapse as well?
Yes, so in the wake of Silicon Valley Bank, we did work with many medium and sized banks that had any of the characteristics that we saw. And you mentioned, you know, a long position in long-term securities that was underwater, along with a very unstable deposit base made up mostly of uninsured deposits. And in the case of Silicon Valley Bank, it was a lot of similar private equity and venture capital and hedge fund companies where they all just pulled their money out at the same time. So it was a bank run, and bank runs are very destructive whenever they happen. So we looked for that pattern. We worked with companies who had any aspect of that pattern, and you know, we were successful, I think, in not having that crisis spread very broadly, and that was a good thing. Looking forward, though, we need to not forget that lesson and make sure that funding bases are stable and that we're focused on the basics of banking, which is credit risk, interest rate risk, liquidity risk.
Gentleman's time has expired.
Thank you. I yield back.
Gentleman yields back. Chair recognizes the gentleman from Kentucky, Mr. Barr, for 5 minutes.
Chairman Powell, let me ask you a quick monetary policy question and then turn to bank regulation and treasury market structure. I know hindsight is 20/20, but it's important to learn from mistakes, as you know, and you've conceded that the Fed miscalculated on inflation and mischaracterized inflation as transitory in 2021-2022 time period. Given that inflation remains stuck above the Fed's 2% target, will you commit to scrapping the flexible average inflation targeting framework? And if not, why wouldn't you commit to returning just to a simple 2% target?
So we're just beginning the review. It'll be done, as I mentioned, by the end of the summer, and that's the exact question we'll be asking. I can't commit to a particular outcome. I need to respect the process and the views of the other 18 participants on the FOMC.
Yeah, I appreciate that, and I just hope that in that process that you and your colleagues recognize that framework allowed rising inflation to persist and allowed the Fed to mislabel it as transitory. Let me turn to bank regulation. In October of last year, I led a bipartisan CODEL to Basel, Switzerland, met with the Basel Committee on Bank Supervision, and there the committee actually conceded to us, agreed with me, that the Michael Barr proposal of July 2023 actually gold-plated bank capital requirements. And instead of actually promoting international harmonization, actually made American banks less competitive. They conceded that to us. So I applaud the Fed for not moving forward on that July 2023 proposal that would have made it harder for large banks to, among other things, facilitate the smooth functioning of the U.S. Treasury market, including holding treasuries on the balance sheet. Couple questions. One is, should the goal of our bank capital rules, should it be regulatory harmonization internationally, or should it be American economic competitiveness?
I mean, clearly, the goal is to have a strong banking system that supports American economic activity and growth. That's the ultimate goal. What you get from Basel is a global floor so that the other banks can't run on less capital and sort of have a short-term advantage. That was the whole point of Basel, was to get everybody to the same kind of level so that it wouldn't be the race to the bottom.
And I see that utility, but I think the goal of our regulatory system should be America first, and it should be about American economic growth and competitiveness. But let's talk about the Treasury market issues. Obviously, we're issuing a ton of debt right now. In fact, according to BlackRock, we're issuing $573 billion of Treasury bonds every week. To put that in perspective, the entire national debt of Australia is $573 billion. So we're issuing Australia every week in this country, if you want to think of it that way. Would reducing excessive capital and liquidity requirements on U.S. banks for intermediating U.S. Treasury market take the heat off of U.S. capital markets and increase Treasury market liquidity and stability?
I strongly think it would help.
Well, I think that's especially an important comment in terms of your regulatory approach, because, as you know, maturing bonds were being financed at an average of near zero during COVID, and now they're about double the cost of the average of about 3.5%. So now is not the time to make it more difficult for banks to hold treasuries. Let me just drill down with a little bit more detail on this Treasury market structure issue. Do you agree that the supplementary leverage ratio and the enhanced supplemental leverage ratio, the TSLA, are problematic as they create a disincentive for banks, especially large banks, broker-dealer affiliates, to serve as intermediators in the primary, secondary, and repo markets for U.S. Treasury securities?
I do.
And so you would commit to reviewing the SLR framework to create greater capacity for our banks to provide liquidity in the Treasury market?
I think it's time to move on the ESLR. And, you know, we proposed doing so several years ago. We just didn't follow through on it. So I do think it's time.
Well, thank you for that. And finally, yesterday, during your appearance in front of the Senate Banking Committee, Senator Warren asked you about the future of consumer protection laws if the CFPB is abolished. Isn't it true, Chairman Powell, that prior to Dodd-Frank, consumer protection laws were implemented by financial institutions' primary prudential regulators?
Yes.
And so if there were a decision by the Congress and DOJ or whatever to repeal the CFPB, we could return the consumer protection law enforcement function to other financial regulators.
You could, yes.
Thank you. I yield back.
Gentleman yields back. The chair now recognizes the gentleman from Texas, Mr. Green, for 5 minutes.
Thank you, Mr. Chairman. I thank the ranking member as well, and would like to associate myself with the comments of the ranking member. And Mr. Powell, I would like to compliment you for standing up to the president, for literally preserving the independence of the Fed. It was one of those pivotal moments in time. It would have been more than your simply resigning. It would have been the president taking control of the Fed with one of his Pluto puppets. Mr. Powell, I'd like to speak to you now about the process of collecting tariffs. When the tariff is collected, at what point does that actually happen? If we impose a tariff, product is coming into the country, where is that tariff collected?
Great question. I'm not an expert on that. I'm going to say the Customs Bureau collects it, but I stand to be corrected by anyone who.
I believe you're correct. That's what my research reveals. permit me to extend this. When it is collected, it goes into a coffer. I believe we call that coffer the general fund. Is this correct?
I don't know, actually.
It does. The tariff goes into the general fund. A tariff is another way of saying tax, I believe, for many people. Is that a fair statement?
Kinda,
It is sometimes characterized as a tax.
but not always. And it's not always a tax either.
Tariff, which is a tax, and the tax is collected by some entity before it
You could also call it QT there, bro.
gets into the country. Then the
Another form of QT, bro.
tax dollars into a general fund such that they may at some point, and these dollars, by the way, are coming from the consumer, at some point, they may be used to cover some of the appropriations of this very House that the president has enormous control over. So in a sense, what the president can do is aid with the payment of what he would call a tax break, but aid with putting dollars in the pockets of his billionaire buddies that he collects on the tariff that the people in this country ultimately have to cover. I think that the president, while he seems to always avoid the question of how the tariffs are going to be dispersed, he knows that he can, at some point, use that money to help pay the taxes that he plans to return to his billionaire buddies. I think that's a very sinister way of doing business, to require the consumer to fund tax breaks. I think this president knows what he's doing. I think he believes that the very wealthy need more to do more, and that the poor can do more with less. I don't agree with it, and I will do all that I can to prevent it. I yield back the balance of my time.
Gentleman yields back the balance of his time. The chair recognizes the gentleman from Texas, Mr. Williams, for 5 minutes.
Thank you, Mr. Chairman, and over here, Mr. Powell, thank you. Good to see you.
How are you?
All right. The Federal Reserve recently withdrew from the network for greening the financial system, stating that this work had extended beyond the Fed's statutory mandate. While I agree with this decision, I still have concerns with how previous Fed policies may have discouraged lending to traditional energy sectors like oil and gas, and it should not be the role of the government and the Federal Reserve to be in the business of picking winners and losers. So my question is, can you clarify whether the Fed will ensure that financial institutions are not pressured to making lending decisions based on political or climate considerations rather than sound financial risk analysis?
I confirm that is not our policy. That would be inappropriate and absolutely not something we should be doing.
Okay, thank you. The Basel Committee on Banking Supervision intended for the Basel III Endgame proposal changes to be implemented in a capital-neutral manner to ensure a level playing field for U.S. banks. Following this intent, the previous Federal Reserve Vice Chair for Supervision initiated implementation efforts with capital neutrality in mind. However, his successor politicized the process, imposing harsher requirements that exceeded BS recommendations. And this approach not only made the proposal more difficult for banks and their customers, but also weakened U.S. banks' global competitiveness. Ultimately, he took his eye off the ball and went in the wrong direction. So, Mr. Chairman, will the Federal Reserve commit to conducting a more thorough economic impact analysis before finalizing any capital requirements to ensure that they do not hinder economic growth?
Yes.
Regulatory overreach disproportionately impacts community and regional banks, which do not pose systematic or system risk, for yet they face many of the same capital and compliance requirements as the largest institutions. So many of these banks serve as lifelines for small businesses, rural communities, and the first-time home buyers. And it's key for the Federal Reserve to protect these institutions and ensure that they are not subject to one-size-fits-all regulations. So, Mr. Chairman, what steps is the Federal Reserve taking to ensure that new regulations do not force consolidation in the banking industry, therefore make it a little harder for smaller institutions to compete?
So like everybody else, we see the consolidation that's happened really over the last 30, 40 years, and community banks going out of business, and just a fewer and fewer banks. And we know that may be happening due to technology and various things, but we and also just people moving to cities and away from rural areas. But we don't want our regulation to in any way foster that. So we try hard, I try as hard as we can to make sure that we're not letting the heavier regulation that we apply to the GSIBs and even to the regionals slip down to smaller institutions that are serving their community and generally doing a good job at that. And we try hard to do that. This is tailoring. It's very much of a basic value that we have, and it's also what we're instructed to do under the law. And I won't say we're perfect, but we do keep this in mind.
I'd like to say thank you for being here. It's good to see you. And with that, I yield my time back, Mr. Chairman.
Gentleman yields back the balance this time. The chair turns to the gentleman from Missouri, Mr. Cleaver, for 5 minutes.
Thank you, Mr. Chairman. Thanks to our very capable and courageous ranking member. Mr. Chairman, thank you for being here today. As you know, my words, the CFPB has been disemboweled over the last 10 days or so, which probably people, there may not be much concern here on the Hill in certain quarters, but there are two things that I want to ask you about. Rules over at CFPB must be from time to time updated. Right now, there is no system for updating any of the rules. And one of the other issues is that is there a regulatory gap, or are there regulatory gaps that you can see clearly, that people can feel, because there is essentially no CFPB for the first time since the end of the Great Recession?
So I don't think we know where this comes to rest. You may have seen last night that the administration nominated somebody to be the permanent head of the CFPB. So I don't know I'm not sure what the end intention is here. But if you assume that it goes away, then yeah, there would be a gap. There wouldn't be any federal agency that can examine banks above 10 billion, whether they're state member banks or state non-member banks or national banks. That would be the case. But I'm not sure we know what the end game really is here.
In terms of regulatory gaps that are created when the agency was essentially shut down. Now, I'm assuming that there's been somebody appointed to complete the murder of the CFPB, and so if I'm correct, that means that there are some there have to be, or either or they've been tricking us all these years that they were not doing any regulations. But that's my political position. I was very proud in my community to get the Hispanic Chamber and the Black Chambers to come together. We got a building, they're functioning, big celebration all across my congressional district in
Excuse me.
Missouri. And then, about 2 weeks ago, I started getting these phone calls, as I think many of us on both sides of the aisle have received. About 64% of small businesses have invoices unpaid for more than 60 days. And the Fed now, the Fed's real-time payment system allows individuals and small businesses to send and receive money instantly, which is a step in the right direction, Mr. Chairman. What is the status of the Fed Now adoption for financial institutions?
So it's coming along, as was the case with ACH back in the day. It takes quite a while. There's investment that has to take place on the part of banks, and so we're working with a lot of small and medium-sized banks to get them comfortable with the requirements of FedNow so that this can build up over time. It's, you know, it's something that we expected to be slow in terms of uptake, and it has been a bit slow.
Well, is technology adoption a barrier for smaller community banks and mission-based lenders?
Yes, it is, and so, you know, we work with, there are non-bank service providers that do reach out and do a good job with smaller institutions, and we encourage that. Those institutions can't actually have direct access, but their business is to, they have the information and they can go to smaller institutions and show them how to do this, and that there's a lot of that going on, so, and we encourage that.
Thank you. Let me just say, I've been here on this committee for 20 years, and I've seen chairmen, Republicans and Democrats, and whether they are Republican or Democrat, they need to be independent. Thank you, Mr. Chairman.
The gentleman's time has expired. Gentleman yields back. The chair recognizes the gentleman from Ohio, Mr. Davidson, for 5 minutes.
Thank you. Thanks for joining us today, Chairman Powell. First, I want to reflect on our hearing on February 24th here in this same room, frankly, via Zoom for a lot of people because it was in the height of COVID. And during my 5 minutes, you felt confident that inflation being at 1.4% would stay under control, and it wouldn't be an issue despite the very large increase in the supply of money. We talked about M2. In a subsequent meeting, frankly, in my office, we discussed Milton Friedman's quantity theory of money in depth, and you believed that it was no longer relevant, that inflation would not hit consumers. We debated asset prices during the hearing, and you claimed that the Federal Reserve's massive purchases of treasuries did not distort the market. Lastly, during the Biden administration, you were actively calling for more fiscal stimulus at times. And at some point along the way, more dollars chasing fewer goods seems to have actually resulted in higher prices. All of these things, inflated money supply, inflated asset prices, inflated consumer prices, happened on your watch. In light of the actual outcomes, have your views changed?
Well, I think we've learned a lot, but maybe not the lessons you think. But I do think we've learned a lot from the situation. We and essentially all of mainstream macroeconomics thought that this would be transitory, and what that meant was it would go away fairly quickly as the supply side healed and as demand came down, and it didn't. It actually did go away, and substantially for those reasons. But it took 2 years.
And to that point, you felt like in the fall that it was going away and things were going to be under control, and you had achieved your soft landing. But the market pretty quickly spoke. I mean, frankly, rates went up over 100 basis points where you guys were going down. And now, in today's reports, we see that inflation's actually trending up quite a bit from where it was in the fall. So, again, would you, in light of the facts, would you reassess what you're doing with the central planning?
You're right that long-term rates went up, but they did not go up because of expectations of higher inflation. There's no evidence.
Let's compare.
It's actually different things. It's not about inflation.
Well,
look at markets. Markets are pricing in break-evens. I'll show you the. So
chart. The markets don't believe there's increased risk with massive fiscal spending.
No.
They're not demanding a higher premium because there's more risk.
More risk, yes, but not more risk of. It's not mainly about.
And when you see
inflation.
asset price inflation and rate inflation, doesn't that result in consumer price inflation?
It's not a question of that. You're saying that the rate increases at the long end are caused by expectations of higher inflation.
They certainly influence the inflation.
That is largely not true.
Thank you. Thank you, Jerome fucking Powell.
By controlling the rates. I mean, the reality is you've got pressure, including from the president, to lower rates. Are you?
Just go after him, Jerome.
Lower interest rates?
Sick balls, Chopper.
I think our policy's in a good place. I think inflation has come down from high levels to 2.6% last year. My colleagues and I are holding where we are, awaiting further evidence of inflation.
A lot of the data that you guys are looking at lagged, just like when you said it was 1.4% and everything's fine. I think a lot of people said, it's not fine. You got to go out and talk to regular people. And
no, you spin that shit to regular people all you want, asshole.
They're fine, and they might go that the rate of increase has slowed down a bit, but they know that the prices aren't going down. They're still getting hit pretty hard. And meanwhile, you guys still continue some of these policies. Like you're paying banks still not to put their capital at risk in the market. Interest on excess reserves going back prior to the 08-09 financial crisis, you didn't even pay banks for reserves. Now you're paying them for an unlimited amount of reserves that they want to hold on it. To what extent is that distorting the market by pulling capital out of the market?
None, not at all. You're right, though. People are unhappy about the price level, and that's what we need is several years of real wages moving up higher than inflation.
Okay, so if they're having no impact at all, why is the Fed paying the interest? What is the rationale for the policy? Is it monetary policy or is it regulatory policy?
It's how
because as Chairman Barr pointed out, you guys are effectively gold-plating the standards, and the U.S. is actually holding way more reserves than we're required to. And part of that is IOER.
So what's your question?
If it's not distorting the market, what's the purpose for doing it? What if it has no impact on the market? Why are you doing it?
It's the way we control. It's the way we exercise interest rate control in the market. I didn't say it doesn't.
Because it has an impact, and so I will have questions for the record, and I yield back.
Gentleman yields back. The chair recognizes the gentlelady from Ohio, Ms. Beatty, for 5 minutes.
Good morning, Chairman Powell, and thank you for being here. I want to thank you for your leadership at the Fed over the last 7 years, which I've had the pleasure of being here that entire time. Under both Republican and Democratic presidents.
Dude, I wish one of these days Jerome would just come out and fucking annihilate any. I don't care what party they're from. Just come out here and just fucking fuck you and you're stumping.
Independence of the Federal Reserve, which is absolutely essential for you to carry out your mission, keep prices stable, and achieve maximum.
I thought he was gonna fucking snap. I'm just like, please, Jerome, just snap. Just do it.
Has come down from a high of 9.1%.
Just told this guy what the fuck he was talking about. I love it.
In your tenure under President Biden, we saw the
get fucked
drop to a staggering 3.4% in 2023. Its lowest rate that we've seen in some 55 years. And now it sits at around 4.1%, which is still low by historic standards. Although the economy has a way to go.
Spoo's trying to escape the end of this bullshit Senate hearing, trying to trade 604.69.
The list goes on. It is truly remarkable.
Trying to get back into trend. I'm looking for a low to buy down here. I might get left behind here.
I have sat on this committee. You and I have frequently discussed the importance.
Two trends here. There's a trend right here. It's trying to get back in.
And the benefits of recruiting the best
right, and then there's another trend
that this country
right here.
By broadening,
trying to actually get back on trend.
Been a great partner to this committee on this issue, which, as everyone knows, has been very personal to me. However,
yeah, I want that too. I want the hot mic moment too, where he goes, "Fuck all these clowns."
Are incredibly concerning to me, as many of my Democratic colleagues. So I'm just going to ask you a few questions, and you may answer them for the sake of time.
Yeah, the worst part of this too, right, is like large corporations know this. Like they know this. The Fed knows this. Banks know this. Banks know you're rich. Banks are giving you fucking more credit than ever. They're like, come on down, get some more credit. We know you're rich. We know you can afford to pay this shit. Like, then people are like, why are they giving more credit? The consumer's not good. And it's like, no, you're being told that. You're fucking being told that. It's not fucking true. Meanwhile, they're fucking scooping all this money out of their pockets while we're fighting about it. You know what I mean? It's like fucking crazy town.
To see that the Fed recruits from Ohio schools, and I'm from that great state.
Exactly. The quants are laughing at the Senate. They fucking know.
Ohio State University or Case Reed.
They charge appropriately for it. The fucking Fed knows that the consumer is good.
Do you agree that hiring the best and the brightest, whether it's an economist, whether it's an analyst, a lawyer, a researcher, or IT professionals, that this country has to offer means that you don't have to recruit just from Ivy League schools, but you can find these individuals, whether it's an HBCU.
We're like the lowest rate of bankruptcies right now, lowest fucking rate of mortgage fucking like bankruptcies right now. It is insane. how good the consumer is right now. Now they're weakening,
at their core,
but not
prioritize
materially.
and skill.
You're talking about one of the strongest consumers in history today. They're like, oh, they're weakening. From where? From up here.
Federal Reserve has
Like, it has nothing to do with major market change.
to attract, hire, and retain a highly skilled and diverse workforce.
I do.
As I mentioned at the top, the United States economy has come a long way since the pandemic and peak inflation, but hardworking families still are struggling. Last night, I was in a store night before last, eggs here in Washington, D.C., $14.90.
And they're clearing the fucking shelves of them off like it's nobody's business.
From the executive
like they're buying them all.
It's dual mandate. We're seeing reports of course, from the Department of Government Efficiency's attempt to conduct massive layoffs. Do these policies, whether you agree with them or not, affect the labor market, unemployment in the United States economy? And how does the Fed plan to achieve maximum employment during these circumstances?
We have 170 million people in the labor force. So these are, they would affect the numbers technically, but it's not clear that it would be material.
Okay. Thank you, and my time is up. I yield back. And thank
You would need like 3 months of that kind of data that it is hurting consumers.
Mr. Loudermilk, recognize.
At minimum, if not 6. Even at the 3-month mark, he could use his tools. It's so fucking like, give me the hammer in the head, wham, wham.
I find it very ironic that my colleagues on the other side of the aisle and the ranking member in her remarks take a sudden interest in data privacy, and especially information regarding individuals' transactions, when in the IRA bill, they worked very hard to force banks to report the financial transactions of individuals at $600. However, data privacy is something that I have been very serious about since I've been here. I've been fighting the Securities Exchange Commission with their unconstitutional acquisition of PII from individual investors. We're attempting to reform and modernize the Bank Secrecy Act to limit the amount of information taken from individuals. And, they often turned a blind eye to the abuses by the CFPB. But it's encouraging to know that they're finally interested in some level of data privacy. I bring that up because there's something about data and data security I want to ask you about. The U.S. Department of Justice announced that it was prosecuting a senior Federal Reserve official for economic espionage, and this just came out in the past few days. This economist, who apparently had access to sensitive monetary policy documents, allegedly provided non-public information to representatives of the Chinese Communist.
This fucking guy's a Republican.
I know you're limited in what
And he wants privacy, and he opens the door to the fucking Treasury Department.
I'm concerned would be.
Turn the microphone off on this guy, Jerome.
In what you can share with us, if you will, please answer a few of these questions. Do you know what kinds of sensitive, non-public information would this individual have access to in his role at the Federal Reserve?
Him personally, no, I don't. I mean, honestly, I really don't know the facts of the case, and I couldn't comment. But
okay. Just assuming certain types of information from the role he's in, is there any idea if information was provided to the CCP, what advantages would that give them?
Without knowing what it is, I can tell you what staffers generally get, which is kind of the economic analysis that we do in advance of an FOMC meeting. And, in modern central banking, we try to be as transparent as possible. So I don't want to sound like I'm dismissing this case, which we take very, very seriously, just as you do. But we really, the truth is, what we have that is secret is knowledge of what we're going to do in the future. And in modern central banking, the whole idea is to be transparent about what you're going to do. So nonetheless, we take this case very seriously.
So
to your question.
Yeah, and I appreciate it. And this is not adversarial at all. I'm really just trying to get to what possibly the Chinese could have done and if they've done anything with it. Of course, if you're unaware of the type of information to access to, you couldn't answer that question. But Does the Federal Reserve have an insider threat program designed to combat this kind of espionage?
So
You know why they're saying this, right? So they just had a guy. I don't know if you guys understand the context of this. They just convicted an insider from the Fed recently. Hold on here. I'll post it in the Discord.
On this, but
Obviously, certain things do happen, and people slip through the cracks.
It was about spying. There was a Fed economist. I'm going to post it right now.
Strategic analysis of the Federal Reserve and how to protect critical economic information.
yeah, I do think that, you know, once we see this unfold a little bit and know what the facts are, I think we'll absolutely look and make sure that our controls and that employees understand the consequences of this, and I think they do. But, you know, with a few thousand employees, there's going to be one sometimes that.
So this is in relation to this.
And understand it's sensitive, but as things move forward,
John Harold Rogers is his name. So this is like a gotcha moment line of questioning.
information so we can work with you to make sure that our nation's policies are kept just to those, more so kept away from our adversaries. And with that,
Be glad to do that.
And this guy was an employee since when? Forever, I think. Guy's 63 years old. I think he's been there forever.
Very much, Mr. Chairman. Chairman Powell, thank you. I don't want to.
And now, like, Ed Martin is like going to Doge. So I want you to know that this line of questioning has to do with Doge wanting to investigate the Fed, and it stems from this old Fed employee. And I think this guy's been there for a long, long time.
Who said this? The risk of a dispute over the
Says he was in the Fed since 2013.
You know who said that?
No.
So through multiple administrations.
Michael Barr did. And I would be remiss if I didn't say and mention that.
That's a good one right there.
Governor Barr did.
Post that one again.
The rest of that quote, by the way, is, in the current environment, I've determined that would be more effective in serving the American people from my role as a governor. So I think he himself took the position that it would be a distraction to continue in that role. I personally think he's a person of great distinction that always managed himself in a way that was appropriate, and I appreciate the role that he played. I didn't always agree with him. He was always agreeable and certainly was able to communicate with him our disagreement. And again, I just want to thank him, because I think what he just did is what a lot of people can't do, and that is make a decision that for the betterment of the situation that we're in for our country, he would purposely do something that wasn't necessarily beneficial to him personally. But anyway, I'd be remiss if I didn't thank him. But since I am asking tough questions, I do want to ask you another tough question. See if you know this one. Do you know what the Ponte del Sospiri is?
I do not.
Okay. You might know it in English. It's called the Bridge of Sighs. Are you familiar with the Bridge of Sighs?
Rings a bell. I can't.
Okay. In Venice, the Doge, who was the leader of Venice, had a palace. And across the palace, he had his prison. And oftentimes, a prisoner would be taken into the palace and interrogated in a very rough way, and then be tortured. And then after he confessed to something he normally didn't do, he would have to walk over the bridge and then into the dungeon and oftentimes die there. However, before he completed the task of crossing the bridge, there are two windows there. And he would stop at the windows and he'd look out over the magnificent city of Venice. And it's the last time, oftentimes, that person would get to see Venice. And so he'd sigh. And that's why it's called the Bridge of Sighs. Ponte del Sospiri. I bring that up because I think a lot of Americans feel that way right now. That
they can feel like that. I understand that. Like, I understand that people feel like that.
And they're worried.
And you're always going to have people that feel like that. Well, there's a whole other discussion. I'm never going to get into it right now.
Now, I was very proud of you when you stood up and said, I can't be fired. The president can't fire me. I'm staying. Can anyone up here fire you?
What?
Any one up
Yeah.
there? No single person can.
No single person can, right? I hope you continue with that independence, because I think at this moment is very important. Someone mentioned it earlier, and I think it is very, very important. So, with that out of the way, I did want to talk about the dual mandate, especially the employment issue. For a lot of people in America, their job really is the most important thing for them, not even their investment.
Just a note here that we are at the gamma flip, and we are right at resistance on the hourly trigger and half-hour trigger.
It's so important to be part of the dual mandate.
This is where you take the money
In any way, the dual mandate?
and you let the FOMOers
Who has
touch the volatility in here, the live wire.
only Congress?
You get back in above this area on a back test to go higher.
Say that again, sorry?
Congress would need to pass a bill to change the dual mandate that the president signs.
That's right. And so I hope that you maintain your independence and at the same time follow the law that there's a dual mandate. And that's, I think, very
Why wouldn't he? Why wouldn't he do that?
Thank you for your service. I thank Michael Barr for service. I know he's going to continue to serve. I know he'll serve honorably like he always has. And with that, Mr. Chairman, I yield back.
The gentleman yields back. We recognize the gentleman from Middle Tennessee, Mr. Rose.
Yeah, talking monkey, take the money here, man. Just as we come into this vol, you just take the money, let the FOMOers do this right here,
Thank you, Chair Powell.
and then you come back in on a back test.
Chair Powell, you may recall the last time we spoke, I brought up the issue of credit risk transfers, CRTs, and urged you to allocate more resources to ensure that that framework applicants were receiving decisions from the.
So you can see it there.
I've recently heard back from stakeholders that they are receiving decisions from the Federal Reserve regarding CRT applications. I hope that the Federal Reserve team continues to be focused on cutting down the backlog so that financial institutions can take risk off their balance sheets. Thank you for that. However, I still have concerns that we are not fully optimizing the use of CRTs. In the case of mortgage risk, CRTs have successfully shifted risk from taxpayers to private capital, including capital markets and global reinsurers, while government-sponsored entities have clear regulatory treatment under.
He gets fucking annihilated, Dougie.
Financial institutions lack similar clarity, particularly under Basel III. I understand that the Federal Reserve has begun to provide guidance, but more is needed to ensure that financial institutions can effectively manage risk, stay competitive globally, and
God, like sitting in that chair for 2 straight days and just being like fucking bam, 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 hit myself over the head.
between banks and GSEs.
That's a great question. I will take your feedback back. I don't.
Look at him right now. He's got his hand on his lap. He's got his arm on the table. He's like, it's bourbon 330 right now.
Clarify and harmonize capital rules to promote financial.
Volatility burning off the market right now. Market's about to squeeze as this shit wraps up.
Take back your feedback, and that is our objective: is to be timely and thoughtful in that work.
Thank you. I appreciate that. In April 2024, Synapse Financial Technologies, a fintech company that provided banking-as-a-service solutions, filed for Chapter 11 bankruptcy. This event significantly impacted its partnerships with various fintech firms and banks, including Evolve Bank and Trust. To this day, I have constituents in Tennessee's 6th District who are not able to access thousands of dollars of their funds, and there has been no communication regarding the timeline for resolution. Chair Powell, since the Federal Reserve Board is a supervisor of the Evolve Bank and Trust, could you provide any updates on what you are doing to ensure that my constituents receive their funds and the expected timeline for them to receive their funds?
So as their supervisor, as you point out, we've been pressing that bank to get money back to their customers, and we're actively engaged with the bank as they take steps to do so and return that money. We're deeply concerned about the complaints that we've heard and aware of concerns raised during the bankruptcy proceedings. And to the extent there are violations of law, we'll follow up on that.
Thank you again. And are there any specific steps that my constituents could take to expedite the process or ensure that...
Here comes the squeeze, baby.
I'll have to come back to you on that. There may be, I don't have anything for you, though, on that today.
Thank you. And Chair Powell, is there anything
Trying to
else
break back into trend right now.
to prevent situations such as this on a going forward basis?
Well, I think when we see things, it's a lot of pattern recognition.
Yeah, that's what we're talking about in the Discord right now. Is ready to get shit-faced.
All right, thank you. I think there has been a lack of appreciation for the work that President Trump has done to restore the American workforce. It is his example of calling federal employees back to the office that we are now seeing corporate America follow as well. Chair Powell, as the federal government and companies move
He's like, I don't give a fuck.
home policies and bring employees back,
What do I care about that?
how do you anticipate this shift will impact key economic indicators such as productivity, urban commercial real estate markets?
That's a really good question. I'm not sure of the answer. I've always felt that I am personally more productive in the office where I work, except on weekends when I work at home. But in terms of productivity, I think there are different views. I know a lot of CEOs feel strongly that people are more productive in the office, and we'll just have to see. I also think, though, that on the other side,
the CRE baby,
allow very high levels of labor force participation among, for example, women. We had all-time record high participation by women. So I think there are benefits from work from home. I hope we continue to realize those.
Gentleman's time's expired. The gentleman from Illinois, the ranking member on our Financial Institutions Subcommittee, Mr. Bill Foster, 5 minutes.
Hi. Thank you, and thank you for everything you do. I'd just like to get some sort of level setting on what you've been facing in recent. It's my understanding that your Inspector General in the Federal Reserve has not yet been fired. Is that correct?
That is correct.
Okay. And you've not also had the high-level resignations of senior personnel as they've had in Treasury? Nothing like that? So
no, nothing like that.
No, as of yet, no. And so no examples of, junior personnel being given administrative access to the systems, your technical systems?
Are you talking now about the payment systems that
payment systems or other technical systems?
No.
Email systems,
No.
anything like that?
None of that.
Okay, all right. So far, you've not suffered through what Treasury has.
Oh.
Have you had any inquiries from other central bankers or commercial bankers from around the world about, what can we, uncertainty about whether the Federal Reserve will be able to continue doing its job if you suffer the same sort of intrusion that Treasury did?
I haven't, no.
So you haven't, they haven't called you up and said, well, what the heck is going on? Do we have to defend ourselves against, unknown software being installed on the system? So
I haven't had any such calls.
Okay, all right. Let's see. We've also seen calls to resumption of calls to audit the Fed. All right, which is, as you can remember from that gentleman up on the wall there, this was a big theme of, and first off, the Fed does get audited, correct?
We are audited in the sense that everyone understands that word to mean, which is we have a Big Four accounting firm who looks at our books and gives us an opinion, does an audit, and publishes that opinion. That's all public.
130.
My recollection, there have never been any big problems uncovered in
No,
this.
we actually have quite a simple business model, although we have a large balance sheet. We're like a big community bank, only with no credit risk and very simple.
So in the ordinary sense, talk of auditing the Fed is
Fully
makes
audited.
no sense. It makes no sense. But what was really meant, certainly during the time when we were talking a decade ago, I guess, it was really all about micromanaging Fed monetary policy, that they said we want to audit the monetary policy, which doesn't really make sense since it's a policy thing. Do you have any indication of whether the resumption of calls to audit the Fed will be, audits or some new effort to politically micromanage the monetary policy?
I have no way of knowing. Really what it is the GAO is free to work on every area of the Fed except monetary policy. And
I don't know if we can get that 608 today.
all over the place over many years.
607, 79. Where's
Audit monetary policy, and
it's right here? Sell it down.
the threat would be if that were to go away, you'd have
Right in there.
investigations into decisions on monetary policy, and that would be a different thing. I think it was designed by its designer to be a step on the way to eliminating the Fed.
That is correct. Yeah, the calls to end the Fed came from the same wing of the Republican Party, and I guess still exists. I think we're up to something like 20 Republican sponsors of the end of the Fed bill. Let's see, I was sort of surprised to see that the word tariff only occurred twice in your monetary policy report, whereas if you look at financial trade journals, it's mentioned 5 times above the fold, and for those that read hard copies. So, this must be a very hard thing for you to deal with because, as you're aware, Trump's tariffs and other trade policies put us in a manufacturing recession a year before COVID hit. And so this is not a small thing if these resume. But you have to sort of filter out the chaotic noise and the guidance that varies hour by hour or week by week. So how do you actually filter that?
That's 1:30.
Let's wait to see what the actual policies are. But then that depends. If you listen,
1:30. What time do the fucking Robin Hooders going to be out? 3:30.
You have to feed these into your
bastard little fucking Robin Hooders.
And how do you do that filtering when there's just so much random noise on the signal?
Well, I think it's straightforward now in the sense that no one knows pretty much what the exact policies will be. That's still evolving, and so you can't really take action. You can do analysis of various hypothetical things, and we've been doing a lot of that. But ultimately, it matters what happens. What's tariffed, for how long? Are there substitutes? There are many questions that will have to be answered. And even then, the question will be how much of that will transfer to the consumer. As you know, that can fall on the exporter, the importer, or the retailer, or the consumer.
Or in my case, manufacturers are on both ends of this.
Yeah. So we really just don't.
So if that sort of analysis,
Gentleman's time has expired.
Congress, it would be great. So thank you.
The gentleman from South Carolina, Mr. Norman's recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you, Mr. Powell. I appreciate you coming and addressing our body. In 2011, Vice Chairman Yellen made a statement about the concern
the felon
debt situation and the imbalance that we have with our budget. In the fourth quarter, when she made the statement, the federal debt held by the public was, as a percentage of GDP, was 64.75%. Now, the same debt to GDP as identified by CBO was 99% at the end of 24. Do you express the same concern that Ms. Yellen had about the severity of where we are with our continued long-term imbalance?
I have done so on many occasions. And essentially that the U.S., we're on an unsustainable path. And the debt level isn't unsustainable, but the path is sustainable, and certainly it's past time for Congress to work on that. But that's what I can say. I can't say more than that.
What do you think the benchmark would be? We're in the middle of the budget situation now, trying to debate, particularly with reconciliation. What would you say is a benchmark that would ease? What level of cuts, in your opinion, would ease your concern over what we're doing? We're $37 trillion now, but when you add the the mandatory spending we have on Social Security, as examples, going bankrupt in 35. Highway Trust Fund running an imbalance. What level do you think will give you, I guess, some assurance that we're going to get our house in order?
So I don't have a specific number. It wouldn't be appropriate, but I will say this. In having looked at this, the successful programs to get back on the right track, they tend to make progress over a long period of time. And in other words, you've got to get to a place where the economy is growing faster than the debt, and then you need to stay on that path for 20 years. This is not the kind of thing where we can fix it overnight. We just need to be making progress. And right now, we're running very large deficits at a time of full employment. So we need to start moving. You're either making progress or you're not. Right now, we're not. So the key thing is to just, is for it to become a big issue, and then people work together. The things that need to be done.
Let's take a look here.
Only be done on a bipartisan basis. Only. These are the things that need to be dealt with. Cannot be dealt with by one.
So here is SPX Gamma.
It's going to be a tall order.
It is.
To get
bipartisan. The order only grows. It gets taller every year.
There's a question if we.
Yeah, it does. That's
If we roll down and then up and then close and then up, right here, right, down, up.
level of what President Trump is doing with giving Americans confidence with the Dose Commission, which is giving Americans hope that we're seeing things that are being spent of the taxpayers' dollars that we never imagined that we couldn't get to. Now he's exposing that.
On a larger time frame here, this is like 130.
Under Trump, that we will be able to reach this year and the years after, because the 20 years you're talking about, we've got to have a pretty solid, it can't be, it's got to be, would you say 1.8, 2% growth of GDP?
You know, for a long time, people thought that U.S. potential growth was a little bit below 2%. I think we've had we've had 5 years of good productivity growth, and we hope
like this is the place to tee off, right?
it might be 2 or.
They come in.
If you're talking about long-term budget assumptions, though, I'd be concerned.
Back up, and then down.
You think that's doable?
2%, yes.
On another note, the stress tests that banks run.
This one goes right about there, but it should result in up.
Information on everything but how that stress test relates to them. Why is it not further? Why is it
1, 2, 3?
What it is? Why is it not brought
No.
more?
1,
in your opinion?
Why the
2, 3, 4, 5.
The theory from the beginning was to not to disclose the whole
2,
models
3,
the way that they worked, because
4.
in a way that felt like giving the test in advance. This was a brand new initiative that started coming out of the global financial crisis, very successful generally, but over time, the argument for not
I think this holds here.
giving the models out has, I think, weakened, and also the law has moved. The Supreme Court has moved to reduce the level of deference.
It's 1:30 in the afternoon right here.
Our obligations to be transparent.
Here's 1:30.
And so it's time we
Gentleman's
think
time
to
has
disclose
expired.
the models.
Thank you so much.
Thank you.
Thank the gentleman. Gentleman yields back. The gentlewoman from Texas, Ms. Gonzalez, is recognized for 5 minutes.
Thank you, Mr. Chairman.
Could make the argument that it goes at 1.
This morning. As you know, the United Kingdom, European Union, Mexico, Brazil, India, and Japan all allow non-bank payment service providers access to their
There's a drop in here somewhere.
improved access to liquidity for users by
It's not going to be big. There's going to be you go up here and you hit that one, and then there's going to be a pullback to the 5 minute, and then up there.
I believe this is especially important for those who have tighter cash flows, and for those sending payments to loved ones abroad, both which happens quite frequently in South Texas and across the country. With that in mind, does the Federal Reserve plan to allow non-bank payment service providers access to Fed?
We hit this before, so I think this holds.
That right now, what we really want to do is to have the consumer not care. The consumer can have an access, but our payment rails go through the banks.
This would come right here.
Through a bank.
Yeah. So there's no plans on changing that?
No. Not that I'm aware of.
Getting on the consumer price index, what consumer price index reading would cause you to cut rates? Is it 2% exactly, or is it a trend closer to 2%? How much more movement downward do you need to see in CPI for the Fed to start looking at rate cuts?
Something like that. You got the high there. You get the new high right here. Pull it back down. Get the last high right here, 130. There's your bull trade. Saw it back down into 233.
We want to see further progress. We didn't actually.
Like 130, they try to sell you down here until like 2:30, 3 p.m. Get out the Robin Hooders, then whoop, right up into 4 p.m.
There. So we want to see a resumption of progress. I'm not going to put a really specific number on it. I mean, the truth is the economy is strong, the labor market's solid, and we have the luxury of being able to wait and let our restrictive policy work to get inflation coming down again, and that's what we're doing.
Is there any concern at the Fed that deporting millions of undocumented workers that do a lot of crucial work in the agriculture industry, in construction, in the hospitality business will create upwardly pressure on inflation in this country?
So we don't, we don't have concerns about policies. We we just look at the data, and labor supply has actually, the new labor supply from immigration has actually come down quite sharply over the second half of last year, and there's every reason to think that will continue. Demand has also come down, so that the unemployment rate has actually been flat since July. We're going to look at
But would
supply
it
and
taking
demand.
1 million workers out of the economy have a direct impact on
It could. We'll just have to see how supply and demand match up. In any case, we don't. We're not here to comment on immigration. We're here to achieve.
Right. No,
maximum
I totally get that. I'm just figuring if you take 1 million people out of the workforce, how do we make that up, and how would that have an upwardly inflationary pressure on
Just a note here, there's a 4-trigger bull cluster coming right now.
Cleveland?
5-minute triggers right behind it. We've got a 1-minute trigger, half-hour trigger, hourly trigger for a big-ass squeeze.
Rate. Does that type of deflation
Come back down for the 5-minute trigger in a moment. So over here.
Yes, but the thing is, what we're really looking at is, in the aggregate, housing services inflation. I believe that's a measure of current rents, so market rents that
Watch out for a squeeze.
have not been showing much inflation for a long time. Market rents don't make their way into rents until leases turn over, existing leases turn over, and that's been the slow part of the process. We have seen a lot of progress on that, but we're not there yet. We're not back to levels of housing services inflation, which is what I described, but we're getting there. We're making clear progress.
You recently said that employment prospects are solid, and construction employment, which represents 6.1% of all private employment, is falling significantly. Does this concern you?
So we look at the aggregate numbers. There are always industries that are growing and not growing. I think the last few job reports have been significant job creation. You saw the one here a week or so ago, which revised up the last 2 months and strong job creation. In fact, it looks like the job creation may actually have picked up a little bit around the end of the year.
If you are not in this trade and you want to be in it, there could be a moment of weakness to this 5-minute trigger right here, this little bar.
Time the economy face uncertainty.
Right here. You're looking to catch this right here. If it can come back down and slam it straight home.
We're monitoring them carefully, yes.
Thank you. I yield back.
Gentleman yields back.
Thank you, Mr. Chairman, and thank you very much, Chairman Powell. Good to see you. I did recently chair an oversight subcommittee hearing on debanking. During our hearing, we revealed evidence that the FDIC directly pressured banks to debank crypto. What do you think of that situation?
So it's, I think we're all struck at the number of complaints and the breadth of them, and want to understand. We want to take a fresh look at this area. It's not something we're not telling banks that they can't bank certain people from certain institutions, anything like that. Nonetheless, we're hearing these things, and I take at least some of it is real. So we need to understand it and stop it from happening, because if you look at what the banks are saying, they're really saying that a lot of this is that the enforcement of anti-money laundering is so tough that at any sign, any flag at all that gets raised, they just cut people off, and they can't explain. So that may be part of it, but I think we need to do some work, get to the bottom of it, and address this.
Thanks, Chairman. There were hundreds of letters, by the way, that were pretty clear that banks should avoid doing business with crypto companies. No such pause letters, as they're referred to, or communications of this coming from the Fed?
Not that I'm aware of. No, it's not been our policy. Our banks are doing business with crypto companies, and they're doing crypto inside the bank. Some of them are. We've been a little bit careful with it, but I really don't think we've been telling people they can't do it.
I think a lot of people, including us, would appreciate you doing a careful review of that. The banking industry itself is concerned that there's no vice chair of supervision to provide clarity on the multiple issues from Basel III to Reg II.
Do you guys know a lot about this stuff? There's like
You have an acting vice chair of supervision. When do you expect to have an acting vice chair?
We don't have. We need
the
vice chair if we're going to have a vice.
Do you guys know about? Do any guys have any ideas about the money washing just Americans are doing at large right now?
The way we look at it,
There's a lot of like Americans that are trading triple leveraged pump and dump schemes with crypto.
Very constructive.
And then they trade it overseas markets, and then they wash the cash when it comes back into the U.S. so they don't have to claim it on their taxes.
Yesterday
It's rampant right now in crypto.
could be finalized fairly quickly, given last year's extensive public comment.
Forget like terrorism and all that other crap. There's a whole, there's like so much fraud right now in crypto. It's insane.
And as you
I don't know if it's fraud. Some of it's just taxes. I wouldn't call it fraud. I would say, what'd you call it? Tax,
not looking for anything too drastic.
tax avoidance.
That's correct.
Okay, great. So the CPI this morning came in a little hotter than expected at 3%. Did this surprise you?
No.
It was, the CPI reading was above almost every forecast, but I would just offer a note of caution.
No, it wasn't.
Two notes of caution. One is we don't get excited about one or two good readings, and we don't get excited about one or two bad readings.
Right.
The second thing, though, is we target PCE inflation because we think it's simply a better measure of inflation.
Mm-hmm.
And so you need to know the translation from CPI to PCE, and we get more data on that. Tomorrow we'll get the producer price index. So I think it's always wise, and you know the people who follow us closely know this, that we'll know actually what the PCE readings are, you know, late tomorrow.
Okay. So in the past, as you well know, you called inflation transitory. Then the Fed signaled 3 rate cuts for 2024, and the market's priced in 6. Now that you're saying that there's no rush to cut rates.
Not even cut. It's cut or increase.
Stabilizing markets or fueling volatility.
This is wrong.
So this is the summary of economic projections, the dot plot. And, you know, I mean, I think markets like it.
Tell them it's gambling, Jerome.
It is the forward guidance that we give. We don't really mean it.
Tell them it's fucking pure gambling. It's pure bullshit.
Sometimes they take it too seriously. I think most market participants understand that it's highly conditional and dependent on what actually happens in the economy.
And that's a
gambling.
Yeah. And when we talk about getting rid of it, market participants will tell you, please don't do that.
Okay.
Yes.
And wouldn't that have a positive effect on inflation, allowing you to perhaps lower interest rates and, of course, reduce our deficit spending?
So this is if $1 trillion of spending were eliminated.
Sometimes I fucking love J. Powell. I do.
Run that through a model, but I mean, ultimately,
I do. Sometimes I love him for being honest.
exactly how it would affect the economy.
Yeah, dude.
$1 billion budget at the Fed. Would you welcome?
He is the fucking man.
Have a look under the hood.
You know, we haven't heard from them, and I've got nothing for you on that today.
Thank you, Chairman. I yield back, Chairman.
Gentleman, time has expired. The gentleman from Illinois, Mr. Caston, is recognized for 5 minutes.
Thank you, Mr. Chair. Chair Powell, always a pleasure to see you again. I want to start, and I don't expect you to comment on the policy here, but there's been a number of actions from the Trump administration of scrubbing or limiting data that the private sector has historically.
What about the dot plot? You mean gambling? It's not gambling, bro. It's the dot plot. It matters. Okay.
Information about breaking.
All right. Keep thinking that. All right. Sure.
I realize that you don't rely exclusively on government data, but has there been anything that has happened since the Trump White House was sworn in that has limited the Fed's access to information you need to fulfill your dual mandate?
Not that I'm aware of, no.
If there was, will you commit to sharing it with Congress so that we can fulfill our oversight responsibilities?
Sure.
Okay. When you were here in July, I'd asked you this question. I just want to confirm that you still feel the same way. Is it still your view that the Federal Reserve that climate change constitutes an emerging threat to U.S. financial stability?
I guess I would say it this way. I wouldn't say that climate change is currently a threat to U.S. financial stability.
An emerging threat.
I would say that it may emerge over time as such.
Okay, so $250 billion of losses in California. We've now got multiple states where the insurer of last resort is insolvent, reporting today that California is having to bail it out. I know we have a difference of opinion on NGFS. I don't want to go into that, but is the Fed monitoring what is happening to our financial system as those insurers pull out, as insurance rates goes up and people's both access to property insurance and the cost of insurance are going up? Are you monitoring what's happening systemically in our economy as a result of that?
Yes. The question, though, if the question is it a threat to the financial stability of the United States? That's really the question. And of course, we're following that very, very carefully.
Okay, so if you're monitoring it, where is the risk that was being backed by the insurance industry moving? Where in the economy does that risk now live?
So insurance companies, as you know, can cancel policies and not issue them, and they can leave states, and they're doing a lot of that. So where do those risks fall? They fall on homeowners and other beneficiaries, and they fall on state governments and to some extent the federal government. But they don't cause large financial institutions to fail.
Are you seeing shifts in mortgagers, mortgage servicers, their willingness to provide loans to homes as those insurance rates go up or disappear?
Implicitly, if you can't get insurance, then there won't be a mortgage. So
Okay.
I can't point to episodes where that's happening, but that's certainly where this looks like it's headed.
Okay, because, I mean, there has been reports going back several years now that the more prone your property is to flood risk, to fire risk, the more likely you are as a bank to offload that onto Fannie and Freddie, right? We've seen that data happening. So that then raises the question of, and this is maybe just purely academic and wonky, if you own a set of cash flows and you want to sell them to me, and we both have full information, I'm only going to buy them from you at an accretive value to you to the extent that I have a lower cost of money than you do, right? Just, I mean, sort of like Econ 101, right? So if we own Fannie and Freddie right now because they're in receivership and they are throwing off a string of cash flows to the Treasury, setting aside the nuances of how the CBO scores all these sorts of things, isn't the sale of Fannie and Freddie on the assumption that the buyer and seller have perfect information, the same information on both sides of that transaction, if that's accretive to the American taxpayer, doesn't that implicitly assume that we have to sell to somebody with a lower cost of capital than we do?
That's I followed your logic there. Yeah.
Okay, and that would only not be true to the extent, I suppose, either that the buyer violates every rule I had in my M&A career of paying for upside, as they say, or that the buyer lacked information that the seller had, right?
Fair.
Okay. So what I'd like to understand from you is, does that create a conflict of interest for the United States government? Because if we have
The buyer last resort, right? That's why we have the government.
being scrubbed from our data sets, and we have a White House that would like to sell Fannie and Freddie, are we committed to efficient markets that depend on accurate, transparent information, or are we committed to making a quick buck, in which case we might want
Keep an eye right here. I want you guys to see something here, just pure and clean.
committed to transparent markets, I guess.
Watch this closely here, okay?
Second one, do you feel that conflict?
You just come down here and then wham, we close it, okay? Keep your eyes on. Not close it, but it would actually fall back down again, but just keep an eye on like a liquidation break as this presser ends.
Sure, and there would be good reasons for that, but if that is coming at the expense of value to the American taxpayer, we
And I want to show you that really quick here.
We have private sector banks. You know, we could make all credit could be made cheaper if offered by the central
yield back
government.
So this is 1148 right here, just so you can see it right here, right?
Thank you, Mr. Chairman, and thank you to Chair Powell for joining us today.
The market just rolls down really quick,
stress testing,
right? And then wham, straight up there. Get me?
because the ground has shifted very substantially in administrative law, end quote. And while yes, the ground has certainly shifted since last year, I'm slightly confused because after reading up on the banking industry's lawsuit against the Fed, I do not see a direct connection between their case and the loss of Chevron deference. Their case seems to center on the Fed not complying with the long-established process laid out by the Administrative Procedures Act, and while some at the Fed may not classify stress tests as a rulemaking, when they require banks to alter their capital levels, they have the effect of rulemaking. So, Chair Powell, I'm hoping you can clear this up for me. Is this a matter of adapting to a post-Chevron world, or was this the Fed unlawfully using stress tests as a backdoor to increase capital requirements on banks without issuing a formal rulemaking and having to go through the legally required notice and comment APA process?
Pretty good chance that the next sentence I say would be evidence in the court case that we're having. So I'm not gonna get into just debating what the law is because we're in litigation. I will say it's not just Chevron, though. I think it's clear from other cases that expectations under the Administrative Procedure Act are also raised, just generally speaking. And so we felt that, like, overall, that really has changed the playing field.
Okay, well, any changes in capital requirements is very disruptive, and having a more predictable process is helpful for long-term stability of the U.S. economy. On to the next question. So foreign banks, many of which are smaller than their domestic counterparts, play a larger role in providing financing in the Treasury market. U.S. banks, on the other hand, are less involved than they could be, primarily because regulators have made this activity less profitable for them. Stricter capital requirements, liquidity buffers, and compliance costs stemming from regulations like Dodd-Frank make it more costly for U.S. banks to engage in Treasury market operations, particularly in repo and securities lending. As a result, foreign banks, facing fewer regulatory hurdles, have stepped in to take on this crucial role, providing the liquidity and financing needed. This shift has significantly altered the market landscape, with foreign institutions now holding a larger share of financing operations that were once dominated by U.S. banks. So my question is this: why are we setting up a system where the U.S. Treasury market needs to rely on so much on foreign banks for proper functioning, and do you see that as a national security threat?
I see the trend that I see is that we have very significantly raised the capital costs of supporting market activity, and especially for low-risk activities that are low-risk, low-return. What's happened is the amount of treasuries has grown much greater than, is now much greater than the capital that's allocated to intermediate. So that's why you see low intermediation and relative lack of liquidity, and I think it's appropriate to do something about that. And that's something that we'll be looking at, is to reduce the enhanced supplemental leverage ratio to account for that. This is something that we proposed before, which I think is intended to increase liquidity in the capital markets for banks subject to it.
Thank you for that. I want to end on a positive note. I want to discuss the optimism among the American public. Small business optimism experienced its largest increase in 40 years following President Trump's recent election, with continued positive momentum in the months since. This surge reflects growing confidence in the economy, spurred by expectations of favorable policies and reduced regulatory burdens for small businesses. The index is not only well above its 50-year average, but also reached its highest point in December since late 2018. This shift has caught the attention of many across the economic landscape. Back home in South Carolina, I frequently speak with small business owners who are enthusiastic about the future and eager to help their businesses thrive under the new administration. So my question is this: how do you see this significant jump in optimism translating into tangible outcomes in terms of investment, hiring, and overall growth for small businesses?
So we know that sentiment really matters. It's really hard to model it, but you do think about it when you're thinking about your forecast. You think about optimism and that kind of thing, because that's what supports investment. All the investments that companies make, they have to have on some level optimism that it's worth shelling out this money to do what it is they're doing. So it's a key part of how economies work.
And given the potential for increased investment, are there specific policy adjustments or economic factors that you're watching closely to ensure that this optimism leads to sustainable growth in the long term?
Best thing we can do is achieve price stability and also full employment, maximum employment, and then create a stable environment where businesses and households can not worry about inflation, and we have steady, sustainable growth.
And as one of the millions of Americans about to get a mortgage, interest rates going down would be helpful. Thank you, Mr. Chair. I yield back.
Gentleman yields back. The gentlewoman from Massachusetts, Ms. Presley, is recognized for 5 minutes.
Chairman Powell, we're at an inflection point, and we need leaders who are courageous enough to speak truth and who are committed to helping every person who calls this country home. There are many who wrongfully justify Trump's presidency and the lawless work of DOJ as good for the economy. Well, Chairman Powell, you actually know something about the economy. The Federal Reserve has a dual mandate, maximizing employment and stabilizing prices. And it is clear to me that Donald Trump and Elon Musk's actions are impeding your work. The threats of tariffs against our allies are not helping the Fed do its job, nor will they help people across our country. The Boston Federal Reserve put out a report last week which estimated tariffs would be inflationary and raise prices. Chair, I ask unanimous consent to enter into the record the report titled "The Impact of Tariffs on Inflation." Additionally, Donald Trump has threatened mass deportations. He seeks to terrorize immigrant communities and separate families, claiming it will help the economy. I don't think so. And neither does the Peterson Institute for International Economics, who estimated that employment would drop 7% Chair, I ask unanimous consent to enter into the record the report titled Mass Deportations Would Harm the U.S. Economy.
Without objection.
Now, Chairman Powell, I want the Federal Reserve to be successful. So if Elon Musk and his Doge bros were to walk into the Federal Reserve, intimidate staff, access classified data, and take control of the agency, the same way they did USAID and the Consumer Financial Protection Bureau, would that help or hurt our economy?
We don't have that happening. I'm not going to speculate.
Well, on your own website, it says, quote, the Federal Reserve is accountable to the public and the U.S. Congress, unquote. So I would like to see a clear answer on this. Your staff are watching, Wall Street is watching, Donald and Elon are certainly watching, and we all want to know, what is your view if Doge does to the Federal Reserve what it has already done to other independent agencies?
What we're going to do at the Fed is keep our heads down and keep working, wait to see what new policies emerge, and try to make a thoughtful, sensible set of policies on our part once we understand the implications of those.
If Elon Musk or anyone from Doge attempts to access the Federal Reserve's private data, will you immediately alert the members of this committee?
Sure.
Thank you. This is as clear to me as night and day. Donald Trump and Elon Musk are not trying to help working class people. They're trying to help themselves. They want the Fed to be a tool that helps the rich get richer, banks get bigger, and regulations disappear altogether. But that is not your mandate. The Fed must maintain its independence and integrity. Put the interests of the public before Elon Musk. The world's richest man does not care about the price of eggs. He doesn't have to when he has already bought the presidency. I yield back.
The gentlewoman yields back. The gentlewoman from California, Ms. Kemp, recognized for 5 minutes.
Thank you, Chairman Hill and Chairman Powell.
Definitely problem child. Exactly problem child.
I commend you again for ignoring the outside noise and staying true to Fed's dual mandate. Chairman Powell, it seems the advent of artificial intelligence and technologies has helped the United States increase productivity when compared to other countries around the world. That makes our country more competitive and economic growth. So do you believe that this boom in productivity is sustainable in the long term?
Oh, God, that's terrible.
How does
that's terrible, Binky.
affect your models to forecast inflation, therefore monetary policy?
We have had a boom in productivity. It is most welcome. And of course, it would be great if it were sustained. I think if you look at the candidates that try to explain it, some of them are kind of one-time things, and some of them could be more sustained. You mentioned technology and AI. To the extent that's part of it, that could be a sustainable increase in the rate of growth and productivity. To the extent it was more about job reallocation, people switching jobs coming out of the pandemic, that's kind of a one-time thing. Also, we had a wave of startups, a wave of early stage companies, startups. That also tends to be linked to productivity. That too could just be a one-time increase in productivity. Literally, no one has the record of being able to successfully forecast productivity for very long. But again, it's going to depend on many things, and as long as we have this increased productivity, it's most welcome and important.
Thank you. Over the past decade, we've seen Fed intervene with more regular frequency to maintain the orderly functioning of the U.S. Treasury market much more than decades before. It seemed like the private sector was able to manage this without too much Fed intervention pre-financial crisis, and a long-standing and growing bipartisan consensus that the SLR and other...
The fucking Discord is going bananas right now.
So, what do you think the solution is to reduce the need for frequent Fed intervention?
So I do think we need to work on Treasury market structure, and part of that answer can be, and I think will be, reducing the calibration of the supplemental leverage ratio.
Come on down, Spoos.
Long supported, and for
Bring blood.
the quantity of treasuries has grown really significantly, and the capital allocated to intermediating trade,
Just let it rain.
in fact, has shrunk.
Give me the 5-minute check back. Bring it all the way down to 1148.
The things that we can and should do is to reduce the calibration of that measure.
Thank you.
Make it rain a puddle of blood.
In response to the fallout of Silicon Valley Bank, it is my understanding that the Fed is analyzing ways to create a more efficient process for financial institutions to access the discount window. One issue that has come up is that it can take extended periods of time to assess and determine the lendable value of collateral, potentially denying the institution's ability to access liquidity quickly. Is the Fed looking at ways to streamline the process to assess and determine the value of collateral at discount window?
We are looking at, so there are sort of impediments to the efficiency of the discount window, and those are things we're working hard on. There's also the question of stigma, though.
Just come on down just a little bit more.
Because of the so-called stigma of using it, and that is a...
Come on down.
We're also working on that one.
Just a little bit more.
The fast review of the discount window operations. Can you give us an update on what problems the Fed was able to identify, what solutions you're pursuing, and what the estimated timeline?
Oh, just do it.
So the study is ongoing right now. The work's ongoing, but essentially, you
give it up.
It's inefficient. It's slow.
Yes.
We need to have
Just a little bit more.
Processes that are very quick and very efficient. Efficient in a crisis. General modernization, investing in technology,
Spill rain blood down on these bowls.
turning it into something that's
Just a little bit more.
And we're working on that too.
The discount window 24/7 could really help the banks in California.
Keep going.
Especially the state
Yes.
of Southern California that I represent. Thank you.
Thank you.
Gentlewoman yields back. The gentleman from New York, Mr. Torres, is recognized for 5 minutes.
Thank you, Mr. Chair. President Donald Trump has been asserting among the most aggressive and expansive claims of presidential power that we've seen.
Oh, yeah. Just come on down.
Taken the unitary executive theory to new extremes. He's claiming to have the authority to defund whatever agency he wishes, to abolish
Come on down to the front row.
and to fire whomever he wishes, even if it...
You're the next contestant on Buy Calls Cheap.
Mr. Chairman, suppose for a moment the president were to ignore the congressional statute that establishes the independence of the Federal Reserve. What economic consequences would result from the Fed losing its independence?
I think research over
Oh, God, yes. A little bit more.
jurisdiction shows that some degree of independence is very inflation under control, and the connection.
Come on, Dix.
If politicians are
Keep pumping, Dix.
like that, they're not going to be focused on the longer term.
Come on, dollar. Come on down.
To stay out of
Get that Dix pumping. Get that blood pumping. Come on down, baby.
or helping or hurting any political party or politician, but just on serving the public as a whole. That is
Keep pumping, Dix.
it's uniform, I think, across all advanced economy central banks.
Still no worries in VIX 9 day, though. VIX 9 day is like, that shit's going to be bought.
Sensitive.
They're going to buy it.
President Trump and Secretary Bessent granted Elon Musk and his team of outsiders
Bye.
system of the federal government, a system that is often described as America's checkbook. Would you, as the Federal Reserve Chair, ever grant a team of outsiders access to the Fed's central payment system without sufficient vetting and sufficient security clearance?
Well, no, but let's remember, we're the Treasury's fiscal agent. Everything we do is under their.
Oh, God, if we can get it down here, it's going to be fucking epic. If we can get it down here, we're going to get a fucking oopsie.
Recipients, and so we control access.
There's a bunch of bear shit in here.
Issues the payments
And just like move.
For us to pay someone, and we just pay. We don't we don't question payments. We just make the payments. And
Just like that. It's gonna be epic. I don't know if we can get down there, but we're trying.
What would be the danger of lightly granting access to the Fed's payment system to outsiders without sufficient vetting? Like, what could go wrong?
Well, the reason why we're so careful about it is just, for one thing, the possibility of mistakes and someone coming in and changing the code and things like that. So we have very careful access. Another one is just you open it up to more cyber risk and things like that. So, I mean, I think all, really important computer programming is subject to very, very careful access restrictions, and we're no exception.
Right. So you believe, as I do, that granting an insufficiently vetted team of outsiders access to the payment systems of the Treasury or the Fed would radically raise the risk of a cyber breach at the hands of foreign adversaries like China and Russia?
So we're talking hypothetically here. I can tell you that is not something that's happened relative to. We can speak to the systems that the Treasury has asked us to operate on their behalf, and that has not happened in those systems.
I represent one of the poorest congressional districts in America. I have cash-strapped constituents who pay exorbitant fees simply to transfer their own money, often to loved ones abroad. Access to FedWire could play a role in radically reducing the cost of remittances and payments for the lowest income Americans. What is your position on expanding FedWire access for the purpose of reducing the cost of remittances and payments?
We do, FedWire is really between banks. These are very large.
Goddamn bears can't put it together.
One of the world's most important, if not the most important, financial market utility. I don't think we're looking to open it up to, to retail customers. I think, faster retail payments and particularly.
Watch out, we're back to squeeze again. Fucking bears can't get it done for 5 minutes.
National sphere, and I think we all understand it's important.
They're gonna run this up on them now.
Risks of those.
The commercial real estate, do you feel that continues to be a ticking time bomb within the financial system? What's your sense of?
I wouldn't say that. So we've been saying, and I think it's still true, that this is a problem that's been with us and it's going to be with us for a while. If I can say something modestly constructive, it doesn't seem to be.
All right, yeah, me too. I'm gonna take a piss. I can't listen to this garbage anymore. Well, this isn't really garbage right here. This guy's being pretty legit. They're gonna try to squeeze this right now.
Understand their
Bears couldn't get it done. They took the shot at it. They tried.
Gentleman yields back.
So run this fucker up into like 1 o'clock, 1:30 here.
Thank you, Mr. Chairman.
We might not get the blood until after 1:30. Bulls winning again.
I know the Fed.
So we gotta wait now.
Adjustments to the Fed funds rate over the last.
Slide that over.
There's not been a lot of.
Slide that over. Move this over.
There really has been minimal impact on.
Here's 2 o'clock. Here's 2:30.
Would you expound on?
Sorry about that. Got to move some time frames over.
Starting to exist with respect to Fed rate monetary policy versus
over there.
General borrowing rates for.
I thought that. Whoa! Stop that.
Right. So
Bears took a shot at. They suck. So
and as
they're gonna run this fucker up now. Gonna get a nice squeeze here.
They've gone up and come.
Black correction looks probable.
And the reason is that we don't control long-term rates. They react to a whole bunch of different things. More deficit spending coming, including expectations of more growth and of risk of higher inflation, but not. So markets aren't pricing in higher inflation, but maybe pricing in that the risk of that is there, and that could be a reaction to new policies or not. But ultimately, though, what the increase in longer-term rates is really mostly not about Fed policy or our job of maintaining price stability. It's about other things, the term premium in particular. Be happy to meet with you, and go through this in a lot of detail, more than you can do here.
No, I would love to do that. One of the concerns I have, as well as a lot of my colleagues up here on the Hill.
Fucking Bears.
So much.
Fucking out there with their big paws taking a swipe at it. Fucking fail. God.
But I think it's also
We're back to the 2:30 time frame now. 1:30 pump into like 2 and then a fade at 2 o'clock. Here's 1:30, so you get the fade. You get the fade now to like that.
Fiscal policy from Capitol Hill.
You get the fade at like
yield positive results in
Look at the fade here at like 132 and come on down.
rates, not just for the federal government, but for the American consumer?
When you say fiscal policy,
Usual suspects.
reduce deficits.
So just a normal day, pump it up into 130. Faded it into like 233. Now there is another question here. We could pump all day long. We got to get up to. I have a big question here at the end of the day. Let's go over here and look at this really quick. This could pump all day because
Are we going to get on a sustainable path? And
let's look at this together. We got the initiation, right?
confidence in that, then they're going to need
Right here. Come down, right? This leg should be the biggest leg.
There's no
So if you were to measure this down here and down here,
I do
this leg could go moon, like right up here, and then up here. You might miss. It's possible that you miss this pullback today. It is possible. You ever like notice how we sell like 2 o'clock till 3?
Does have
Today could be one of those. I can't guarantee it, but it could be one of those days because this is the target up here. PT3 right there. So it is possible that you don't see.
not because of the American consumer.
It could be a negligible pullback. So if you're a Robinhood trader, well, they might fuck you here at like 330 or something like this. Is 230 right here. So you might make some money as a Robinhood trader, at least partially into the close. It's possible.
It's just something where, Chairman, you don't have to comment on that. It's something I think is important for the American people to understand.
But if you're a safe trader, I want to say this to you: if you're a safe trader, you want to be down here. Like you want to be looking to grab this low from like 1148 this morning, somewhere in here. So just be it's here. I got it here.
Trying to just take
So
children and figure out what the next
But-
stage is going to look like. People who are in the upper middle class, who are
Come on now.
businesses, building some real wealth for themselves and for their family. All of that.
There's an argument because they fucking missed this. That like so the Bears
It's fiscal health as
are
serious.
trying to get this down into here now, so that you get that one right, then you get that one, and they failed.
The U.S. will never.
So because they failed, you're likely going to see this push up into 2 o'clock, right? Bring it back down, and then we go up into 4 p.m. So
for retail wholesale purposes.
something like that. I'm going to take a quick break here. I got to take a piss and stuff. I've been sitting here since 9 a.m. It's almost 1 p.m. They're probably going to get rid of this.
the notion of a wholesale CBDC is really
They're probably going to stop this at some point, or stop this at some point. But
FedWire is
this is 2:30,
digital
3 p.m. Call it 3.
between banks. Is that a CBDC?
3 p.m. over there.
So
thank you, Chairman.
1:30. Probably put this over there,
The gentlewoman from Texas, Ms. Garcia, is recognized for 5
and I'll snap this line over there for you for 3 o'clock.
Chairman Powell, thank you so much for being here today. It's always a pleasure visiting with you.
Down there.
I'm going to talk about a topic that both Congressman Gonzalez and Representative Preston brought up, which is something that's, I think, does,
I'll be right back with you guys in a few minutes.
but I know certainly does impact my district in Texas. I'm really concerned about President Trump's mass deportations efforts and their impact on your dual mandate. I believe the last time you were in front of this committee, I asked you about the impact immigration had on monetary policy, given last year's Congressional Budget Office estimates. As a reminder, the report estimated
Exactly the pee bottle.
in 2033 will be larger by 5.2 million people, largely due to the immigration surge. Since then, there have been more reports and research about the impact the immigration has on our economy, both in maximizing the employment and stability in our prices. For example, immigrants are fulfilling lower paying and oftentimes dangerous jobs more frequently than U.S.-born workers. They earn more money, pay taxes, invest back in our economy through everyday goods and services, and help create even more jobs. A study done by the National Academies of Science, Engineering, and Medicine found that foreign-born workers, or as some people say, immigrants, pay $237,000 more in taxes over their lifetime than they receive in benefits. Let me say it again, $237,000 more. So these mass deportations will have a massive impact on both our economy and workforce, leading to a drop in production and spending. We're already seeing some of that in my district. Chairman Powell, I recognize that the Federal Reserve does not weigh in on policy, and so before you say that in your response, I already know that. However, immigrants' impact on our economy does impact both the unemployment and prices, as Representative Gonzalez detailed in terms of some of the work that they do. Does the Federal Reserve account for immigrants in its interest rate decisions?
Indirectly, yes. So we're looking at the labor market, and part of what drives growth in the labor market is population growth, and part of what drives population growth is immigration. So sure, it can matter, and sometimes it matters a lot.
Right. And do you look at the consumer price index in terms of the immigrants as consumers? And
SPY breaking back into trend.
Because they may get deported, they're buying less. That's what I'm hearing from businesses in my district.
I think things like that would show up in the aggregate data, but we don't single out any particular group for that.
Okay. So can you quickly list some of your Federal Reserve responsibilities, and do you have capacity to assume the role of being our consumer watchdog as the president now is focused on getting rid of the Consumer Financial Protection Bureau?
So before Dodd-Frank, the OCC, the FDIC, and the Fed all conducted consumer exams and enforcement for the banks that they regulate and supervise. So for us, it's state member banks, and for the FDIC, state non-member banks, for the OCC, national banks. Dodd-Frank took all banks over $10 billion in assets away just for purposes of consumer examinations and enforcement, gave them to the CFPB. Statutorily, you could give that back to us or not, but it's certainly possible to restate the old order, but that would have to be something.
No, I realize you've also said that your team will be there to get the job done. You've got your nose to the grind.
We sent a bunch of people over to CFPB. We would need those people back. We don't have the people now who could take that over. They moved many people from the Fed and the OCC and the FDIC.
So there would have to be a reallocation of resources.
Yes.
Okay. All right. So sounds like you're obviously willing to do it, and we may have to convince the president to make that reallocation of resources. So thank you for that. And Mr. Chairman, now I'd like to ask for unanimous consent to submit for the record 3 articles. One, the Brookings, the labor market impact on deportations, and the other, the Federal Reserve Bank of Dallas, migration to Texas, fills critical gaps in workforce, and the second one on unprecedented immigration surge boosts job growth.
Without objection.
And I yield back with 2 seconds.
Gentleman yields back. Last member to question the chairman today will be the gentleman from New York, the vice chairman of the Subcommittee on Capital Markets, Mr. Garbarino, and you're now recognized for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, it's good to see you again. After the last Open Market Committee meeting, you said that the labor market conditions remain solid, unemployment has stabilized, and conditions in the labor market are...
Note that a bond auction is coming up in just a moment.
Jobs report this past Friday that indicated the economy added 140,000 jobs during the month of January. Yet, when you peel back this data and look at recent employment data for the smallest of small businesses, the mom and pop shops, so firms without, not with 100 employees like those included in the jobs report, you see that small businesses are actually consistently losing jobs. In fact, the latest Intuit QuickBooks Small Business Index showed that employment for U.S. small businesses with 1 to 9 employees decreased by 42,000 jobs compared to January. Last month, in my home state of New York, small business employment decreased by 0.33% and revenue decreased by 0.62%, which is a decrease of $350 per small business on average. Do you believe that we are seeing the same economic and business trends between companies with fewer than 10 employees and larger companies?
I guess not. No, I mean, I think it's always the case that there are differences between sectors and size companies and all that, and we're really left with looking at the aggregate numbers.
Do you take into account the current macroeconomic trends of the smallest of the small businesses when setting policies?
We do.
You do?
Yeah. I mean, well, for one thing, we read the same data you do. The Reserve Bank presidents come in, talk about their districts at length, and they talk about, if you read the beige book, they're going to talk about small businesses, nonprofits, everything. So we look at everything, but at the end of the day, there's only one national unemployment rate, but there are many, many subtle changes in the data that we monitor too.
We all know small businesses drive the economy, and I know there's a company in my district, Brinkman Hardware, 40 years ago, they started with less than 10 employees. Now they have over 200. So they are able to grow, and they do great work. But I think just making sure monetary policy really does focus on helping small businesses grow is key to making sure the economy continues to grow. I'd like to move on to a topic that we've discussed on a few different occasions, Basel III Endgame. It is well known that I had some serious concerns with the initial proposal. One of those concerns that we haven't discussed is how the proposal would have impacted the securitization framework. At the time of the proposal, there was no narrative explanation, data, quantitative analysis, or financial modeling rationale for why the P factor was doubled. While I understand that Mr. Barr promised we'd see an economic analysis to support the proposed change, I believe that was never released. So, Chairman Powell, I'm wondering, in your opinion, have you seen any market pressures or changes that would have necessitated such an increase in the P factor?
I can't point to anything. I will say that we're going to look at all of that again when we get together again with the other agencies and try to move this forward.
Okay, well, the proposed doubling of the P factor would significantly increase the amount of capital required for securitization exposures, making securitization more expensive for banks to participate in and raising the cost of limiting the availability of credit for households and businesses. I appreciate that you will look at that, but given how this proposed change may negatively impact a bank's ability to act as market makers in the securitization markets, when looking at this again, like you just said you would, can you commit to review this substantial increase given its outsized impact?
Sure.
I appreciate that, Chairman. And I just want to expand on one other topic that my colleague Representative Lucas brought up earlier. Over the past decade, we've seen the Fed intervene with more regular frequency to maintain orderly functioning of the U.S. Treasury market, much more so than decades before. It seems like the private sector was able to manage this without too much Fed intervention pre-financial crisis. Do you think regulation like supplemental leverage ratio, which some of your colleagues have commented on, is causing this? And if so, what do you think the solution is which will reduce the need for frequent Fed intervention?
I think part of the answer is going to be to reduce the calibration of the supplemental leverage ratio. There are a number of things that probably need to happen with Treasury market structure, but that's one of them.
That's one of the solutions, but do you think there's other things, and you'll all work on that?
I do, yeah.
Okay, I appreciate that, Chairman. Thank you very much for being here today, and I yield back.
Gentleman yields back. I want to thank Chairman Powell for being with us today. Thank you for your testimony. Without all objections, all members will have 5 legislative days to submit additional written questions for the witness to the chair. The questions will be forwarded to the witness for his prompt response. Chairman Powell, please respond no later than March 31st, 2025. This hearing is adjourned.
All right, here I am. Hold on a second here. Just one quick second here.
So
let me turn this stuff off here and hold on here. We'll go to I can't let the ad talk because it's going to be something that's going to ping me. Hang tight 1 second. I was trying to snip this shit from my fucking platform here for you. fucking, they're gone. Like Rubner's out. He's gone. He's gone. They're gone. The Bears are gone. They've already left. They left the building. They left at 9:30 this morning. Not even the Bears. The Bulls with a hedge got out this morning. They're gone. They are. Hold on one second here. Main screen. Back to normal again. Just moving about our way right now. Back at it. I just took a piss, but I ran back here because I saw that the thing was ending, so I was like coming back in here. I still need one more quick break here, but so I didn't get quite 250. I got 245.57 in that trade. On that fucking, I left those fucking puts on for this morning, and I got a fucking print. It was so dope. Oh, I'm so happy. Fucking Christ. So happy. American Pie myself. Yeah. I got to take a quick break here. I do have to take an actual break. I was lifting some weights too I took a quick piss and I started lifting some weights. I'm like, oh shit. I can see that the Powell thing's ending now. When I get back, what we're going to do is, Andy gave the auction to Dean. He's like, nobody gives a fuck. he's like all the balls passing. When I get back, we're gonna do two things. I'm gonna try today to get to some earnings, and we're gonna talk about something that is wrong in the zeitgeist right now about inflation. Now, I'm not gonna talk about like politicians and what they do. They need a scapegoat, whether it's real or fake. It doesn't matter. Like, it's very important to know that everyone hates inflation. That's all you need to know. Baseline. Everyone hates inflation. Now, whether the consumer can afford it or not is different. Whole different thing. Nobody wants to pay inflation. Nobody. My richest friend. I have very wealthy. I have one of the wealthiest people in America, my friend. And he fucking hates inflation. That guy drives a shitbox. He doesn't like paying high prices. Nobody does. So those are two different things. And we got to talk also about another aspect, which is, when does inflation matter? And how the mechanics of inflation and the interplay of inflation with rate cuts, rate hikes. Now, the last Fed rate decision, Jerome got more hawkish. But as some data came out this week, he shouldn't be. And when he came into yesterday's Senate meeting, he changed some of his what he was saying, his speech, or his his prepared remarks were slightly less hawkish, but they were not. They shouldn't be construed as, oh, that means rate cut. As the data is unfolding, Jerome can see that he's got space. He's got room where he doesn't have to do anything again, as for right now. Now, this can change over the next 3 months, and from that point, about canceling out anomalies. At that point, though, he does have room to use tools, and that would give you another 3 months. That's 6 months. Now, all of this stuff is separate from tariff pricing in. So it's important for you to separate the two, especially as a market participant, separate pricing and tariffs. And it's dangerous because if we get a bloodbath, it's easy to slip into the thesis of, oh, well, inflation is bad, or this is bad, or that's bad. In that you stay in a bull market. We have examples of this in history where we have large drawdowns and we stay on trend. So if price stays above the monthly trigger, you're still in a bull market. And there's a huge distinction between a crash turning into a bear market or a crash in a bull market or a major correction in a bull market. You need to be able to separate the two of those because it'll shake you out. You get shaken out as a bear and a bull. You'll both get fucked because as a bull you'll be afraid to buy it, and as a bear you'll think, oh, we're in a bear market, market's over. There's a huge distinction, and this market gets more complicated as we enter the end of the bull run. There's more. It's not as easy as it was the first 2 years. So. This is when I tell you things I really want you to listen to me. And if you don't believe me, I think I've gone over it enough at this point where I don't know what else to say to you. You should have the triggers and the velocity so you can see the divergence on momentum and price on triggers. And then you should be reading when we spend some of these days we spend looking at this data together, focus and pay attention on that stuff because it is important. And I would be very skeptical of a lot of stuff you read out there. It's funny, no one wants to hear the truth, do they? I was talking to Joe Donut the other day, or 2 nights ago. We were discussing no one wants to hear the truth. No one ever does. The truth doesn't sell. When you're at a bottom, that doesn't sell. You don't get likes when you're at a bottom. You don't get likes when you're at a top if you're telling them to get out. It's like we're at a top and you're like, hey man, take the money and run. You're going to get downvoted to hell. If you're at a bottom and you're like, burn it down so we can buy it, you're not going to get likes. It's very lopsided. And the truth never sells. I was looking at Wolf's Twitter handle. He's got 30,000 followers. This guy should have 100,000 followers, 200,000 followers, easy. And he doesn't. I'm not associated with this guy in any way, shape, or form. I was thinking of bringing him on the show, or not bringing him, but asking him to come on the show, begging him to come on the show at some point, because I'm a nobody. I know nothing either. But I would really like to have him on the show because when I was speaking to Joe, he had a lot of questions. And there's a guy in a Discord right now who was asking the same question or similar questions that Joe was asking. And I was like, that's anecdotal. And it seems dismissive to say that to people. It's not nice to say that to people. And I would get angry if you told me that. That's just anecdotal, go fuck yourself. People do that to me. I'm like, yeah, you're right. Or I'm arguing something like what the market can and can't support, or mixing arguments based on other things. And I've seen Wolf Richter get interviewed, and he does a really great job of explaining how we're mixing data and we're mixing functions. And it's not our fault. It's that we're told this stuff. And the longer that I read his blog, the more that I'll read Bloomberg, or I'll read WAPO, or I'll read CNBC, or I'll listen to a podcast, or I'll listen to a TV show like CNBC or something. And I'm like, they're fucking leaving something out here, man. This isn't cool. They're selective with data, selective with information. And then the other fascinating part is when you start to figure this shit out, even baseline, you realize when people are telling you the truth, but they're intentionally not telling. They're telling you, but they're not telling you. or they're leaving an out in that statement, protecting themselves because they know the rest of the data, or the way they form their sentences and explain things, or a speech is written for them. You're like, I know what he means with that, right? And it's important. You don't have to know that stuff, but it's a whole new world. I used to listen to a lot of these like YouTube channels or the news and all this kind of stuff related to like data or economic news or the economy and all that kind of stuff. And I used to believe it all too. I'm guilty. Don't think I'm not that guy. But I'll tell you what, man, like, then I go back and I read his shit and I'm like, fuck, they lied to me again. I'm like, they fucking lied to me again. And all this data comes from this isn't like, this is my opinion or I'm only showing you one piece. I'm going to show you all the pieces and why it's not what they say it is. And this guy's never wrong. This guy's fucking right every time. When he shows this stuff, then you start to see the people that aren't trying to bullshit you, even if they're not giving you all the information, they're saying the same story that he is. And all this stuff is known by banks. It's all fucking known by, it's all known by fucking businesses. They know this shit. They hire people that are intelligent to do this stuff. Those people don't go on Reddit. They don't go on Twitter. Or they float things on Twitter, float concepts or ideas to see what the reaction is. But it's very rare to get that information given to you in a digestible format. That's unbiased. It's more than unbiased. It's just legit. So, and he's disproving so many fucking people. It's like every week he's disproving people. He just like breaks out the flamethrower and just starts torching. And sure enough, he was right. I'm like, fuck, man, this shit is right again and again and again and again. And so eventually you become, okay, I'm going to go in there and read this shit every day, and I'm going to read what he has to say, and I'm definitely not going to get flamed by him. And this guy's an old guy, like it's just like Jedi Marcus, just like Jimmy Jude, it's like anyone else. People have been in this market for a long, long time. They don't fucking lie. They're there for our benefit, and you should listen to them. It's important to listen to those guys. So, anyways, we'll look at some of this stuff later today, so that you can understand the idea, but you can grasp what Jerome is saying and what he really means. And he's not lying. Like, he didn't tell a single fucking lie today, which was fascinating to hear. So it's good to hear. It's refreshing. And you can kind of get the gist of what he means in his statements by understanding what he's saying in the background. So anyways, I'll be back with you guys a little bit. We'll go over that stuff. We'll look at some ERs for the end of the day, and we'll give you a brief outlook for tomorrow. Everything is still in line right now. Nothing's really changed here. We didn't quite get 96, but we did get, what do we get? We got 98.21. It's kind of good. Hand grenades and horseshoes pretty goddamn close. It's still possible we could go lower. We'll look at those places to buy a dip and stuff like that. There's one down here. We also, as the week wraps up, need to talk about next week before Friday. We need to talk about, because today is the 12th, and we come into the Friday's the 14th, and then we got Monday the 17th and the 18th, and there is a window of weakness there. And even if we don't go down, they're going to sell it. So they're going to sell it even if it bounces, and you need to be prepared for that. It doesn't mean we crash. It doesn't mean, we can or we might not, but it's like knowing where everybody is, like who's on first, who's on second, who's on third. And they're going to try to sell that shit. Successful or not, they're coming in. They're going to try. So I want you to be aware of those pitfalls and where to buy the dip or not, or where to get short, or where to hold your short longer. If we begin to break down on levels, you need to be aware. I want you to be aware. You don't have to be calling this stuff either. There's no need for you, nor I. There's a big misnomer out there. It's very important for you to learn, which is you do not need to be right. And not only that, when people reinforce to you that you should be right, it is a bad habit. It is like one of the worst habits in the world. You just need to have a plan, and you need to see where the inflection points are, and you need to have stops to get stopped out because you're going to be wrong. And you need to know where the next place is or where the next direction is on different time frames. As long as you know that stuff, you'll be fine. And you have a good community, good friends, all that kind of stuff. You should be fine in the market. depending upon what tools you're using, or not tools, but oh, sorry about that. Whatever trading you're doing, you're owning stock, selling options, buying options, whatever the fuck it is. You just need to know where everything is. As long as you have that awareness, you can be wrong all day long. Well, you can't be wrong all day long, but you just have to keep a record of it and find out which ones are working and which ones are not. Where your highest success rates are, your highest probability of winning. All that stuff comes to you over time, and you'll be very happy over time. So it's very important for you to, like, if you're gonna get information from people, that you get the cleanest that you can get, so you can make the most informed decision. Dude, when I read and see shit, I'm like, these fucking, it's all selling newspapers, man. It really, not all of it. I don't know if some of it's intentional or just don't know, or regurgitation. It could be just regurgitation. I read it here. Newspaper said it. Bloomberg said it. Twitter said it. I don't know. Everywhere else said it, so it must be true. It makes sense. Yeah, I gotta go back. All right, I'll be back in a minute. I'll be right back with you guys. I'll be right back. I got the news squawker back on now for you too.
At 1:30 p.m. Eastern Time, we get the Bank of Canada meeting minutes. The White House's Leave It says Trump wants interest rates lower. And White House's press secretary Leave It says reciprocal tariffs will come before the Modi visit.
Oh man, I just looked at a you should say, oh god. Let me read this one to you. Who'd this one come from? Can I show this on the screen? I don't know if I can or should. Wait a minute. Can I show this on the screen? Here's my I got my exit scam for all you guys out there.
1 minute remaining.
Here's my exit scam. The stock market show, perhaps I didn't highlight the details clearly. For such an expert as yourself, DeLorean, the iconic car company Back to the Future movie, is launching a new drive-to-earn EV car. In cryptocurrency in the metaverse. I covered them on my YouTube channel, bro. We could collab. I think that's my exit coin scam. Is that what they call it? Exit scam coin? Sorry. Get that out of there. Oh god, I'm reading through some of the I get every day I get emails for every day I get emails for I know every day I get these fucking
Press Secretary Leave It says I believe reciprocal tariffs will be coming before Modi's visit tomorrow.
Uh-oh, reciprocal tariffs are coming before Modi's visit tomorrow.
Governing Council felt that retaliatory measures by Canada and other nations would put upward pressures on inflation. And while retaliatory tariffs would likely represent one-time increase in level of prices, Governing Council saw risk of higher import prices feeding into other prices. The Governing Council felt the increased uncertainty due to US tariffs threat could also support the case for a cut. And
I know.
The Council felt a 25 basis point cut would help support growth and better balance inflation risks.
Yeah, it's like
Tariffs were imposed. The Governing Council felt a long period of uncertainty would almost certainly damage business investment, and agreed that in the case, Canadian GDP growth would be reduced until the economy adjusted to tariffs.
I know they want me to like
Bank of Canada's January 29th rate announcement, the Governing Council agreed a protracted trade conflict with the US would permanently cut the level of Canadian GDP, and agreed it would need to assess a wide range of data, including info on supply chains and more frequent and detailed business and household surveys. The Council agreed that in setting monetary policy, it would need to continuously gauge the effects of a trade conflict in real time, and that if this led to an increase in inflation expectations, it could generate higher ongoing inflation.
Is this on right now?
Get 4 weeks.
Wait a minute.
Dollar. This is not what the government should be spending money on. It's contrary to the president's.
This is actually live right now, just so you know.
We can continue to provide you the receipts for all of the fraud, waste, and abuse.
This is actually live. It's from the AP.
Wants to argue that the federal government is not fraudulent in some capacity. Be my guest, because I think the American people watching at home would beg to differ.
Caroline.
Mary.
Hey, more on the judges. Does the White House believe the courts have the authority to issue these nationwide injunctions?
We believe that the.
I know. I get them every day. Some of them are legit. Some of them are. Well, this guy's legit. He's got a real channel and shit. He's got 1 million followers, but it's all scams. It's not all scams. It's. I don't even want to sell anything. People ask me to sell like trading platforms, all that shit.
And the president's executive actions that he took were completely within the law. They were constitutional, and we look forward to the day where he can continue to implement his agenda. And I would just add, it's our view that this is the continuation of the weaponization of justice that we have seen against President Trump. He fought it for 2 years on the campaign trail. It won't stop him now. Brian.
Yes. I want to go back to DOGE just for a second. Earlier, the subcommittee headed by Chairman Marcia Taylor Greene, her and her staff, discovered $2.7 trillion in improper payments to Medicare, Medicaid, overseas, to people who should not have gotten it. Some in this room might have missed that press conference. Can you elaborate on what the president is thinking at this point?
Well, again, that's another example. There's a very long list.
Are these planted fucking reporters?
Basis. Elon Musk also talked about yesterday about Social Security payments that are going out the door for people who are no longer with us. Unfortunately, I would say that is certainly fraud. There's also a lot of contracts they've identified that, just as a hypothetical example, are $1 million, but only 500,000 went out the door. So where's the rest of that cash? And so that's the thing. Those are the things that DOGE is working on every single day. And I would just remind everybody in this room, this is what President Trump campaigned on doing. He's delivering on a promise that 77 million people elected him to do. James.
Thank you very much, Caroline. 2 foreign policy questions, if I may.
Sure.
First, the statement that was released after this morning's phone calls identified Mr. Witkoff as the special envoy who will be part of the delegation that undertakes to resolve the Russia-Ukraine war. I had thought that that individual was General Kellogg, and so can you clear that up?
Sure, I'd be happy to. As you mentioned, the president, in his truth, following the phone call with Vladimir Putin, said that he has asked Secretary of State Rubio, the director of the CIA, John Ratcliffe, our national security advisor here at the White House, Michael Watts, and Steve Witkoff to lead the negotiations. As for General Keith Kellogg, he remains a critical part of this team in this effort. He's played a tremendous role in getting the negotiations to this point, and he's very much still part of the Trump administration.
The other subject is Iran. I took note of President Trump's comments in his Super Bowl interview with our colleague Brett Baer to the effect that he wants to do a deal with Iran. However, that interview appeared after the supreme leader of Iran, the Ayatollah Ali Khamenei, had already ruled out any additional negotiations with the United States. So kind of a two-part question. A, what gives the president any confidence that Iran will come to the table? And B, more fundamentally, why is the president interested in doing a deal with Iran instead of doing everything he can, perhaps short of U.S. military intervention, to try and hasten the end of what many of his own supporters regard as an evil regime?
Well, the president has made it very clear that he will never allow Iran to have nuclear capabilities. That is a red line that he has drawn, and he will not allow that to happen. But you asked why President Trump wants to make a deal. I would remind you, he's the master of the art of the deal. He is America's deal maker in chief. He leads from a position of securing peace through strength. And I think time and time again already, in just 4 weeks, we have seen the president being able to negotiate successful deals with our partners, our adversaries all around this world. You know, the release of Mark Fogel just last night is something that I think speaks to the president's deal-making ability. This is something that the Biden administration allegedly tried to do for 3.5 years. I think you all should go back and ask some of those Biden administration officials what they even tried to do and why weren't they successful, because for 3.5 years Mark Fogel sat in a Russian prison, and it took President Trump 3 weeks to get him back on American soil. There's nobody better at making deals than Donald Trump. Phil Wegman.
Thank you. 2 foreign policy questions. Ukrainian President Zelensky has said after the war that he wants NATO membership or nuclear weapons. We heard Defense Secretary Hegseth say that NATO membership was unrealistic. What's the president's view on the other option, on a nuclear Ukraine?
I have not talked to President Trump about Ukraine's NATO membership or their nuclear capabilities. I would leave it to him to discuss. But I will tell you again that Secretary Rubio and also the Vice President, J.D. Vance, will be meeting directly with President Zelensky in Munich on Friday, and I'm sure they will provide a readout of that conversation and that discussion.
Question, given that this administration has called on Europe to take more responsibility for their own defense, I'm wondering, will the EU or any other European nation other than Ukraine be involved in these peace talks?
I don't have any European nations who are involved currently to read out for you. Certainly, the president has employed a very strong...
I need you to go to free tax.
Oh, sorry about that.
That's free tax US.
What the hell was that?
I guess.
Sure.
Should we expect the president to negotiate in person with Zelensky and Putin?
I don't have anything to read out on that for you today. Maggie, good to see you.
Thanks for taking the question. You talked about the transparency with Doge and Elon Musk's press availability yesterday. There is a conflict of interest law in place that says that people who have personal interests can't interact with government entities that could touch on those. Has President Trump signed a waiver for Elon Musk? Does such a thing exist? If it does, will you guys release it in the interest of transparency that he's committed to?
I have not seen the law that you are referring to. What I can tell you is that Elon Musk, as I've confirmed before, is a special government employee. He is filing the proper financial disclosure, and he is complying with all applicable federal laws. As you also heard, Elon address this directly yesterday in the alleged conflict of interest, and he said everything he's doing is very public, and if you all perceive a conflict of interest, you're welcome to bring that up. And as the president said, if he feels like Elon is engaging in something that's a conflict of interest, he will tell Elon not to do that. And Elon also said yesterday that before he moves forward with anything, he consults with the President of the United States. So we're very confident with the ethics and the guardrails that have been put in place here. Caitlin.
Thanks, Caroline. I have a few things for you, but on the commitment by President Trump, he said that he and President Putin agreed to visit each other's respective nations. Are there any preconditions that President Trump has that President Putin must do before he goes and meets with him, withdrawing some forces, withdrawing all forces, anything like that?
Not that I'm aware of. That doesn't mean they don't exist, but I was just talking with the president in our national security team. I wasn't made aware of any conditions, but if they exist, I'm happy to provide those.
And on the president himself, he styles himself as this master negotiator. He is now deploying these negotiations, saying that they start immediately. We did hear from the Defense Secretary, Pete Hegseth, though, today saying that NATO membership is not realistic for Ukraine, and neither is returning to pre-2014 borders.
ECB's
Aren't they
Nagel
giving
says
away
we
bargaining
need a
chips before
reform
these
of the debt
negotiations
break
get
in
started?
Germany and
Again,
not just
I
a small
haven't talked
tweak.
to the president about Ukraine's NATO membership, and he appointed several individuals to negotiate on his behalf. He's directly involved in these negotiations as well, and I'm sure if you ask him that question in the near future, when you're able to, he'll give you an answer. I just don't want to get ahead of him on it.
And final thing for you, which White House official made the decision to bar the AP reporter from the Oval Office and the diplomatic reception room last night?
Well, first of all, let me just set the record straight. It is a privilege to cover this White House. It's a privilege to be the White House press secretary. And nobody has the right to go into the Oval Office and ask the President of the United States questions. That's an invitation that is given. And there are hundreds of outlets on this campus, many of you in this room who don't have the privilege of being part of that pool every single day and getting to ask the President questions. We reserve the right to decide who gets to go into the Oval Office, and you all have credentials to be here, including the Associated Press, who is in this briefing room today.
But isn't it retaliatory in nature is the argument, because there's a reason that the AP was barred, which they said was because they're not using the phrase Gulf of America, they're using Gulf of Mexico in line with their standards. And so the question here is this setting a precedent that this White House will retaliate against reporters who don't use the language that you guys believe reporters should use? And how does that align with the...
Yeah, you see this right now, you can tell.
I was very upfront in my
ECB's
briefing
Nagel
on
says
day
Bundesbank is to
one
publish a
that if
proposal on
we
the debt
feel
break
that
after
there
the
are
vote.
lies being pushed by outlets in this room, we are going to hold those lies accountable. And it is a fact that the body of water off the coast of Louisiana is called the Gulf of America. And I'm not sure why news outlets...
She's fighting with the press now.
But that is what it is. The Secretary of Interior has made that the official designation in the geographical identification name server, and Apple has recognized that, Google has recognized that, pretty much every other outlet in this room has recognized that body of water as the Gulf of America, and it's very important to this administration that we get that right, not just for people here at home, but also for the rest of the world. Sure.
Thank you, Caroline.
Oh yeah, she's stinky.
With Russia coming at the same time as the
You could tell there were friendly reporters in there, and then there were more objective reporters, and she just went to town with these guys.
discussed as part of this prisoner swap.
I was not involved in those discussions, so I can't comment on whether that came up or not. What I can say is that this was a very good deal for the United States of America and for the rest of the world. As you know, we have confirmed that the Russian who will be returning home very soon, Alexander Vinnik, was a non-violent crypto criminal, and as part of this exchange, he has forfeited more than $100 million that he obtained in that illegal crime. And in exchange, of course, we got Mark Fogel, who is a middle school teacher who kissed the American soil, but kissed the ground last night when he returned.
Of course he's going to do that.
It was a great deal and a great day for our country, and I think everybody, regardless of political affiliation, agrees with that.
And was Russia made aware ahead of time of the parameters that the administration and Secretary Hegseth was going to be announcing today?
The NATO perimeters? Yes. I'm not sure. You'd have to ask Secretary Hegseth in the Defense Department on that, since he announced them. Jackie.
Thank you, Caroline. Just to be clear, so when we're listening for a shift in position on U.S. policy, should we only listen to the president and maybe not the Secretary of Defense? Because what he outlined today would represent a shift in U.S. policy.
I'm not saying that. I'm just saying I speak for the President of the United States behind this podium, and I will let him discuss that.
Can you tell us any more about the next hostage releases? I understand another American's coming out today.
Sure. I'm glad you asked. It speaks to President Trump's deal-making ability, and we can confirm the safe release of one American and two individuals from Belarus, one of whom worked for Radio Liberty. Out of respect for the privacy of these individuals, their request, we have no further details to announce on their identities, but we can confirm that one American was released today, and it's a remarkable victory on the heels of Mark Fogel returning to America last night.
Anything on who the U.S. might be releasing in exchange?
I don't have details on that at this moment.
Anyone in exchange?
I don't have details on that at this moment. I do know that these three individuals have been released and are on their way home to their respective countries.
Caroline, thank you so much. Can you explain how President Trump envisions the war in Russia and Ukraine coming to an end? Does he expect Ukraine to hand over all the territory in question?
Again, these negotiations are ongoing.
She knows the answer to this. This reporter knows the answer.
Advisors
he may
Wednesday
set.
afternoon.
But I think as deals in the past have come to fruition, the president has proven one of the things that makes him a very effective negotiator is not revealing what he's anticipating from both sides. But he is at the forefront of these negotiations in addition to the very qualified individuals who he's tasked with speaking to both.
So I just want you to know that this has been all over the Bloomberg terminals for like 3 months. Like this shit's all like, this is like a public secret.
Credibility. Was it part of the prisoner swap with Fogel that President Trump agreed to meet with Putin?
Again, I was already asked this question.
Like all this is like, it's not public information, but it's pretty public. Like, so if you don't know, like all sanctions will be lifted by Russia. Russia's going to keep their portion. And well, right now, Ukraine's trying to negotiate to swap some of that, but they're going to bring in UN or NATO troops. Hold on. Let me let this lady speak. Hold on.
Is it likely that we're going to see more information regarding the assassination attempts on the president's life while he was on the campaign trail?
In regards to the assassination of the individuals you mentioned, President Trump signed that executive order directing the respective agencies to do it. I know that that process continues and is ongoing. He's committed to transparency and the declassification of these very important files that I think many Americans are not only interested in learning about, but also have the right to know about. As for the two heinous assassination attempts on the president's life, he's spoken to this publicly. I've spoken to him about it privately. And, you know, as he said publicly to all of you, he feels he has a right to know about further information about the individuals who tried to kill him, tried to take his life. And so if and when we get that information, I'll leave it up to the president to decide whether or not he would like to reveal it. But I believe in the effort of transparency that we've seen consistently from this president, he certainly will. Daniel.
Thanks, Caroline. I wanted to ask you about the $59 million that FEMA sent to New York City migrant.
Well, if you watch her, it depends on who she's speaking to. She knows who the friendlies are, and she knows who are unfriendly. You can see her demeanor change as soon as certain people ask questions.
That goes against the interest and safety of the American people. What does the response of the Trump administration send to any federal bureaucrats that are thinking about obstructing the president's agenda?
They will be held accountable. The president is signing executive orders daily, and he expects all officials across the administration, regardless if they are a political appointee or if they are a career bureaucrat, to adhere to the will of the American people and 77 million Americans who re-elected President Trump. He is here for a reason, and he is focused every day on implementing his administration's goals and sending $59 million to a migrant hotel to house illegal immigrants when there are still people in North Carolina and California who have not received FEMA funding is not something that this administration is going to tolerate. Deanna.
Thank you so much, Caroline. One on New York and one on Russia.
Give me some tariff stuff.
New York City Comptroller Brad Lander is accusing Doge of clawing back $80 million that was intended for New York City FEMA funding. Wondering if you've heard about that figure, if that figure is accurate, and why that money was taken back.
I have not heard about that figure. Doge is moving very quickly, but I can get the receipts and gladly send them to you. I know that story is likely of great interest to the New York Post. John.
Russia, please. Is President Trump waiting for a kind of signal or an action from Putin to go to Russia? And would he be willing to go to Ukraine in the future?
I don't have any decisions to make on the president's potential visit to Russia or any in-person meeting at this time. John.
Caroline, two questions, one on foreign policy, one on domestic policy. Following up on the president's call that he had with President Putin, does the president view Russia, does he view President Putin as an ally, as a partner, as a competitor, or as an adversary?
I believe this nation views Putin and Russia as a great competitor in the region, at times an adversary, but as the president has said as well, he enjoys having good diplomatic relationships with leaders around the world, finding that common ground, also calling them out when they are wrong, and leading from a position of peace through strength. That's the president's greatest strength, and we've seen that again, time and time again.
And then as you pointed out in your statement regarding the confirmation of Tulsi Gabbard, there was one Republican who voted against the nomination of Tulsi Gabbard. It was Senator Mitch McConnell. Similarly, how does the administration view Senator McConnell? Can he be a partner in the president's legislative agenda? Are you disappointed that he voted against not only Tulsi Gabbard, but also Pete Hegseth to be the defense secretary.
I think I'm greatly disappointed in any Republican who chooses willfully to vote against the president's exceptionally qualified cabinet nominees and picks to lead.
She sounds like a whip, dude, not a press secretary. This is wild.
Democrat swayed from voting against President Biden's nominees, and we know how many of them turned out. They turned out to be atrocious at their jobs, leaving America much worse than they were when they took the oath of office. And so I've said it repeatedly from this podium. I addressed it at the beginning of my remarks. We
At
expect
2 p.m.
all
Eastern
Republicans
Time, we
to
get
vote,
US federal
to stay
budget
tough
balance
and strong,
forecast
vote
minus
for President Trump's
94.8
nominee so we can
billion
get to work
on the
and
prior
continue
minus
to work very
87
hard to
billion.
implement this president's agenda. Sure.
Thank you, Caroline. On South Korea, South Korea is currently in a chaotic situation. How does the President Trump react to the current chaotic situation in South Korea? Secondly, if South Korea need help from United States, what role do you think the U.S. will play?
Sure. I haven't spoken to the president about the ongoing situation in South Korea. I would defer you to his previous statements. And I can also see if I
That's what I expect from her. This. But she's going on
South Korea are on this about it, but I'm happy to
like answering straight faced and then saying I don't know. But she's like she's going after people.
Absolutely not.
Right. I asked that question.
I
asked that question because, the Democrats have been hurling insults at Elon Musk, hurling attacks, calling him President Musk. Most recently, Jamie Raskin, the congressman, took it a step further, calling for Musk's impeachment, saying that he somehow usurped the power of the presidency. What's your response?
It's utterly ridiculous. Elon Musk addressed this in the Oval Office yesterday. The president addressed it as well. Elon Musk is serving at the pleasure of the president, just like everybody else on this team. He takes directives directly from the president of the United States. And I think some of the comments that you referred to are nothing more than a failed attempt from the media and from Democrats to try to sow division in this White House. We saw them do it in the first term. We're not going to let them do it in the second term. This is a unified team who is working at the pleasure of the president to do what's right for the American people.
I shouldn't say that.
One more quick housekeeping note.
It's not nice.
You all today. The
That was a
president
softball.
share with all of you that he had a wonderful meeting with King Abdullah of Jordan yesterday. They discussed many things, including the Gaza Strip and its future at great length. The king would much prefer that the Palestinians stay in place, with the additional land to be used for new development, which would greatly create jobs.
Woo, hotels, baby.
But the president feels it would be much better and more
Hotel Gaza, Trump Towers, baby.
could be moved to safer areas. I would just add to that the president remains wholeheartedly committed to seeing peace in the Middle East, and our air
Peace in the Middle East.
have been tasked with coming up with a peace plan to present to the president. That is ongoing. King Abdullah mentioned that yesterday. He also committed to accepting 2,000 sick children from the Gaza Strip, which the president called a beautiful gesture. So the administration
Did you see that Musk stuff yesterday? Oh,
stand closely with our ally Israel, and the president has presented this big, new, bold idea to secure peace in the
I
Middle
have
East.
no comment on that right now.
From that, and we look forward to seeing that goal of this administration achieved.
Yeah.
Thank you very much, everybody, and we'll see you very soon. Have a great day.
I've been a Tesla shareholder. I'm not right now. I can't do it for this stuff. I can't. It's too much volatility for me. But if I was a Tesla shareholder, I would have had a fucking meltdown yesterday. Fucking would have imploded. I don't want them doing it with Democrats. Like, I don't even want them like, ugh. Like, even if he was like, we're going to go after people and I'm working with Biden, he'd be like, get off the fucking stage. Leave that to somebody else. Like, oh, man. Okay, so that was it. She's done. She did say a few important things. I'll let you know. I'm going to highlight. I had to cut through the bullshit. So here we go. Ready? Levitt say we're gonna return to this. Levitt saying that Trump wants interest rates lower. That's not happening. I'm gonna tell you right now. That ain't happening. Do you know why he wants interest rates lower? Do you guys know why? We're gonna get a bump in inflation. Well, a little bump. But in truth, what you need right now is well, I will come back to it. Well, let's come back to it in a minute. Secretary Leavitt believes reciprocal tariffs will come before a couple things. Trump wants interest rates lower. Also, that there'll be reciprocal tariffs will come before the Modi visit. So that's some volatility.
The U.S. federal budget balance forecast minus 94.8 billion on the prior minus 87 billion.
And Modi comes tomorrow, so you could see Trump today announce tariffs today. Just a heads up. Trump's red line is not letting Iran have nuclear capabilities. I don't know what that's about. It's like the new bad guy. This probably harkens back to the discussion she was having about the assassination attempts. One that was supposedly foiled, or they found out about one, and then the other one this past summer while he was running for office. Canadian finance ministers also coming out and saying, me and Lucknick talked about border and trade. Canadian premiers to meet with Trump advisors Wednesday afternoon. So everything seems like it's still a pretty fluid situation. I was wondering about pricing in tariffs, and I have this thought they want to pile them on in together to price into the market. So you don't want to be like slam, or maybe they are slamming the market every time, but I think they're going to do it all at once. For this, like once all the Trump, I was looking at 2018 and there was still a lot of like it was just like right now, it's just like, yes, on deadline, we signed it into law or executive order day, but then it didn't they didn't all match up until like the end of March or some shit like that. We'll talk about that stuff later. Right now, what I really want to talk to you guys about is something very important here, which is if I can get to it here for a minute. And I want to talk to you about this. It's an important one. Let me see if I get this right. Let's read this together as a group, because I know you guys say you're going to do shit and you don't. So we're going to read this together here. I'm going to put it down below. I'm going to read it to you. And I'm going to mute the, or I'm going to put this, maybe can I put this somewhere else? Maybe put this right here. So you guys can read along with me. I'll scooch over. So I'm going to read this story to you. This is important because this actually does address what was said yesterday in the Senate hearing, and highlighted again a couple times today, especially when there was stumping going on. Treasury markets inflation expectations become an unanchored. Think about that, unanchored. Inflation expectations are unanchored. That means if you were to like visualize that, it means you have expectations of higher and lower expectations. And rather than trying to like this or that, we're kind of in the middle floating around. There's room. Okay. Fed Chair Powell at his testimony before the Senate Committee on Banking, Housing, and Urban Affairs today included his nearly standard line about longer-term inflation expectations being well anchored as reflected in a broad range of surveys and households, businesses, and forecasters, as well as measures from financial markets. The first three survey-based what households, businesses, and forecasters see coming at them. The last is based on trading results in the Treasury market, what the Treasury market sees coming at it. It's the bond market talking here, and the bond market is getting worried again about inflation. The 5-year break-even inflation rate rose to 2.64% today, the highest since March 2023, having shot up by 78 basis points since just before the Fed's September rate cut. This measure, the 5-year Treasury yield minus the 5-year Treasury inflation index real yield, shows what the bond market saw today as the average inflation rate over the next 5 years. The Fed is cut by 100 basis points, while this measure of market-based inflation expectations for average inflation over the next 5 years has shot up by 78 basis points. It has become unanchored.
128.6 billion minus 128.6 billion, lower than the forecast, minus 94.8 billion.
As one might say, to needle Powell during the FOMC press conference. The 5-year break-even inflation rate is right here. Right here, 2.6%. And this is important to look right here. This is when he started to do the cuts. If you can see this, rate inflation coming up, right? And it's at its break-even rate. And this comes right back to where we were in March of 2023. This is from the Treasury Department. A Fed that is lax about inflation scares the bond market once inflation starts rumbling. Now, we have the threat of tariffs, right? These guys all know, the bond market knows, everybody knows that there's going to be an uptick in inflation from tariffs. So there'll be an initial spike in inflation, and that is due to corporations trying to pass along those new tariffs to you. Okay? Now, we'll get into longer rate down the road and what can happen here. And the Fed has seen that reaction from the bond market too, including the surge of longer-term yields, such as the 10-year, since the beginning of the rate cuts, which is why it has walked back any further talks of rate cuts and instead has pivoted into a wait-and-see mode. Does that make sense? So if you go back to the last couple Fed meetings, his language has changed. And if you remember when you were on FinTwit, people the zeitgeist was, oh, the bond market is pissed and we're going to crash. All this other bullshit. The longer curve was saying, nope. Jerome's saying we're gonna go neutral here. You're not getting any more cuts, and that calmed the short-term rates, or calmed the long-term. The long-term rates cut the short-term expectations of doom. So he pivoted to a wait-and-see mode to not unnerve the bond market further. Now, remember, you got Trump right now saying we want rate cuts right fucking now, right? The 10-year break-even inflation rate, the 10-year yield minus the 10-year Treasury inflation index real yield, is a little more sanguine, but is also coming unanchored. Now, this is important. And this isn't today, so I want to some context here. This measure of what the bond market saw today as the average inflation rate over the next 10 years rose to 2.46%. Now, your people on FinTwit are going to go, oh, fuck, we're fucked, right? We're super fucked, bro. Right? There's more information you need to have that you don't get from outside sources. The highest since October 19th, 2023. Before that day, the highest since March of 2023. It shot up by 44 basis points since just before the Fed's September rate cut. Here's the 10-year break-even rate. You can see it's right back up here again. This is dangerous, but there's more information. We're not going to get to it in just a minute. This is November, or late October, middle November of 2023. The rate cuts unnerved the bond market. The bond market saw that inflation wasn't quite done with yet when the Fed was cutting rates, just as inflation was starting to reaccelerate. This infused the bond market, and not just the bond market, with concerns that the Fed would be more tolerant about inflation going forward, along with signs of fear that inflation would on average be higher over the next 5 years in particular. The jump in inflation expectations by the markets, along with the surge of the 10-year yield following the rate cuts, likely triggered the energetic backpedaling by the Fed on further rate cuts. It is now in official wait-and-see mode. Powell and other Fed governors now keep hammering home the point that, this is important, they can be patient with their rate cuts. Now, there was still a great effect of those rate cuts. If you go back and further in past articles here, when he cut by the 225s and then the hammer it with the 50, it arrested a lot of data. Even at that time, FinTwit was like, you shouldn't be doing 50 BPS, but in reality, what it did was it arrested a bunch of data that was going to slam through normal trend, up or down. So this was like an outside effect. So he's like arresting the market, or he's arresting the velocity of data coming back in line. Best way to say it. Right? And at the same time, the bond market freaks out. Right? But then the moment that the Fed says, don't worry, we're not going to cut any more rates, we're going to go wait and see, the bond market eases off because of what? Because the longer term, or the longer curved yield, or the longer term rates are still showing progress on inflation. And they know that tariff inflation will be transitory, or the expectation is that it's transitory, an initial rip higher and then a rip lower. So the Fed's job right now, inevitably, is to assure the bond bros that they're not going to cut. And then you've got Trump out here going, cut. The bias today is still for cuts, not hikes. Inflation would have to make larger and more sustained moves higher for the Fed to switch the bias to rate hikes. So listen to that. Listen to this part of this statement. Inflation would have to make a larger, much larger, and more sustained, that's not transitory, right? Move higher for the Fed to switch the bias to rate hikes. So Trump is actually more on the side of rate cuts, but he doesn't have to right now. Why? You know why? Because the longer end of the curve of rates is saying we're working on inflation. We have transitory inflation coming, but as soon as it comes back down, we can cut rates. Make sense? So let me draw this for you. Make it simple, okay? Get really simple here. This is your target for 2%, let's say, okay? And we came down violently. We arrested it, right? Right before we hit 2. Why are we arresting that? Let's just start there. Why are we arresting that rate of inflation, right? And a bunch of other rates, or a bunch of other data points. We're arresting them because we can blast through into stagflation, or we can bounce off into a market crash, basically, right? With inflation ramping. Any kind of velocity, you don't want it. You don't want to be blasting through, coming through, and all that kind of stuff. So anyways, what they're saying right now is, right now we've got bouncing in inflation, right? But the longer term inflation rate is still coming down. You had sorry, I shouldn't do that. Even though we got this bounce right here, the longer term inflation is still heading slowly lower. They're like, we can probably absorb. There's people out there that say, no, you can't absorb any of that. But it's like, no. The ceiling is like up here. And over this graph over time, we expect tariff inflation to come back down once corporations can no longer pass those tariffs on to the consumer, or they realize they have to absorb. You also get a dip in GDP. That's why if this was GDP, you would get the repricing in the stock market. Now, if this starts to turn up in the longer, and the inflation is sticky and not transitory, we got a problem. And we will raise rates, right? Is that, you guys, it's all jiving with you guys? I don't know if it is or isn't, but try to stick with me here. So the bias today is actually for cuts. Why? Because we have more room in the upside because of the longer rates to allow inflation to run a little hot right now in the shorter term. And the expectation, if you go back to 2018, 2019, inflation spiked and then it came back down again. So you can go back in that time period and just check it on any chart. Go red trading view and check it out. You had an initial spike up in inflation and then a dip. And that's common with tariffs. Now, but a bond market freak out. Now, here we go. Here's what we got to look at here. Now, but a bond market freakout over accelerating inflation in a lax Fed, that would be, don't worry, we're going to start cutting, like saying it publicly, resulting in higher long-term yields that really matter for the economy, would nudge the Fed to switch its bias to rate hikes again to keep the long-term yields from rising too much. Get it? Time, right? Rate and time, two different time frames. Okay. To keep long-term yields from rising too much, the Fed would need to show the bond market that it's serious about inflation. We talk about that here all the time, right? Once the bond market, in 2022, once the bond market feels good that the Fed is fighting this bad data, what happened? The market started to flatten and turn up again. They're working on it. We trust that they can beat this thing. To keep the long-term yields from rising too much, the Fed will need to show the bond market that it's serious about inflation and that it will crack down again if inflation accelerates substantially. I'm not remiss to hear Trump today saying, cut rates, bro. And the bond market's like, you fucking better not. So you got like different parties competing right now, right? And Trump knows this. The bond market knows this. Trump knows this. Jerome knows this. And that's the irony. The Fed might have to hike short-term rates again to make sure long-term interest rates remain moderate. Paying attention to the third part of its mandate to conduct monetary policy, quote, so as to promote effectively the goals of maximum employment, stable prices, and moderate long-term interest rates. The mandate is silent about the Fed's short-term policy rates. It's long-term interest rates that are in the mandate, and the way to get there is to keep inflation in check. Now, you might read this and think to yourself, oh, shit, we're going to get rate hikes and the bond market's going to freak out. We're going to get the bond vigilantes. I'm going to fucking write an article on this. You know, and that might be all the information the only information you might read topically this story here and not look at the actual charts that he just showed you and say the bond vigilantes going to come out and they're going to freak the fuck out. That long-term yields or long-term rates are not going to help. We're totally fucked. They're going to, your reporter, your bear doomer, your sub-seller, your YouTuber, your fucking Bloomberg and Wall Street Journal and fucking CNBC are not going to tell you that inflation from tariffs is transitory. They're not going to tell you that. They're not going to tell you that you have room for inflation to rise before it really truly impacts long-term rates. They don't want you to know that because it doesn't sell newspapers. Now we're going to scroll down a little bit more because some of those people come into his comments and say that. Well, what about this and what about that? They're going to freak out. And oh my God, today we're fucked. And that's not the case. There's room, unanchored room. There's room. No one wants to say that there's actual room. And no one wants to say that it takes what? It takes time to get a trend. One report, two reports, three reports, right? Month over month over month to put a trend together and also knock out anomalies month over month so that you can look at 3 months or 6 months of data and say, shit, this is not turning around. We need to begin to do these things, right? We're going to go down a little bit more here. Short TLT goes on to say, to keep long-term yields from rising too much, the Fed will need to show the bond market that it's serious about inflation. I wish there was a way to send this article to Powell. He said that today and before, hence the wait and see, right? We're going to go to the next one here. But what does serious about inflation look like? Wait and see, rate cuts, rate hikes. Wait and see sounds like transitory. Rate cuts sounds just as crazy today as it did back in November and December. Rate hikes is where the bond market expects us to go. So how long does wait and see take? Nothing the Fed has done since last September has made any sense. And Richter goes on to say, all inflation measures are still, listen closely, all inflation measures are still a lot lower than the Fed's policy rates. There is no reason for the Fed to hike now. So overreacting, right? We've seen this from the Fed in the past, right? Where they Do too much, do too little. Inflation rates can rise, but listen, here's the true data. Listen closely. All inflation measures are still a lot lower than the Fed's policy rates. There is no reason for the Fed to hike now. Inflation rates can rise by a full percentage point, and they'd still be below the Fed's policy rates. The Fed is at 4.33%, CPI year over year, 2.9. And we're hot this time. We got CPI, right? Slightly hotter, isn't it? But it's not a full point hotter, is it? So he goes on to say, what's your problem? And the reason he says what's your problem is because people are consuming regurgitated stuff by overreaction or selling newspapers. The Fed has to do this right now. We're totally fucked. I'm panicking. I'm going to write this up, sell it, boom, 100,000 viewers on YouTube. It's just not the reality. It's going to take some time. This guy is great. This guy, Dumb Idiot, writes, some of us just like the chaos and spectacle, I think. Writing comments on blogs demanding the Fed hike rates has its own jouissance, right? So it's juicy. It sells newspapers, but it's not based in reality. According to Bowles, CPI has been above the Fed's 2% target since January 2021. That was a substantial decrease in CPI in 2022, but CPI has remained above 50% higher than the Fed's targets. For the last 6 months, CPI has been trending up. 6 months. Think about that. 6 months, time. What is Jerome buying you right now? Not a target of 2%, or he's target of 2%, but he doesn't want to hit the target of 2%, does he? He doesn't want to blast through it. He doesn't want to ricochet off it. He wants a nice slow curve coming across. That's what soft landings are. The longer the curve goes like this sideways, the longer you get what? A soft landing. So people want to see the world burn. They're like, we want 2% today. You know who wants that? A bear. That's who wants it.
Negotiations and on what terms?
Jerome doesn't want it. The bond market doesn't want it. They all know. They all fucking know. The banks know it. The businesses know it. Everybody knows it. But yet they want to sell you the doom. According to for the last 6 months, CPI has been trending up. The target rates are indeed above CPI, but not enough to finally drive CPI back to target. By all accounts, the economy and labor markets are holding their own. No shit. And yet the last moves from the Fed were rate cuts. The Fed is at 4.33%. CPI year over year is 2.9%. That was through yesterday. As of this morning, CPI is 3.0. Nice job, inflation. Someone else wrote, help me understand this, please. If the saving rate plus public plus private is less than the deficit, then should the long-term interest rate go up or remain high? Unless, of course, the world is generous enough to fund our deficits at low rates. So assuming there's a 2% current inflation, but the world doesn't fund our expenses, then long-term interest rates should then still remain high. Would that be reasonable to think? Or are there more variables at play? And that is awesome. Are there more variables at play? And Wolf goes on to say, the market drives long-term interest rates, not any particular equation or savings rate or whatever. The market consists of what? Remember, market versus data is different things, right? The market consists of the supply and demand. There's a lot of supply from the deficit spending, but there's also a lot of demand from the U.S. and globally, which is why the 10-year yield is only 4.5%. You get it? There's a lot of supply, but there's also a lot of demand. That means things are good, aren't they? That's why the 10-year yield is only 4.5 and not 6%. Yield makes sure that there is always enough demand. That's the job of the yield. That's what it does. If inflation is seen as higher in the future, demand will take that into account and will materialize only at a high enough yield so these buyers are compensated for their inflation expectations. And so higher inflation expectations translate eventually into higher yields. So what is the 10-year telling you? Right now, at least. We don't expect tariff inflation at this moment to be more than transitory, which is counter to what you read and watch on YouTube and whatever fuck sells your newspapers and shit. This is another favorite one of mine from this post. The survey-based expectations, this is the University of Michigan sentiment. Somehow traders can't separate this because they're so emotional right now. Survey-based expectations haven't exactly been well anchored lately either. 1 year U of Mich expectations have spiked 1.7% since the rate cut. And as far as I can tell, the 5-year U of Michigan expectations have hit a 30-year high, excepting maybe a month or two in 2008. Wolf goes on to respond. But the U of Mich survey just shows the political divide in the U.S., with Republicans-leaning respondents seeing very little inflation and Democratic-leaning respondents seeing red-hot inflation. This totally flipped after the election. Before the election, it was the opposite. In the data, look at the political divisions of it. Just funny. The New York Fed survey of inflation expectations yesterday wasn't particularly hot. It was 3% for 3 years, unchanged from prior month. And this tells you a lot. It tells you that people don't like inflation. It tells you that people even use politics in inflation. But then you look at who? The New York Fed survey, and they're like, nah, leave that to the plebs. So there's a difference, right? I think that's it. I think that's all I got on this one for today. There's one. I like this one too. This is another good one. This is a good one for us. This speaks to me. Bear Hunter. He says, we can be assured that whatever the Fed does, it will be late, early, or just wrong. We can be assured that Washington will not agree on anything, and the hot air will increase global warming. I could surely be wrong, but everything I see points to inflation. Wait and see and pass the popcorn. And Wolf's response was, we can be assured that whatever the Fed does, will be late, early, or just wrong. And he writes something fascinating. He says, that just depends on where you stand. And this is an important lesson in, hey, anecdotal evidence. Hey, I'm getting fucked over here. I'm a CFO or CEO or production manager for fucking pencils. And we're getting fucked right now. Right? And you don't know if those pencils are maybe coming cheaper somewhere else. Or maybe you only supply to in-person stores and they're being bought on the internet now, or they're being bought in stores now and not on the internet. Right? It depends on who you are and where you are. So Wolf's response is, that just depends on where you stand. If you're in real estate, the Fed was wrong hiking rates and keeping them high. It should have kept 0%. If you like T-bills, the Fed was wrong cutting rates. So you have to also think about the source of who's telling you what and from what their perspective is. Does that make any sense, right? So the loudest voices that you hear on socials have different reasons for what they say. And it's cacophony, right? Cacophony. It's hard for us to consume and then digest this information without looking at the actual data. RGS says, what do you think of the odds that the Fed actually has to hike short-term rates again rather than just holding the current rate where it is for a long period of time? Wolf says, good question. It depends on inflation. If it settles back down, transitory, the odds of a rate hike are what? Nil. And inflation has some room. It's not like it ticks up and boom, we trigger rate hikes. There's room. We already know that. The data says that. So he says nil. Inflation can spike. And the consumer can handle some of this. Things look good. But if it continues to accelerate, the odds get better. Keywords. Every month that it accelerates. Rate hikes would be a real mess. So these are two things that you can take from this article and write them down. If inflation accelerates for a few months, they're going to they're likely going to hike rates. This ain't going to be tomorrow. They need to put some data together, and they will at some point. We already know where that is, a full percentage point from where it is right now. You should expect a rate hike. And he's telling you it'll be ugly. Write that down. Maybe you can think to yourself today, well, Trump's going to do tariffs. Well, how will we know if it's transitory or not? We're in February, March, April, May, June, July. Oh. We're expecting a seasonal weakness in July. Maybe we could count on what? We could count on maybe a rate hike. That would help accelerate that downside move. And we also have a bunch of lead up into what else in that time period? NATO, EU tariffs, right? We got a bunch of meetings going on in Brussels. Sounds like you could write a newspaper about that, but it doesn't sell newspapers today, does it? It's not the news today. It will be, though. But you as a trader should write that down. Send yourself a little note and say, this is going to be the bear news in June, July. And if it doesn't come to pass, if you see that inflation decelerate as we head into June, July, you're going to say, these fucking guys are wrong. We're not getting a rate hike. It's transitory. I can see it coming back down. Rate hikes would be a real mess, but it would be a classic inflation scenario where inflation comes in waves interrupted by head fakes. All important information for you as a trader, as an investor. And it's not fluffed. It's not missing information. You've got the information in front of you here. James Keynes goes on to say, I actually see there is a real possibility that the Fed is going to cut rates again. When I look at what Mr. Market signals when, perhaps not right now, but perhaps in March. And Wolf goes, LOL, the 3-month yield has risen just a tad since December cut and is now at 4.33, right where the EFFR is. There is no sign of a rate cut in its 3-month window. The 6-month yield also has risen since the December rate cut. It's now at 4.35, above the EFFR. That means you ain't getting no rate cuts when? In the next 3 to 6 months. There is no sign of there it is. There's no sign of a rate cut in its 6-month window. So how many people tell you you're getting a rate cut right now? Half, right? We're getting a rate cut, bro. We're getting one like right now. And then you see the Fed confidently in a Senate hearing saying, we ain't doing shit. You ain't getting no fucking rate cuts. And we ain't getting no rate cuts. And we got a ceiling up here with no rate hikes.
U.S. crude oil futures fall more.
You following now? So you got no hope of a rate hike or a rate cut in the next 3 to 6 months. And there's room above before you get an actual rate hike. And so when you see the Fed, like I think yesterday someone was like, yeah, that's an option, but not right now. He said that, literally said it, because he knows, he fucking knows there's no rate cuts, and he fucking knows that there's no fucking rate hikes yet. We're just like floating in the middle. We need more data. You're talking about short-term and long-term CPI, two different things. They're two different things. And rates are two different things. Their impact on inflation over time. And we're expecting transitory inflation from tariffs. And this third two says lowering short-term rates raises long-term rates, which is a brake on the economy. Raising short-term rates lowers long-term rates, which is an economic stimulus. No wonder the Fed is fucked. The arm goes, what? Lowering short-term raises long-term rates? I don't think I understand. It does not appear to track with what happens. And Wolf says that is exactly what happened in this rate cut cycle. Did you miss that? The Fed cut by 100 basis points. The 10-year yield rose by 100 basis points. Man. All right, so that's all I've got for you guys on this topic. Now, what are the key takeaways for you? What are the key takeaways? We just talked about them, right? You got some room for inflation to run. Check. Right? You know that CPI, PC is CPI, PPI, plus PPI. Right? You can figure out what PC is going to be. You know that we're likely going to get some initial inflation from tariffs. You know that historically it is transitory, even though you're not told that everywhere else.
Futures settle at $3.56 and 9.
Some of you don't know why it's transitory. I've explained it to you many fucking times. They try to pass the cost along, they can't. They have to actually take a hit. GDP will take a hit. The market will price that in eventually. And what else do you know today? 3 to 6 months. You get any cuts as of the data right now? Fuck no. You're not getting any cuts. So whenever you hear someone saying that, you're like, that fucker doesn't know what he's talking about. And then you just have to start thinking about if this is not transitory, and we go into what? Waves of inflation. If you look at inflation year over year on a chart over years, you'll see inflation, if it doesn't hit 2%, it'll go just like this, like little waves. Whoop, whoop, whoop. And waves, right, can be shocks in the short term, but they're not the end of the market, and they're not a crash. Or no, they can be a crash, but we stay in a bull market. Like waves are fine. What you never want to see is velocity. Velocity, up or down, is bad. Bad, bad, bad. You need to arrest it. Waves are okay. Flat's the best, but waves means you're still on track. And as long as you're combating it, right? A 25 here, cut, 25 here, hike. You can stay in a relatively up and to the right market, though you may experience crashes or major corrections in that market. So when you see people like GS say to you, hey man, get long, baby. Anytime there's a big major low, you grab it. Buckle in. They mean it. And when they say to you, we might have those big drops, why? Because of non-transitory inflation, waves of inflation possibility in the future, tariffs, price shocks from tariffs, or stock market shocks from tariff. You get gist here? So be careful like what you're consuming out there. They don't tell you that, do they? They don't tell you this shit. I know they don't. I see what, I fucking watch their videos, not all the time, but every once in a while I'll go in there, God damn it, they're writing the fucking bear story again. And I'm like, fucking A, look, they're just not telling them everything. They're just projecting. Just like projecting. Doesn't sell newspapers. Yeah, we need 3 months of CPI. We need 3 months of it, at least. At least, I mean, you can throw some of those away, right? You get like 2 hot, 1 cold. Then you get like three hot, 1 cold. Then you get a trend, right? So if you don't believe me in this stuff, not even believe me. Don't listen to me. And the thing about this too is this is one article, and you see how he references past articles. This is more complicated than what we read together today. There's more information that you need to know because there's some other stuff that matters that's not in this article. He's got some links to some other articles, but you need to start reading this stuff so you can kind of figure out like Can the consumer even absorb this stuff? If the consumer was fucked up right now, the consumer could not, and you'd probably see bigger volatility. But they could handle it. They're rich. Counter to everything you think. They're rich. What up, Zooted? Well, no. Okay, so that's not saying that we're gonna get cuts in 26. So this is for all the information that the Fed has right now, the bond market has, the stock market has. This is where we are. That can change. It's very much like the dot plot. We have projections, and they adjust as you move forward in time. There's the Fed, Treasury, UI, the market. Nobody can predict this shit, but they have a path for this stuff, and they adjust as information changes over time. What we're doing is we're like, we got this data, we got this information, right? And this is the path until something changes. But then we go on FinTwit, and it's like they're either not giving you the information or they're telling you something that is bullshit. Pure, unadulterated bullshit. Not based in any reality. Zero. The coming crash is coming, that inflation is going to remain. It's on the rise. Look, it's rising. Crash. They don't tell you that it's likely transitory. Historically, it's transitory. Or at worst, it's wavy, like normal inflation. They don't tell you that. They don't tell you that if they do a rate hike, we'll have not a little, but a major correction. But then it can come right back. They don't tell you that the consumer is good. It sells newspapers to have the loudest voices in the room say, "This is Bob over here. He's the head of manufacturing over at the pencil factory down the road. Look at him. He's fucking terrible. They're doing layoffs. Fucking guy. They have no margins, no profit. Look at this. Inflation is rising right now. Doom." And you're like, "Oh, I want to buy a subscription to that shit. I'm going max short right now. Boom." You know what I mean? Oh, you want to see my sources? I got Bob over here. I got Mike over here. He didn't change jobs. He didn't get a cheaper condo. You know what I mean? He's still getting paid. He was getting paid pre-COVID. You're like, "Oh, that's bad." But then you don't know that everybody else did jump jobs. And they did renegotiate. And then look at the price of a condo. It's so high. He doesn't tell you that that Bob never negotiated. He didn't ask for cheaper. Even though the advertised rate versus the actual rate, calling up a fucking place and saying, "I don't want to pay that." The things that responsible adults do. The majority, even if it's not you, the majority do. Those people are doing great. And there's the majority of them, or the majority of those people, or majority of people in the United States are those people, even if it isn't you. I was talking to a friend, and I was like, he's like, "Well, these people are talking, like people I know are telling me these anecdotal stories. And people I actually know are going through this." And I go, "You're going to be fascinated."
Fed Scoresby says inflation data.
Fascinated to know that some of your friends, some of the people that you work with are fucking poor at their decision making. Jumping ship, not jumping ship, or they couldn't, or they don't tell you, "I couldn't jump ship because I couldn't leave because my kid had to stay at the school." It makes sense? Couldn't jump jobs. Couldn't sell my house and get another house. I couldn't change where I was going to live and rent. I didn't even bother to do that. But then you know them on a personal level, and you go, if you don't know this stuff, you're like, "Oh God, I'm with you, man, totally." But then once you start to figure it out, you go, "Oh fuck, he probably couldn't or just didn't." And that's why he's in that situation right now, because the rest of America is not. That data doesn't lie. It's not a negative thing either, but it is true. So anyways, it's kind of like a shitty thing to figure out. Because some people be dicks about it. I'm not a dick about it. I understand that people have issues why they can't do that stuff. All kinds of reasons. But it's fucked up to know that the majority of people did and could. Or maybe they're, in bonds, or maybe they're in real estate, or maybe they're in this or that. You don't always know their true motivations. Well, we're coming into some consolidation, Mr. Talking Monkey, so I needed some filler in here. Call this the filler hour. Deep thoughts with Jack Off Jim. So, think about think about some of this shit. Dude, go into it right now. Go into it. Start typing in like inflation crash. Do it. I dare you. We're getting rate cuts. Type that and shit in and be like, where the fuck are these people getting their information? Ask them. Be nice. Be like, hey man, where'd you hear that? Oh, bro, they're all over Bloomberg, CNBC. I got I subscribe to Bear Magazine. They got all the data, bro. I know. I'll try to have him on. I want to tell you guys something. So I was thinking about. It's like, I was like, maybe I should ask Wolf if he'll be on the show, but I feel like I shouldn't ask him because I have like imposter syndrome because I don't know this shit. He teaches me so much shit, and I have no fucking idea. Like, I'm like, wow, this guy's so smart. I'm like, he puts all this shit together, and I'm like, god damn. Sometimes I'll like read the charts, and then I'll read what he has to say, and I'm like, he does it really cool. Like, so when I read his articles, I'll read the data. And then I'll read the article, and then I won't read the comments, and I'll try to put it together for myself. And sometimes I'm really fucking wrong. Sometimes I'm kind of get it. Sometimes I get it, but I'm like, man, this guy's so fucking smart. And I'm never gonna be that smart when it comes to that shit. I was business degree. I'm not a fucking finance degree guy. Was not an economics degree guy. So I don't know what his background is, but I'm assuming it's something. All right, I have his book here. I think I remembered what it was at one time. I think he was. I forget. I'm trying to remember what he did. But anyway, I forget. I forget right now. But I want to ask him, but then I feel like I'm gonna get shot down. It's gonna be like, I see you all over FinTwit fucking with people. Why are you doing that to people on FinTwit? 2:43. I'll have an update for you right now. We got the lines, man. We're doing it right now. I already got it. We did it for you since this morning. What do you mean predict? Fucking line. And draw it for you. Way is higher. We're going to be the PPI is already known to be bad. Or, no, I shouldn't say that. I shouldn't say that. But CPI was hot, right? CPI was hot, right? So you automatically, as a trader, expect PPI to be bad. We priced that shit in this morning, didn't we? So it's only going to be bad, and they're going to be like, we already knew that. We'll blame the producers. Or if it's good, it's tilts. But that CPI was what it all was. Way is higher. We're going to go trade 607.85 either right now or tomorrow. That's what we're trading. Well, maybe not that. We're going to trade. We're going to trade what? I think we trade this right now. I think we. Oh, sorry. I think we trade this right now into the close. bat wings. Somewhere right there. Right? We await PPI. And then I think by like Friday close, or hopefully Thursday close. Well, we should get an all-time high by Friday close. Same plan as yesterday. Nothing's changed. Literally, nothing's changed. I know. I know. I agree, 45. How about this? You want a prediction on market close? You want a prediction on market close? I'm going to tell you why you lose, not you, but why people lose all their money. Why bother predicting market close? Are you buying trend? Buy trend, stops underneath. If you hit a major upside target, which is the one right here, where are you looking to buy a dip? Do you know? You're looking to smash in, get the new, or maybe the new high, but you're looking for what? A pullback to where? Right here. Right about there. And the hourly trigger is right here. See it? Gonna come back down right there. Bam, one more. You're going to be watching. If you get the prior high or not. That's important. You want to see if this fails. That would mean we're going all the way downtown. If we get up, you're going to likely go right about here and then go there. So you got a little bit more room to scooch, but I think that's the shit trade. I think the pullback is always the better trade. So whenever you're like, yeah, he's bearish right now, bro. He's only saying we're going to go up this high. I'm like, fuck no. Always want to be a buyer down here. Always. Bam. That's where I'm bullish down here. Makes sense? Makes sense? Get rid of all this crap. Give me a expectation. What do we got going on here? Let's check it out. I delete all this stuff. I don't need any of this. And it doesn't match up because it's done on a 1 hour or a 1 minute chart. Let's take a look. What do we got going on here? There's a few things we need to know. There are a few things we need to know here. Squeeze it, baby. Hopefully it's squeezing right now. Trade the pivots. Trade the trigger pivots. Squeeze it, baby. Get rid of that right there. There is some information. Fuck it. We'll just get rid of all of it. There is some information you need to know here into tomorrow. I'm going to show that to you first. This is SPX Gamma. A giant fucking gap to close over here, right? I want to show you this right here. Got this like trend, right? Fairly easy to see, right? Let's go down there. Nice little trend over there. Fairly easy, right? Go up, go down, right? Trying to go up, down, something like that, right? Fairly easy to see. Bought an edge down here, sexy. Bought an edge down here, sexy. Bought an edge down here, sexy. Selling tops. Been stuck in a range this week due to volatility, right?
Down $1.82 or 2.36%.
Fairly easy, right? Hey, we didn't catch we had the low, higher low. Maybe we'll get down here. We talked about that yesterday. I don't like not hitting that to go higher, right? All that stuff, but this is important here. As of today, some gamma at the moment has come into frame. This was not here pre-yesterday. This is kind of dangerous. It's not dangerous. It's just to be made aware of. This is telling you that we're opening the door to range expansion. It was not here prior to today. So when you hear a guy like Rubner say to you, the plan is the same. Rubner's like, I'm going balls deep bear. I'm going balls deep bear. Cover me. I think he said the 14th. Right there. So this wasn't apparent. This didn't matter. And now it does. Does that mean you go full Rubner and try to short it right now? No. He said there's a window over here. After this, there's a window. So what are they going to do? Squeeze it up. And they're going to try. Rubner's going to try for this. Do I think he gets that? I don't know. I don't care. All I care about is we had volatility this week. And as soon as we pass that volatility, we're likely going to go higher. Make sense? Catch some liquidity here, and try to sell that down. Make sense? Pretty easy, right? We don't have a lot of time left, do we? The Senate hearings are over. We got CPI. We got retail sales on Friday. Maybe we squeeze it up early, then we just blood that. Okay, it's fine, but our target's up here right now. Make sense? Easy peasy. And be aware, after we get out of the weekend, or price, either here in price or the weekend, there is a window of weakness coming into what? OPEX next week and Vixpiration. This is what the Bears, or this is what Spot Gamma is going to tell you, that as soon as we enter next week, there's a window of weakness. A whole bunch of gamma down below. We're going to clear all that out. Get short, baby. That's what they're going to tell you. They're going to tell you down, up, down, and down. Allegedly, they'll tell you that. Note that last year, you know what happened? Note that our seasonal February weakness, you know what we did? We went up. We went like this. And we fucking melted for like a month and a half. A month. We melted the second 2 weeks of February and the first 2 weeks of March. And we just fucking went straight up. So is this a window of weakness? No. It's a window of movement. And I need to impress that upon you right now. It is not a window of weakness. It is a window for the market to move. And no matter what Rubner tells you or I tell you or whatever, be prepared for both outcomes and scenarios. In my view, don't trade based on my view. You're going to be like, there ain't no way this is happening, Cappy. You're out of your fucking skull. You're a permeable. In my view, your first real bloodbath is going to be your first one is going to be right around there. And your second one is going to be right about here. So let's just take a step back here for a minute. Calm down. In my view, whatever this is here, right? Coming into the 18th, we're going to sell that. Okay? But that's like, or not the 18th. Hold on here. You're going to get above all-time highs. Excuse me. You're going to get that 18th weakness. Right? Let me just draw it out for you. That's doing a shitty job of drawing. You're going to catch your all-time highs on the 18th. You're going to catch your nope, wait a minute. I'm doing this wrong. Yeah, I got that right. That's right. You're going to actually hold this right about there. Some kind of like, there's the 18th. Right there. I'm getting this wrong. Hold on a second here. Where's the fucking 18th? What time frame am I on right here? There we go. This is mid-March. You're going to get a fairly good into April. Your stocks will bottom right in here mid-April, but you're around the 21st of April. And then you're going to make a monster move up here. There's your low, or higher low. And there it is right there. Inverted head and shoulders right there. And that's going to send you to 650. Give me middle summer right there. Now, it's going to get fucked up. You're going to get a fucking bloodbath. Right there. Like middle of July. And you're going to recover here into September, like late August into September. And then September, you're going to get one more down move. Then you're going to blast off up into the close of the year. So I think you get your seasonal low here. You might catch it a little bit lower. It might go here. But I don't think so. I think it stays right up here. And you got this one down here. I don't want to see any of this get violated. I want to see it just like that right there. And you're gonna have this is your 3-6 months inflation, not transitory. This is your, like fucking NATO shit, whatever. Come back up. And what's really nice about this package, to me at least, is about 20%. And this will actually be at 20% once we get there with this blue line. This blue line will come up right about here. And there's your 20% down move for summertime. You're going to be thinking it's crash. We're going to rope you in, send you back down for September, and then we're going to rip the fuck off into the middle, into the close of the year. And that's how you get your 680 right there. Whoop. Right over there. End of the year. Something like that. It's going to be fucking baller. Anyways, you know what the bear case is, right? Go to the 18th, crash it down, go over by the end of the year, trading, I don't know, 2,400 or something. Something like this. And I don't care if we wick it. I don't care if there's a wick in here. That's fine. As long as that's trend. Okay, so let's talk about today. Into the bell. 2:59. We got an hour left, right? This supports that thesis too. Pound, pound, pound. Boop. Down, wham. Pop, pop, pop. Bam. Pop, 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 pop. Anyways. There's another outcome here where we go straight vertical too. There's a literal like vertical into the end of the year, where it's just there's a more bullish outcome where it's just we melt up. I hope we don't. It's very similar to like 2021. We just melt. We'll deal with it as we get there. If we have quick reactions down and move higher, we'll deal with it. But for right now, there is a go right there. That's that 562 looming. That's where you get your wick. There's a bear watching this show right now, and he's like, I can't fucking wait until he's wrong. He's like, for the past 5 years, I've been waiting for this motherfucker to be wrong. I can't wait. One of these fucking days. Anyways, it's down there somewhere. Down there somewhere. I know it's there. It is. Just popped up. Let me turn some of this shit off because I'm running too much shit right now in the background. Got too many people tuning in. Gather around the fireplace. That looks reasonable to close. 18th. February 18th in there. A nice little target right here. Maybe we get the wick down here. Seems like good places to buy the dip on known selling. Doesn't matter if they're right or wrong. You just need to know that sellers are going to step in over the weekend. That's all you need to know. We're going to go into Friday, and we're depending on where price is. You know, if it's Friday or Monday, the seller's going to be there. Price or time, one or the other. I don't care if they do it today. I don't care if they do it on Monday. And I really want to know where we go. Do we get the all-time highs or not? If we don't get the all-time highs, I have a more bearish outlook for late February. Why is nobody selling cap? Why are they buying the dips cap? Because they already fucking know. I told you that. Told you that. Told you that. Told you that. 4 hours. What do we got here? Ooh, got some bullishness going on. Whoop. Got all-time highs up here. We got some bullishness. 4 hours. We got a big old wick damage down here. Took the money and ran on that trade. Bam, 4 hours bull. Bam, 4 hour up. Boom, 4 hour bull. Woo. Spicy. And we got some, what do we got over there? Who are these fucks right here? We got some resistance. God damn it. They're saying you shall not pass. What else do we have here? We know where the all-time highs are. Oh, and we failed. Look at this. On a 4 hour basis, we failed the prior high. Sent us all the way down. I'm back up again. We need something to get us up over there. Failed that one. We're going to look lower. Now go to a 1 hour. Oh. Got that bad boy right there. Got a 1 hour basis. We know where all the buyers are. They're here, 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 here. Now here, now here. all the way down there. Good, good, good. Series of higher lows. Very bullish. Got that high. That looks like equal highs. Not as bearish as I thought. Actually looks pretty good. Looks bullish. That's good. You get some upside targets now. This all looks good. Hey, we got buyers. Check it out, baby. Boom. On an hourly base, we got buyers. And now we're gonna look at the daily velocity one more time just to back check all our shit. Make sure we're not saying a bunch of lies here. Let's look at Velo and see if it's on our side on an intraday basis or a weekly basis. Is it bearish? Is it bullish? This is the key right here. This is the jam. Weekly is sexy. Daily is getting there. I don't think we have a lot of time left. Maybe a day or two before we begin to top, and then we have a little bit of sideways to roll next week. We're going to go a 30-minute basis. What's velocity saying? Bullish on the hourly. Bullish on the daily. Woo. I think Rubner might be wrong. I think the dip's going to be bought next week. I think Rubner's thesis for next week, maybe not. They're going to have to rein price in here. We're on a 30-minute basis here. We're going to go back to the hour because you want to be trading the market on a 30-minute basis or a one-day basis, basically. What do we got? There's the buyers. And my thesis is that Rubner's wrong. We know that the stock market trades on zeros and fives, right? So this is 610. This is all-time highs. You'd probably go, if you're going to go to zero, you're going to go about $200.50 above it, right? You're going to fail it. You're going to fail it. This would be the Rubner bear thesis. Doom and fucking gloom. Fuck you for March and April. Friday. We got Monday off. Oh, we got Tuesday off too. Oh, last part of this. Okay, so I got to talk to you guys about this. Monday, the market is closed. They got an extra day to hammer it up here on Tuesday. Price target by Tuesday, 9 a.m. You ready for it? Woo! 441. 4. Break above. Overnight gap up. Blood it down for PPI. Trend day Thursday. Been Friday. Sideways Friday, right? You're going to expect the gap up. You're not going to get it. You're going to get it right there.
RBC Capital Markets expects the Bank of Canada to hold rates in March.
One right there. There's a slight possibility that we go because of that Tuesday bullshit. There's a slight possibility we come down here and we wake up on Tuesday at 6:12. There's a slight possibility it takes us until Tuesday open, 9 a.m. Let me look at this again. Hold on. 1, 2, 3, 4, 5. Yep. One, two, three, four, 5. If you are a oh man, dude. And I think that one's up there. I think they're going to super fucking ramp you. This is Thursday, so I think you're gonna go up overnight. Come down tomorrow morning for a dip buy, back up again, and you're gonna crank up in a Tuesday. Price target by Tuesday, 612.50, and it could go higher. There's a little bit here. There's a little bit here where like this doesn't have to go up there. Like that's acceptable to me too. This is acceptable. We don't actually. This isn't required, I should say, but it'd be nice to get it done. It does. Like you only need this one. You don't need that one, but I'd like to take them both at the same time. It's not required. Like that's required right there, and then it could be, you know, could just be fuck you up there. There's a bunch of different stuff we have to know here. Now, the biggest thing of this is that now here's the biggest part, okay? This is what I really want to talk to you about. If we fail to get all-time highs, we start doing this shit, we're going downtown. Okay? So you need to watch closely. Do we get all-time highs? If we do not, we go downtown. If we do, we will bust out to 612.50. And whatever that back test is, will likely hold, and Rubno will be wrong. Make sense? So, like, if we get the all-time high, expect the pullback, and Rubner probably is not getting the deep shit that he wants. And we will likely run the fuck up and trade 25 and 50 into late March. So you want to be paying very close attention to, extremely close attention to 610.76. It's really crucial. You don't care about the drawdown here. You just want the all-time high because you'll get the pullback. And the implication is that we're going higher, not lower. And I think you get that. For as far as I can see right now, you're getting that shit in a two. You're gonna wake up on Tuesday, and you're gonna get 612.50, and they're gonna freak out. They're gonna be like, pound, 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 pound. He's gonna be short on Friday. They're gonna unfuck themselves and know that we're going higher. So that's what I think. Now, if you want to dip to buy tomorrow morning, I would be looking like not this intraday or not this like multi-day stuff. But if you were looking for a dip in the morning, I think you go up overnight. We're right on. I'm wrong. We're right neutral gamma flip. Excuse me. We trade sideways, quick dip down, and then up. Okay. Quick dip down. If you're looking for a dip to buy tomorrow morning, it's right here. Right fucking here. 601.86. You can catch it. There's another one right here too in the morning, 603. But if you can catch any blood here in the morning, so like on a smaller time frame, like a 15-minute time frame, let's go to 15-minute. If yeah, cash. This is cash market, not So this is cash market, not futures. But in futures, I would expect like a move up, maybe. And then I would expect a sell down in the morning, and you're gonna try to grab this down here, right there. Bam, 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 up and away. Thursday is gonna be trend day, almost guaranteed. Not guaranteed, but almost guaranteed. Clear out these two bad boys down here in cash market tomorrow morning, right? You can see it, right? Pretty fucking easy. Bam, 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 bam. Cash market, buy the fuck out of it. 601.96, 600.91. Tomorrow, trend day. Market slightly supportive until we get into pre-market. Sell it down. Blow off PPI, and then we're off and running. And then you get... this is Thursday, Friday. Yeah, hold on. This doesn't scale well when I go to 15-minute. I go back to an hour. Scales like dog shit. And then you got your retail sales. That is Friday doom, right? So Thursday party time. Here's Friday 4 a.m. or some shit like that. Just monster. Like Thursday is just stupid. Gap it up. Retail sales bring it back down for doom in the morning, and then woof, back up again in the close on fucking Friday through Thursday. Friday through Tuesday. I think if you're a bear, man, you're leaving volatility behind. Now, Trump can say wacky shit. Trump can do something with Modi. Trump can do whatever he wants. If you're a bull, you don't trade this. You're not chasing this. You're just waiting down here. Oh, yeah, Modi fucked us up. Okay. I don't know. We're going to fucking do, I don't know. We invaded the Fed. Sweet, down here. If you're looking for this, you're still waiting down here. You should always, as a bull, be looking down here to buy. Make sense? You should be welcoming. Volatility. Right there. Nice. Look at that. Look at that. It's so sexy. Wham, 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 wham. So sexy. Buy the dip. 601.96, 691. And I'll tell you what. It's not, we don't know yet. The bear outcome and the bull outcome for next week is predicated upon an all-time high. If we don't get that all-time high, Rubner's right. But if we get that all-time high, Rubner is going to be writing another love letter to you saying, we did get the downside move, but I closed again. We're going to look higher into late March. Which is fine. It's a great trader, right? Rubner's a great fucking trader. So even if he has a bearish thesis, I've got the bullish thesis. At least they know, like, we did this, we're moving higher. So, you know what I mean? Like, you don't have to be right or wrong. You just have to know what needs to happen to go higher or to go lower. For me right now, the daily and weekly velocity supports a fuck you or a pullback for the last 2 weeks of February that will be bought. And you're going to see a monster fucking ripper into the middle of March, like fucking vertical. I'm telling you guys. And I want to see that 625 and 650 because I want to see that crash. I want to see a nice sizable crash. A nice fucking July bloodbath. Like mid-July, just fucking rain hell down on bulls. I can get bearish with you. Like, don't get me wrong, I can get bearish. But I want some room. And you got bears that are like, let's do the 20% right now because it can send us into a bear market. And then I'm looking at all the data and the economic news, and I'm like, none of this shit supports it today. It does support it down the road, but it doesn't support it today. And then, what else do we have? The market likes to what? It's efficient. What does it like to do? Market likes to what? Wrap up shit all in a nice tight bow in a box, right? We got all this stuff coming down the road. We're going to put it all together. We're going to crash this fucker. We're going to fucking we're going to rip people's clothes off on a Friday. Take them down to nothing, right? We got to reset the VIX. We got to set some fucking hedging. We got to what? We got things to do. We got mechanics in the market. We got all this fucking volatility. Nice bows. Wrap it up. I'm going to leave you with one last thing here. There's one more way for you to tell. I want you to snap a line on your charts at home on 6100. Right there. We get up here, it's party time. We start growing a magnet. So right now, the market is roped in. It's like Rubner's like, I want bear crash. He ain't getting it as long as we're in here. He's not getting it. And I'm not getting the upside. We need to break out from 6,100. We do that, man. Woo! Doggy. If we begin to lose 6020, 6030 on SPX, we'll start talking downtown. But for right now, on a larger frame, you know, this is the zone for us. This is where people like John L. and LVR, they come in here to murder bulls and bears. So just be aware of that. You know, we have continued bullshit with policy. Can't get bulled up till we do this. You know what I'm saying? So we need to be up there at an all-time high to get bulled up. If they tie our hands, sorry, buddy, no all-time high. They're gonna send us right back down to the bottom. And if they don't get a new low, we're gonna come right back up again. They could keep us sideways as long as they want to. It's a fucking option seller's wet dream. So we get a window of freedom coming up here, though. Next week we get OPEX, we get expiration. There's a window. Yeah, that's that SPX chart that I'm talking to you about. Whenever I don't speak about futures in this show because it's its own thing, and I try to keep people or keep all of the stuff separate. And I talk SPX a lot. I'll say, like, if you hear me use 4 numbers, that's usually SPX. If you hear me use 3 numbers, that's SPY. If I ever use futures, Globex, I will tell you we're talking about a futures chart right now, and that's a whole different thing. That's why they say fake futures. It's not fake. It's just different shit, different ranges, I should say. They matter in cash market. There's more to this. We will revisit those numbers in cash market, those ES numbers, but you know, it's not nothing you need to worry about unless you're trading futures. Just trade futures. How's Tesla doing? How are they today? Congratulations to SMCI. At least you didn't get annihilated. Fuck yeah, baby. On there. I was fucking with Tesla bulls. I'm like, this is where you buy. We hit the target. We headed to the pin. We called 320.25 and it tagged it in pre-market. we had a downside target of 320.25 and it hit. Congratulations, Tesla bulls. Fuck yeah. 320.25 is what the target was. Hit it in pre-market. Fucking near perfect bounce. That's awesome. I gotta go on. I haven't been on FinTwit all day long. Fucking right. Yeah, Tesla went talking monkey Tesla. So I drew a chart out for him on FinTwit a couple days ago. To the pin strike. It pin struck. Fucking awesome. That's awesome. called that shit like a motherfucker. God damn. Gangster shit. Gangster. I wonder if they know where it's going next. Hold on, I gotta feed the Tesla bulls. Hold on 1 second here, guys. Go to a 15 minute. I'll go to a 1 minute with you guys. I'm gonna mute you guys for just a second here. It's some guy family. Hold on. Sorry about that. Joe Donut had a dog die today, and then he had something really good happen. So it was like mixed bag. And I had to talk to him really quick. So I apologize. I want to make sure he was okay. He treats his dogs and animals like they're family members. So do I. Hold on a second here. Followed. I got to follow a bunch of people. Followed. All right, I think I got everybody there. Get these fucking Tesla bulls. Have them fucking stop losing all their fucking money being upset Tesla bulls. Can't stand Tesla bulls. Can't stand them because they buy everything. You want to be a happy Tesla bull. And it sucks to be a Tesla bull right now because of fucking Elon. Like, can you imagine being a Tesla bull right now? Can't defend them. Even if you're like a MAGA, you can't defend them. You can't defend them and own Tesla. That's the problem. Even if you are MAGA, you're like, fuck, I like Elon, but I don't want him doing it. Or I want him to step down and have somebody else do it. Like, I don't know, but maybe you are. Maybe you're the antidotal person, but I don't know any fucking Tesla bulls that are MAGA that want him doing that shit right now. Like, if you own the underlying, it's just too much risk. You want happy Elon, you know? We're making much money and profits. Woohoo! Telling a bunch of lies. Everybody loves me. Woo! Everybody loves me. Like, you want all that shit. You don't want half the country hates me. You don't want that as like, no, I don't want that. But we love him. I'm like, no, you want everybody to love Elon. You know what I mean? We'll bring these back over here. Whoop. Now, if we can get low enough, I'm going to have to buy this clothes. Whoa. If we can get low enough, I'll buy this fucking clothes right now. They might not even leave this. If they tag down here right now, I'm down. If you want to get down here, like into the bell, I'll buy the fuck out of that. We might have to watch this shit for we have to watch this shit for 415. If we can get, this is where I want to buy, right down here. Bring it on down, baby. Come on, give me a wick. Like, it's gotta suck to be a Tesla bull. I own a Tesla. Everyone I know is like, I just bought my sticker. Slap. I bought this before Elon. It's even if you're MAGA, you can't, because they're gonna like trash your car and shit. People look at you fucked up, yell at you. And then you get like the post Elon Tesla, which is the Cybertruck. If you get a Cybertruck owner, you're fucked, right? You're too super fucked. You gotta watch it. Like, they made the Tesla Cybertruck subreddit private. So like they have like if you go into the Cybertruck subreddit, they're like, okay, do not leave your truck outside at nighttime. I've got my Sentry on. Nope, that doesn't work. You got to drive the truck through the living room wall and then put a blue tarp down. Can't leave it on the street. I don't have a garage. Did you know that there is going to be a mass protest on Saturday across the country? You may not know that. There's a mass Tesla protest on Saturday across the country at every dealership they can get to. In the two places that they're doing them where I live, the people that commented, hundreds, if not thousands. I don't know. There were hundreds this morning. I'm assuming there's thousands of comments at this point. That's a lot. That means like another 100 people are going for one comment. And I told you about that fucking thing I went to, that fucking protest. I told you what I saw, right? I was like, these motherfuckers are mad. I was like, and the DNC don't want to fucking even hear it. I was like, and they're mad. They're mad. It is silos of different people and then just one overarching like mad. I was like, oh man, this isn't good. They're going all out this weekend. So I just want you to know that if you're Tesla bull, stay the fuck away from a fucking Tesla dealership this weekend. Stay the fuck away. I should post that. I was gonna post it, but I shouldn't. I was gonna post it on Twitter, but I'm not gonna. You're like, if you're Tesla bull, just sleep in on Saturday. Don't drive down to your local Tesla dealership on Saturday. Just stay away. You don't want anything to do with that. Just like stay away. Go do something else on Saturday.
And Trump says, "I think we are on the way to peace with Russia and Ukraine."
Stay away from a Tesla dealership and say there's like a mass protest planned. You know, just like stay away.
1 minute till we get the market on close imbalance.
I was shocked when I went to that. So I went to this. My daughter wanted to go to a protest, so I took her, and I showed up, and I was like, a few things that I took. I had three key takeaways from it. The first one was the DNC is fucking crazy. It's just like the normal DNC. This is the message no matter what. The people, one thing that really freaked me out was there were silos of people. You could tell that however they get their news, they're in a silo of news. Wherever they get it, however they get it, there was like silos of people with their own things. And I'm like, wow, you can tell, you can see this. The scariest thing to me, I was talking to my daughter, I'm like, I'm glad we came to this because you do not want to come to these as the spring and summer come around.
Side of 44 million and the
because what I could see in the
94 million.
S&P 500, we got a little bit more sell side, a little bit more sell side on NASDAQ, a little bit more sell side on Dow, and big time sell side on Mag 7 as a heads up. But the thing that scared the shit out of me, and I'm going to tell you why this scared the shit out of me. I've been to protests before. When I was younger, I went to two girlfriends to two different protests. Went to a nuclear power plant protest, went to an anti-war protest. And then you had the George Floyd right protests. You had Black Lives Matter protests.
I will meet with Putin in Saudi Arabia for the first time.
This is different. You know, you go to like a nuclear power protest and I expect danger. They're like, oh, some security guards, the fence. We go over there, we protest, right? We don't like this. You go to like I don't like police or something, right? I don't like the man. That protest I went to, I was sketched out. I wasn't sketched out for my safety there. I was sketched out for what it grows into. I was like, oh fuck these. I was like, that was some January 6th shit. Like just the smoldering of it. I'm like, I've seen this before. I've seen people talk like this before. It's like
Putin will involve Saudi crown prince.
It was like, eh. So I tell my daughter about it. I'm like, stay away from that shit. I'm glad we came. You got to do it. She turned 18. You did it. I don't know what that shit grows into, but I hope it doesn't grow into what it looked like. The thing that scared me the most about it, I'll tell you what scared. This is the shocker. I was like, I have a lot of respect in some ways for Trump, and it was a huge contrast to like a Trump rally to what this thing was. There were a lot of people there. They're like fucking. There's about at any one time there were about 1,000 people there on a Wednesday in the cold morning, snowing. there were 1,000 people, but then there were hundreds coming and going. So I'm like, there probably was 2,000 or 3,000 people there total. That's a big turnout for like first time protest, right? And like I had some like key takeaways from this stuff. I'm like, so I'm at this protest and I'm like, I'm like contrasting this to a Trump rally, and I'm like, in which a populist, to me, Trump is a populist. He is not a Republican to me. I take him as a populist. So I'm like, if you notice, like a Trump rally, he's in tune with his crowd.
Ukraine to have a NATO membership.
It doesn't matter if it's truth or lies that he's telling his crowd, or what his crowd is saying is populist, or it's uninformed, or whatever it is. It doesn't matter. What matters is that he's in tune with his crowd. And I was talking to a buddy, a MAGA buddy, as a matter of fact, a MAGA guy, and I was like, we're talking about it, and I was like, look, it was kind of like John McCain or whoever the guy is from Utah. I forget his name right now off the top of my head, but it's like him showing up to a Republican rally and it's all MAGA, out of tune. They'd be like, what the fuck are you doing, man? I want you to like cheer me on and where our chants are, right? Get everybody all riled up and fired up. When I went to this fucking thing, I was like, these Democrats, these DNC people here aren't listening. Like, and there's a disconnect. And whenever you get that disconnect in a party, the people that are there that are very angry, which was the loudest group there, they break away. At least if they were like, the DNC was like, we hear you, yeah, let's chant it. It's like it blows off steam for people that are angry. There's like an outlet for them. Does that make sense? Oh, they hear us.
The war to end.
Trump hears me.
6 months later.
I'm angry, and Trump's listening to me. That's important for people, you know. And when I saw that protest, I was like, "Fuck!" It's like, goddamn, like it's like they're gonna be fucking dressed up and fucking fucking burning the streets this summer.
Trump says Ukraine.
Big move down in the summertime. I was like, shit. Fuck. You know? Yeah, you could hear the anger, man. And some of it wasn't just the anger at what they're angry about. It was the DNC where I was listening. DNC's up there doing, like, it was so hilarious. Like, DNC's doing like kumbaya. Let's talk about this. Then they were like, they haven't done this yet. I'm like, we're all like, yeah, they have. Like, what the fuck are they saying right now? Like, you're at, like, are you listening to these people screaming behind me at you? They're like overpowering you right now. Anyways, you're a Tesla bull. If you own a Tesla, if you want to buy a Tesla, you know what? It's like a haircut. Just don't go for the haircut, right? Go show up on a Saturday or Sunday or Monday. Don't get into fights with people. There's no point. Oh, look at that. Oh yeah, rope him in. You didn't get him in there. Bear trapper. I'm interested no one's talking about this. There's like a blackout on Twitter. I don't think anyone's, I didn't see anything on Twitter. So I'm like, there's probably a blackout on this on Twitter right now.
Make sure we get our money back.
I'm like, you're going to hear about it though on Saturday. There'll be fucking news about it. Well, if they don't try to squash the news, I think they've been squashing a lot of that news. I think intentionally. Keep people calm. Everybody remain calm. Carry on. APP, let's check it out right now. Let's do it. Let's rock and roll. Let's not rock and roll, Dr. CS. Bottom right-hand side. We're going to look right now at APP and give you a really fasty on this one. See what happens. We got 4 minutes. What do we got? I'll tell you if I'm bullish or bearish right now. Take me 2 seconds. Whoa. God, that thing's going to keep going. App loving. Woo. It ain't done either. I bet you everybody thinks it's done. It's not. Oh, no. Hell no. This thing ain't done. This thing is not done. I would say to you about app loving this. It is not done. It is not done. I'm sure you look at this and you go, Cap, there's no way that this is ever kind of continue to go up. It's not done. It ain't done. And this is not, you'll have somebody say that that's a top, but you have to watch out for the bull move first before it goes down. If you watch Wyckoff's kind of stuff, right? This is going to moon, I think, but Even if it doesn't, I would say to you that even if this doesn't moon today, I am bullish for a new high on it. And it's not done going up. This thing is monster. That is not a top. I want you to know that. That is not a fucking top right there. Even if that looks like a top to you, it's not. App 11 beast mode. I want you to know its positioning right now in this ticker is short. You're supposed to be short here. Just a heads up, short into the close. In my view. Give me a second here. I'll look.
Gets all its land back.
You should be short in this. I think 1, 2, 3, 4, and there's 5. You might get a pop and drop. You are looking for a pop and drop here. 1, 2, 3, 4, 5. This 5 should be higher. You're in there, but you are looking for a pullback here to go higher. It's almost done in this run. It is I guess you want the new high on this. I don't think that's 5. That does not look like 5 to me. That looks like 1. That looks like 2. Looks like 3, 4. They're claiming that's 5. They have what? 1, 2, 3, and then move higher. You could look at this two ways. Let me see here. Get it one day. Bullish on their close. 1 minute left. Up.
Trump says he may sign reciprocal tariffs today. So Trump clarifying, I may do reciprocal tariffs later or tomorrow morning.
I got up. Take the money and run, though. You got a big downside move coming. I'll look at this one tonight. I'll try to take a peek at this one. But it's not bearish. It's very bullish. I'm assuming it wants to go to a new level. I'm assuming it wants to trade a new level, like Amazon makes jumps. It wants to make a jump. That fucking thing wants to move. Can this thing, what's the implied move today, Dr. CS? Thanks. Yeah, I can't tell if it's in one of three right now. It depends on which basis I'm on. On a 1 hour basis, it looks like you've got an or not even an extension yet. It looks like you haven't completed 5 on a 1 hour basis. Chad, look at it on a 1 hour basis. Looks like it's got one more, or a little bit more push. You got a little bit of a rip here. On the bell, you got a... Yeah, it's 0.68%. That's not a move. Chad, do you see... Chad, do you think that on an hourly basis, it's got a little bit more up to go, or no? Just say yes or no so I can... Woo! Baby! Beloved, what are you doing, baby? What are you doing? Where's Dr. CS, baby? Woo! Yeah! App trading the target R2 on the weekly. Almost a pinstrike at 413, baby.
Coming through.
Woo!
Revenue $13.99 billion.
APP, baby. Dun 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 dun. Dun 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 dun.
So adjusted EPS at 94 cents as a beat on estimates of 91 cents. Sees fiscal
Take the money and run.
68 cents to $3.74.
Take the money and run.
$3.66. Fiscal year revenue at $56 billion to $56.2 billion.
Take the money and run.
$3 billion to $56.3 billion. Cisco boosts buyback authorization by $15 billion. So second quarter remaining performance obligations, 41 spot.
Fucking Dr. CS.
16% year on year. Second quarter service revenue $3.76 billion on estimates of $3.74 billion. They see third quarter adjusted gross margin at 67 to 68%. Previous estimate being 6.
All right, I'll see all of you guys. I'll see all of you guys tomorrow. I'm out of here. I've been here since the morning. I love you all. I'll catch you all tomorrow. Woo, yeah. If you were able to go up there and tag that 416 with an upside sell stop, congratulations. Burb.